rainfall once again wreaked havoc on Mumbai and nearby regions last night. It was a combination of a low pressure area over the Bay of Bengal, an associated cyclonic circulation and a trough which led to the heavy rainfall which brought the city to a grinding halt. Let's talk about Central Railways first. So Central Railway, there was waterlogging near the Bhandup region which led to multiple trains being stopped on the tracks and thousands of passengers stuck inside. This continued for over 2 hours. It was only after a couple of hours that the trains on the route were started and the traffic became smooth only towards the morning. On the other hand, Western Railway ran pretty smoothly. Talking about what happened on the roads, due to waterlogging in low-lying areas and the usual notorious areas like Hindmata, Dadar, Parel, Sion, Sakinaka, Andheri, Malad, all these areas, this waterlogging led to multiple traffic diversions and that caused massive traffic jams on almost every road in the city. The heavy rainfall also disrupted air traffic, resulting in 14 flight diversions. In the view of the situation, a holiday has been declared for schools and colleges for today in Mumbai, Pune, Thane, Kalyan, Dombivli region. For today, IMD has issued an orange alert for Mumbai, Thane and Raigad areas. And according to their forecast, heavy to very heavy rainfall is likely to take place in Mumbai and nearby areas. And as I said, for now, the traffic situation, as far as the road traffic is concerned and the railway services are concerned, everything is running smoothly, but that was not the situation last night.
Absolutely. Thank you so much for that update there. As of now, everything is working out smoothly, but there is an alert in Mumbai. So keep an eye out on that. Orange alert is what we're watching out for. Moving on, and the Karnataka government is considering a new electric vehicle policy, and the sources tell CNBC-TV18 that the state government is considering exempting all EVs under 25 lakh rupees. The state is considering demand-side incentives and concessions as it hopes to attract 50,000 crore rupees worth of investments by 2029. The state is also considering incentives of up to 50% of the value that's of fixed assets. Companies could get 15 to 25% of capital investment subsidy and a stamp duty exemption as well. So yes, keeping an eye out on that. But on that note, we will slip into a very short break, but don't go anywhere. After the break, we'll get you the cues from commodities market.
कार्य सह कर्तव्य श्रीलंका प्रजातांत्रिक समाजवादी जनराजे
Welcome back. You're watching Power Breakfast on CNBC-TV18. And geopolitical tensions that have been continuing. Israel has widened its airstrikes in Lebanon against Iranian-backed Hezbollah militants. Israel's army chief told the troops that the airstrikes in Lebanon would continue in order to destroy Hezbollah's infrastructure and to prepare the way for a possible ground operation by Israel forces. World leaders lined up at the United Nations to call on Israel to refrain from the full-scale war in Lebanon, with the organization's chief warning that the situation was on the brink. High-level diplomats were pushing to stop the fighting in both Gaza and Lebanon. That's the update on the geopolitical front, but a quick roundup in terms of what's happening on the commodity front. We're seeing Brent crude oil holding to that $73 per barrel mark as of now. Slight bit of an uptick that we're seeing from yesterday's fall, while in terms of gold prices, they have retreated from those all-time high levels, and gold is holding on to the level of $2,683 an ounce mark. So that's in the world of commodities. But on that note, we are absolutely out of time on this edition of Power Breakfast. Thank you so much for tuning in. Don't go anywhere. Bazaar Morning Call comes up next.
PSUs, capital goods, real estate, infrastructure, that's essentially been the leader of the bull market. But people, defense, etc., right? That part, it looks like we're starting to rotate, people are starting to rotate out of that.
Which is inevitable.
Inevitable. You think that's done, or is just like a pause and refresh case here?
Again, in terms of market cycles, when you see the leaders of every cycle, then they go to sleep for a decade. So the leadership of 2000 to 2007, which you were earlier alluding to, was indeed commodities and infrastructure, power, real estate. And then the excesses which happened in that period made them complete pariahs. So 4 years ago, we were on a show and Ramesh and I remember we would talk about PSUs and everyone was like sniggering, like, what's wrong with these chaps? But because the correction had been so steep that it's eventually an investor's job is about valuation. Like I said, the greatest Infosys may not give you the return, and the what so-called poorest PSU may give you the best return. So it was a mean reversion trade which happened, and of course all the right policy things happened for infrastructure and defense and railways and so on. So you go from being what I call terrible to bad is a rate of change, but you went from terrible to being good. So that rate of change is so dramatic that's what the markets have discounted.
And now maybe to great.
And now you're imagining it to be great. Some of them may make it, but most of them won't. So I would be very, very cautious in those kinds of places. And typically these are not high return areas. By definition, if you make 25% IRR in an infrastructure business, the cost to the consumer, which is the average public, is going to be too high. So your money made is really on leverage, and therefore the return on equity comes in that business. So And people are shy of doing leverage after again the last cycle.
Even
and the flip of it, to just complete.
Yeah.
The leadership of the last cycle was all the high quality businesses in the last decade, which were all getting re-rated. Asian Paints, Page Industries, Kotak Bank,
consumers,
HDFC,
retail.
even and including banks, because banks became 30% of the index. And you're seeing that getting corrected. That Kotak, HDFC haven't performed for the last 5 years. Again, great companies. But it's the excess of that which is now getting reverted back. And now they've become so hated that when will HDFC move? And there are memes on HDFC doing the round the way it was for ITC. And then you saw the way when ITC moved, it just doubled before anyone realized it.
You think...
so things like that tend to happen. I can't forecast what will happen in...
But you're very bullish on the financialization theme.
I am very much.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. You know, yesterday, same time, I was saying how it was looking like not the retreat of monsoon, but the onset of monsoon. I mean, last night it kind of gave you, for those of you who've seen the September 26th, it was, I think, 2004 or 5. I mean, it kind of gave you those
July
vibes.
26th.
July 26th.
July 26th, 2005.
These are visuals from last night, and we were just discussing before we hit air about how maybe a colleague, Nigel was telling us how a colleague maybe reached early this morning.
Indeed.
So, crazy scenes out there, and just sort of hoping that all of you are safe as you watch this broadcast.
Yeah, absolutely. And this one took Mumbaikars by surprise. We're not used to seeing this level of rainfall and water logging and traffic chaos, but the good thing is actually the red alert was on till today morning. Schools have been shut, but it's holding up for now. So hopefully it's going to be, back to business soon enough.
Well, indeed, it was a difficult evening for a lot of people yesterday. You know, the cabs, auto rickshaws, trains, everything. Transportation came to a standstill. And I think yesterday, if you were actually stuck somewhere, if you just stayed indoors, it would have been better. But that's hindsight. Authorities have taken the call, I think, wisely. They took the call last night itself to shut schools and said, just stay safe today. So, guys, just stay safe. Focus on the television. We're going to get you all the updates with regard to today's market action.
And as they shut schools, no rain today.
Absolutely clear, so far.
But, can't blame them, right? I mean, it looked pretty bad, and you had to sort of take a call on what things will look like today. Let's rewind the clock back and tell you what you need to know as we begin today's session. US equities, absolutely quiet. We'll begin there because yesterday we had a pop, and I'll get to that pop in just a bit. But, the market last night pared back. Actually, equities pared back. Dow was down about 3/4. The S&P was down about 0.2%. NASDAQ was flat. Russell was down about 1.25. So it was more down than up in that sense. Yields, they went up about 5 basis points. We're back at about nearly 3.8%. The one sort of macro market which had a decent move was the dollar index, which basically had almost its best day in the last 1 month. It went up 0.7%. We're back at about 101. It did briefly break the support zone. 100.5 to 100.8 is that support zone, which is a 20 weekly moving average. A bunch of lows from 2023. It broke through that support briefly, and then now we've seen a decent bounce. Oil prices 2% lower. We're at about 73.57. We were 75 as we were starting, the same program yesterday. Gold prices continue to move higher. That's made a new, fresh all-time high. The question is, does it have more steam? So far, most of this has been led by Chinese retail buying. I mean, India is, of course, a big demand driver as well, but very little by way of Western demand. So we'll see, how much this has got to go. Later tonight, out of the US, you've got lots of Fed sort of speakers who'll weigh in. Actually, it's, I think, about 4 or 5 Fed speakers and voters will speak, and you have some macro data, durable goods, personal consumption, GDP, etc., etc. So just to circle back the levels, we've got the Nifty, which closed slightly above the 26,000 level, and it was the definition of a 3 p.m. move yesterday. exactly at 3, the market started rallying and we went up 90 points from that 3 p.m. to the day's high. And then, of course, we came up a little bit towards close, but 0.25% up on the Nifty. We need to, I mean, you know, frankly, at this point, I'm not very clear if this is a fresh move higher or if this is just the market which is starting to mature a little bit. How will we know? You got to basically, the index needs to cross above the 26,245 level and sustain above it. It's some distance away from where we left off yesterday, but it's got to do that. I think that will decide whether this is kind of stretching even more or we're at a point where perhaps there is some consolidatory, even some pullback, which is around the corner. A negative daily close, I think, will be also one of the indicators. Supports, by the way, in terms of levels, stands at 25,763, which is the 40-hourly average. Nifty Bank needs to break above the high of 54,247. And here, supports come in at the 40-hourly level, which changes, but, I mean, it's been the hourly average support. 53,566 is that particular number. GIFT Nifty should indicate what the start is looking like as we kick things off. It's another 70 points higher. So close to 26,160 or so is where the start is looking like, with about 55 minutes to go for the pre-open session. Surabhi.
And the reason why the GIFT Nifty is showing such a bright shade of green is because Asia is actually looking very, very good right now.
Yeah.
Most of the markets are rallying. I mean, Japan's up about 2.5% actually. And China, it's continuing its party from, of course, the time that the PBOC announced its measures. So that's the Hong Kong market up another 1.5%. I mean, Taiwan, Japan, you name it, all those markets are rallying. By the way, the Chinese market was on a 5-day winning streak, the mainland China market, if you take the CSI 100 as a barometer, the CSI 300 as a barometer. And that's only extending today. So good news coming in across Asia and no concerns whatsoever from the neighborhood markets. But if we talk about sort of the moves here, the fund flow picture yesterday, we hit this 26,000 mark. The market did nothing. Then we had a late surge. We hit it and we closed just around it. But there is volatility that's creeping into the market. So let's keep that in mind. On the fund flow picture, the FII figure was a sell figure, actually. They sold stock worth about 1,000 crores in the cash market. Domestic institutions were buyers of about 1,800 crores worth of equity. On FIs, by the way, something interesting. SEBI yesterday said that they will be setting up a foreign portfolio investor outreach cell. It's a bit of a mouthful. Basically, an FPI outreach cell. The aim is to have more direct engagement with FPIs and to ensure that any of their issues with respect to setting up shop here in India and market access, all of them can be addressed in a more seamless fashion. Remember, some of the foreign participants like Chris Wood of Jefferies have been making this point that coming in, registering and just starting business here in India is very, very difficult, which is why some FPIs stay away. That's one view. Anyway, we've seen the regulator make a couple of moves and steps in order of easing that process. Quickly moving on, today on the bond market side, let's watch out for bond yields and the action there because the second half borrowing calendar is going to be announced. Remember, the gross borrowing for the year was about 14.1. As we end September, the government is expected to finish off about 7.5 lakh crores worth of borrowing. So a lesser amount remaining for the second half. We'll have exact figures when that announcement is made. And of course, the bond market has been rejoicing and rallying. Bond prices hitting highs not seen in the last 32 months. And the yield has been cooling off on anticipation of rate cuts eventually from the RBI and of course more foreign money coming into the bond market. Moving on to some individual stock names, whenever there is any sort of, business diversification that always catches my eye, and PB Fintech is one such stock, and we'll talk about it because we are picking up from sources that they could be getting into healthcare and they could be setting up hospitals. So not entirely unrelated, but yes, it's a very different business than what they're engaged in right now. So watch out for that. And by the way, speaking of policy, Karnataka is looking at an EV policy for the next 5 years, and they could be offering a lot of incentives, including exemption on road tax for vehicles, EV vehicles, which are below 25 lakh rupees in value. So let's see if that causes a flutter on Ola Electric or, all the others as well in the EV ecosystem. So plenty to keep us busy. But the question is, can the bulls sustain this move above 26,000?
Well, that's right. And yesterday we had that late flurry because the Nifty Bank, that's the one that played out the weekly expiry. It played out the monthly contract expiry as well. And that was the reason that we did see a big pullback in the last 1 hour or so. So it's a technical factor, so to call it, that led that index higher. And looking at the rolls, the rollovers for the futures contracts, well, it's relatively low in comparison to what we saw in the previous contract. So that's why the total open interest on the Nifty Bank is relatively lower. When we got into the September series, it was much higher. which was a bullish indication. So let's see how that goes. Well, in terms of the global tailwind, as you all mentioned, the dollar index is weakish, still holding below that 101 odd mark. You have Brent crude prices cooled off as well. And that's a tailwind from an India economic as well as macro perspective. And that's something that will hold us in good stead. Moving to the FI positioning, well, they continue to remain net long, 75% of the positions on the long side and 25% on the short side. And as we've been making this point, the FIs and the clients, they're on opposite ends of the spectrum. FIs net long, clients net short, and that number has been more or less constant. But the India VIX, that perked up for a couple of sessions and that's cooled off. And that's normally a bullish sign. You don't want to see the VIX run away beyond the 15-16 odd mark. Yesterday as well, it cooled off by close to around 5%. Now, today we'll have the expiry that will play out for the Nifty. And there is some call writing that we have seen. 26,050, 26,100 call. Both of them have seen a fair bit of open interest build up. And the bears believe they can defend higher levels. But the good news is on the downside, we have been seeing writing at around this 25,900 put. Which brings us to the levels. The bears will get a little bit fearful once we get past the 26,100, 26,150 odd mark. So this is the crucial resistance zone just for the day. But the reference points on the downside comes up for you on the screen. The options data suggests that. And yesterday as well, we went closer to around these levels. So that's the important level to track. On the Nifty Bank, you wanted to get past the recent high and hold above that level. While the reference point comes in a little bit lower at around this 53,700, which is a support on the downside itself. The stock that I'm tracking today is 5-star. Yesterday we've broken that exclusive that there's a possibility that could be a large trade that takes place. So that large trade gets out of the way. I want to see what happens post that. Because if you look at the valuations and you compare, say, a 5-star with SBFC, well, on a price to book multiple, it appears it's more or less similar to what we have on SBFC. But otherwise, the return ratios are much more favorable for 5-star in comparison to SBFC. And DAM Capital, they have put out a note. They believe that there is a good scope for re-rating for 5-star from year on. Post this block deal, I'll be keeping a close eye on this stock. So let's see how that goes.
Okay, all right. Got that. Nigel, thanks very much. So we'll keep an eye out specifically on some of those stocks as well. There's, of course, a lot to cover as we go forward. And, of course, plenty of stocks to talk about as well. But we'll kick it off with the equity call of the morning. Lawrence Belanco of CLSA says that global markets have seen further follow-through action following last week's breakout. In the US, he says the cyclical versus defensive ratio has broken out of its August to September basing pattern. The consumer discretionary versus staples ratio is within striking distance of the mid-July highs. And the investment grade corporate bond ETF versus the US 7 to 10 year Treasury bond ETF has broken out to new highs. He says this is a constructive backdrop.
Okay, well, that is the move which is coming in. And now Lawrence also says that while we have no new momentum signals for the Nifty's breakout to new highs from a behavioral aspect, the index continues to respect supports provided by the 50-day moving average post the election volatility back in June. He says as such he would keep it simple and give the benefit of doubt to the upside and the continuation of the current uptrend as long as price action continues to respect supports provided by the rising 50-day and of course the which currently stands at 24,921 levels. Okay, well, that's the technical aspect. Let's get a quick fundamental view as well. Matt Orton is U.S. market strategist and chief market strategist at Raymond James Investment. Matt, of course, has liked India for a long time, and I think he's overweight the market. Matt, good to have you with us here. You may like it, but most foreigners are still staying away because they may like it, but they are staying away, not putting the money in, and they're complaining about valuations. Fair enough, but. I'll get to that in just a bit, but very near term, do you think all this stimulus out of China, and we had a guest yesterday on the program in India who was saying that maybe over the next few days he would watch how flows are beginning to shape up to determine what near to medium term looks like, whether it will excite foreigners, because the Chinese market's trading at about 8 to 10 times. We are trading at about 22 times. Just your thoughts.
Yeah, good morning, Prashant. Great to see you. And China is certainly an interesting one. The market has taken off over the past couple of trading days. But when I look at what actually has happened, what the PBOC has laid out, in my opinion, it's incremental, it's insufficient, and honestly, medium to longer term, it's going to be ineffective. It's the same exact thing that we've seen before. We saw it a little bit earlier this year. We saw the same types of policies last year. it's not actually addressing the fundamental economic challenges that the Chinese economy faces, which is a consumer that saves more than they spend. And there's dampened consumer sentiment as well, given the equity market. So I think this is a move to juice the equity markets and maybe try and get institutions to take a little bit more leverage. It's working in the short term. What I'm advising to clients is if you want to get exposure to this, it's a trade. Perhaps rent the trade, rent the upside through maybe call options. But what I do longer term is this is a move I would be fading. And even though there's such a big valuation discrepancy, like you pointed out, China is incredibly cheap, but it's cheap for a reason. It's not to say there isn't value in China. There certainly are a number of companies that are very interesting. But from a longer term perspective, the growth story in India is so much more compelling. There's a much more friendly regulatory environment. The economic growth is there, and it might be more expensive, but it's justified because of the earnings and economic growth that's behind it. So I would say stick with India, stick where there's real growth, not growth that might be a facade for bigger problems.
Oh, we love the sound of that, Matt. It's music to our ears. Basically, what you're saying is China is a trade and maybe India is the bigger investment that you could focus on. Got it. But, you know, just to play devil's advocate and to make the case that the other side is making, some worry that we are maybe in the late stage of this bull market cycle or maybe even the earnings cycle. I was speaking to a domestic fund manager here who was saying when they talk to corporates, the worry is that first quarter you could ignore because we had domestic elections and maybe business activity slows down a bit. But, you know, I think now we're moving to the litmus test in terms of business growth, earnings, and whether the market can sustain at these levels. What's your reading?
Yeah, it's a really good point, Survi, that you bring up. And I think what you've been seeing, especially over the summer, with a number of the high-flying companies that started to either pull back or flatline a little bit. What's interesting is it seems to be almost a rotation towards higher quality, maybe GARPier type companies. It's not so much a rotation out of India or worries about India broadly speaking. I think it's just changes that are taking place beneath the surface. And when you look at what has really taken off over the past couple of weeks as the broader indices have rallied to new highs, a big part of it are companies that have actually justified those earnings. So some of the names that I favored in the financial space, we've talked before about ICICI, but that's a high quality compounder that's delivering 15, 17% ROE on a very stable basis, growing loan deposits, and it's offsetting perhaps some of the net interest margin worries of the potential for lower rates by increasing deposits in its large wealth management business. So that's a high quality business that's taken off. And you're seeing a number of companies like that where the rallies are more justified, and those where you might have more questionable fundamentals that may have rallied just because of infrastructure plans, because of enthusiasm after you got some of the election digestion through the system of the market. You've seen those names more flatline. So I am encouraged. The main message, though, to client survey is don't chase this market higher. Let there be pullbacks like we saw a month or so ago, and let that sort of downward trend for higher quality companies be a good entry point.
All right. Hi, Matt. Morning and good to see you. Vin, what about the IPO market here in India? That's very, very vibrant. Some worry that when the IPO rush gets too fast, too furious, then it's a cause of concern. But it could also tell you the kind of enthusiasm you have towards India. I'm talking about the Hyundai IPO, the Swiggy IPO. What's your view?
It's encouraging because you're seeing IPOs in India and we're not really seeing them in the US. I think it speaks to regulatory environment. I think it speaks to innovation and the opportunity set longer term, and the enthusiasm for public companies as opposed to private. So it highlights the distinct nature of both of the markets and why having exposure to a growth market like India is a very good complement to a portfolio that has US exposure. I still like the US. It's still significant overweight in my portfolios, but this IPO market, I think, worries me less because it's backed by a lot of enthusiasm, strong technicals across the rest of the market. And again, a lot of these IPOs are leaning into stronger fundamental themes, burgeoning domestic demand for vehicles, companies that have presence in the EV space that's continuing to grow. So I actually think it's a signal of strength longer term. The IPOs specifically, maybe interesting, maybe not, depending on where it actually prices out. You tend to see these names fall a little bit after the initial trading actually starts, but I think it's a good, healthy sign of a vibrant market.
Okay, all right. So that's a thumbs up even to the IPO market. Matt, really good listening into you today. I'll tell you what, because we sitting here sometimes question what's going on, and it's healthy questioning, right? That's our job. But you tell us, since you're completely sort of sold on India and you believe in the story here, apart from names like ICICI Bank, what else are you looking at? What else would you want to own in this market?
So, Surabhi, a good example of a name that's kind of, moved downward a little bit, going through a consolidatory period, is Adani Ports and Special Economic Zones. It plays into the overall theme of longer-term Indian growth, but it's a name. It's the biggest port operator in the country. You're getting about 15% revenue and EBITDA growth, which I think is very, very encouraging. And you're continuing to see investment not only in India, but also in other emerging markets. So there's a lot of different levers this company can pull, and it's not really constrained in its ability to finance its operations. So that, I think, is an opportunity where valuations have come in a little bit, and it might be an interesting opportunity for investors to get some exposure if they don't have any, and a different way to perhaps play the infrastructure growth of India type of theme.
Matt, lovely speaking with you. Thank you very much. And Surabhi, I think that was a good point, right? I mean, that sometimes sitting here,
yeah, we question what's going on. We wonder if it's too good to be true, but good to get your external perspective.
Someone who's investing in other markets as well, and then, the view on India. So I think it kind of stands out, and so good to get that, Matt. Great to have you with us here. Appreciate it. Well, I think, we'll take a quick commercial break here, but we'll just quickly tease out the stocks which our research team will present to you in just a bit. We're looking at Tata Motors, Vedanta, Zen Technologies, Minda, Krishna Diagnostics, which are perhaps going to open in the green on the back of news flow. 5-Star Finance, ASK Automotive, PB Fintech, Ease My Trip, KPR Mills are the stocks perhaps which will start in the red. Stay with us. So when we say melt up, I just want to sort of finish that point. It usually we are talking about like a frenzied move in the very short term, but that's not what you mean. You think
it makes a major long-term top, which is not a great thing. So it's great that we are going up on a wall of worries in a way that every time we meet, we are worried about, is this the end? Is this market going to fall? Will the investor flow stop?
Correct.
Will people run away? Markets don't climax at periods like that. And this seems to be more like the 90s bull market, where small caps were doing phenomenally well. And what tipped it eventually, of course, one was the Asian crisis, which happened outside our control. And B, it just got overwhelmed with supply. And that's really what capitalism should do, that prevent what I call that melt up, where the entire market goes up 10x in a decade. And then you don't see that prices for maybe next 10 or 20 years. So I'm hoping we don't get a melt up, and supply response takes care of it. And supply is coming, but it's still what I call a quadrant 3 or quadrant 4 level supply. The big guys haven't yet come. And in the bigger ones, if I take the top 10 companies, no one is supplied. Having said that, the owners of those companies, whether it's BAT selling down ITC or Singtel selling down Bharti, that's happened. But it's not like the Reliances or the Tatas or someone has come with massive issuances, which I think is around the corner. It should come.
I mean, bankers we speak to tell that over the next 12 to 18 months, about $25 billion worth of IPOs should happen. But that is, I'm not sure how much of the...
So, Prashant, 25 also, I'm saying, is a small number now. It's a $5 trillion market cap. So if you don't do 50 billion, is 1%. So issuance is, the government ought to be doing 25 billion. The larger groups easily can take 25 to 50 billion. And this is combination of primary and, of course, QIPs and so on. We've seen promoter selling, we've seen PE selling, we've seen MNC strategic selling, and it's gone from across the world, right? If GE of US has sold, Whirlpool has sold, BAT has sold, Sumitomo from Japan has sold, Singtel has sold, and now Hyundai is approaching the market. So all these chaps are getting it right. But we still haven't come and raised the money.
And that will happen according to you?
I think it's inevitable. I mean, that's what capitalism is, right? That demand for paper will create the supply.
And we are a long way off from that climax. Or whatever.
I hope I'm not proven wrong next week, but I think this has legs to go.
This has legs to go.
As far as India is concerned, the role and relevance and the significance of India, especially as far as the foundation is concerned, and what you're hoping to do on the innovation side.
So we've been telling you that the cues across Asia are positive and we're likely to get a start on the green side of the screen. There you go. The implied open is looking like, we could get a 60-point pop. The question is, what about individual stocks? So let's go across to our team and they're all standing by to bring you the CNBC-TV18 list of top 10 stocks to watch. Guys, good morning. Vinny, you kick it off. Eye on Tata Motors today. Tell us more.
Absolutely. The eye on Tata Motors, we're expecting it to see a bit of a positive move. Why? Because the JLR, the arm of the company, is planning to invest around £500 million, and this is for retooling of its UK plant. Electric vehicle is what they want to focus on here, and that will be the first plant for the company which will be completely producing only electric vehicles. Now, do not forget that the company has already spent £250 million previously on this, and the aim of the company, the strategy of the company is to reimagine their strategy and become an EV company, and JLR electrified completely by 2030. So key focus on that, making further investments in terms of the strategy that they have laid out.
Okay. All right. Vinny, got that. Thanks very much for it. Let's quickly get to Vedanta. Nigel, we're looking out for yet another dividend?
Yet another dividend. They're saying that they're going to consider the fourth interim dividend for this year. We're only halfway through. And they've given the date as October 8th. Just to give you a quick rewind, in the last 6 months or so, they've declared dividends amounting to around 35 rupees. Wow. That's great news. And now they're bracing for another one. Couple of alerts come up for you. The promoter entity, they are the largest beneficiary, right? Because every 100 rupees that's declared, they get around 56% of that, because the promoter entities which held mid-60s, that's come down to around that 56% on. And why is this important? People wonder, why is Vedanta paying out so much dividend? Now, since the promoter entity is getting 56% of that, it helps deleverage things at the promoter end. That's Vedanta Resources. So we'll keep an eye out on this. You have the tailwind with commodity prices as well as silver prices. Just to give you an alert, in the last few sessions, the stock has already seen a good run, from around that 450 to 480. But it's the best placed stock if you're looking at a commodity melt up. So that's the one, going with green on that stock. But let's hop across to Vivek. He's here to tell us about a couple of large trades that we're looking forward to. Hi, Vivek. Good morning. You told us towards the dying minutes of trade yesterday that watch out for 5-star. Expect a large trade. Bang on.
Well, good morning. That's right. Just like we mentioned, towards the dying minutes of trade yesterday, that a clutch of PE investors, who collectively held over 25% stake in 5-star Business Finance, were looking to pair close to 20% stake, and largely along expected lines. Yesterday the block deal was launched. The term sheet indicates that PE investors are collectively looking to sell close to 19.3% stake. The floor price for this particular block deal is at 768 rupees a share, indicating that the size of the block is a little over $500 million. That is close to 4,300 crore rupees. So it's a large block deal. Amongst the sellers, two Sequoia funds, a KKR fund and TPG Asia are amongst the sellers. Important to note that there is now a 12-month lockup on further sale of shares, that the remainder of the stake that they will continue to hold. The other stock on the radar is ASK Automotive. Now, there has been an OFS launch. One of the promoter entities, Kuldeep Singh Rathi, who held a little over 40% stake in the company, is looking to pair 6% stake, and the route that he has chosen to take is the OFS route. So the base size is 5.5% equity, and there is a green shoe option or an upsize option of another 0.5% equity. Now, when you're talking about the floor price, it's at 433 rupees a share. So the total OFS size is a little over 500 crore. Going with red on both of these names, at least at the open.
Yeah, because then people queue up and there are enough buyers, and by the end of it, the stock sometimes turns into green. That's the nature of the market. Got it. Vivek, thank you very much for that. Back to Vinny. Now, a lot of us would have noticed that PB Fintech was under severe pressure yesterday. It was down 5-6%. And today we have news on the company. Looking at some business diversification, Vinny.
Absolutely. So what we understand and from sources that PB Fintech may actually start exploring to enter the healthcare space. They may even open up their own chain of hospitals. So yes, that's what we're keeping an eye out on. And PB Fintech wants to tap into this level of value creation in the healthcare business. So that is a focus area. Now, they came out with a clarification on this as well. In the previous con calls that highlighted analyst call that they would be looking at such a diversification and they are aiming for it. But as of now, there's no such decision that has been made. The company wants to focus on, bringing the insurance space together, smoothing it out for customers. The strategy is that insurers, even the customers and hospitals, all are working together for easier claims. So that is their strategy going forward. As of now, there's no decision made. They've not found out of what they want to do going forward. But yes, if this does happen, it's a bit capital intensive. So that is why we've seen that fall coming in the stock as well. They will have a lot of capex if they actually start their own chain of hospitals. So bit of a red for PB Fintech in the short term, but long term, surely a value creation that we're watching out for.
All right. It's interesting, right? Insurers going into hospitals and hospitals getting into insurance. That is Narayana Hrudayalaya, if you remember. So it's like a lot's happening in that space. But as Vinny said, stock's been a little worried, 10% down in the last 2 days or so. Vamakshi is here with more stocks with news flow. Vamakshi, take it away. Morning.
Well, good morning, Prashant. Let me first start off with Zentech. The company has launched remote-controlled weapons and surveillance systems, and this has been done to strengthen India's defense capabilities. Now, keep in mind that, of course, this is a positive development, but over the last 2 months, the company has in all launched 8 new modern military equipment. Of course, this is yet to materialize into earnings, but all of this put together provides a new leg of growth for the company apart from their defense simulators as well as anti-drone systems. So, given that development, going with the green for Zentech. But apart from that, watch out for Uno Minda as well, and that is because its arm Minda Onkyo India Private Limited has entered into a technical licensing agreement with Hyundai Mobis Company Korea. The agreement will enter Minda's arm to manufacture licensed products, specifically speakers for Hyundai Mobis. So given that development, going with the green for that counter as well. And lastly, let's focus in on Krishna Diagnostics. The board has given a nod to the company to acquire nearly 23.53% stake in Apulki Healthcare. Keep in mind that Apulki is engaged in establishing, operating and maintaining hospitals focused on oncology as well as cardiology. With this agreement, Krishna gets exclusive partnership of operating and maintaining the diagnostic services of Apulki's hospitals. So given that development, going with the green for Krishna as well.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's hop across to Vivek. He's here. He's tracking some large trades as well. Vivek?
Well, that's right. We'll talk about some of the large trades that took place in trade yesterday. Yesterday we did tell you about EasyTrip and how there was a large block deal expected. We were anticipating close to 8.5% of a promoter stake sale. But as per, what has been uploaded onto the NSE block deals, the promoter Nishant Pitti has sold close to 14% stake in the company in yesterday's trade. A few buyers emerging over there, Kraft Emerging Market Fund and Corecom Marcom Fund. Of course, it's not been offset completely. The buyer list still elusive given the fact that there appears to be buyers who have been less than 1% of the total trade taken yesterday. The other stock on the radar, KPR Mill, again, over here, the promoter has spared stake worth almost 970 crore. 3.1% equity is what the promoter KP Ramaswamy has sold yesterday. Amongst the top buyers, SBI Mutual Fund picked up almost 2.8% stake in the company. So again, KPR Mill, a large block deal where the promoter has spared part stake.
All right, Vivek, thank you very much for that. So lots to keep track of and lots to discuss as we go forward as well. So just a quick summation of everything that we put out for you. A recap, that is. So on the positive side, you have Tata Motors, Vedanta, Zen Technologies, Uno Minda, Krishna Diagnostics. Stocks with negative news flow, 5-Star Finance, ASK Automotive, PB Fintech, Ease My Trip, and KPR Mills. We'll take a break. We are back. Deepan Mehta, Elixir Equities on the other side.
The country the foundation does the most in. Other than the U.S., that's our largest group. We have a great team there. We work a lot with the national government and many of the state governments. And not only do we see in areas like nutrition or using ultrasound to detect a difficult pregnancy, we're doing a lot of studies with our partners there. which will have a benefit for India. But also, because the digital infrastructure in India is so strong, we can try things out there and take them to other countries. The digital infrastructure itself is a great example where the leadership has laid that foundation, and now both India and Gates Foundation are going to Africa and other places and saying, hey, you should do the same thing.
Was there a specific learning from this trip to India for you?
Well, it was pretty amazing in Odisha to see how the digital approach was connecting with farmers, that they had categorized which farmers were in which location, what were they growing. And so when they would see crop disease outbreak, they could notify them. If they saw weather coming, they could notify those farmers. If the market prices were changing, they could help guide the farmers. And so the digital revolution, bringing that into that agricultural sector, that was the first time I saw that at work. And it's being scaled up in India. Now we'll take it to the rest of the world.
Welcome back. Well, as promised, let's get some fundamental analysis going on the stocks that we listed out for you. To help us out, we have Dipan Mehta, Director at Alexa Equities, who joins us on the show. Hi, Dipan. Good morning and good to see you win as always. Dipan, I wanted your view on PB Fintech. There's that report that we had put out actually exclusively that they're looking to enter the healthcare sector. Last couple of days, the stock appeared rather nervous. I think it's down close to around 10% odd. What's your view on this? Sometimes in a bull market, you get away with these diversifications. Sometimes, the management's clarification that it's complementary in some way, you get away with it. But sometimes the market doesn't like it. They want you to stick to the core business. Your view on the stock?
Yeah, good morning, Nigel, and thank you for having me on your show. I think that they will spell out the strategy going forward. And PB Fintech and all these new age, new generation companies are heavily influenced by institutional investors, private equity investors who have invested and are presently invested in these companies. So they take a lot of strategic direction from their shareholders, considering that always the management holdings on the lower side. So I'm sure there's a coherent strategy behind this move to get into healthcare, and they will perhaps explain it over time. I'm sure it will not be earnings dilutive, nor will it impact the return ratios. But there's no denying the fact that the company is going from strength to strength. And on the whole, this entire insurance distribution business and the loan distribution business has got good traction. And I think that PB Fintech also will get solid into profit over the next 2-3 years or so.
So, Deepan, just to press the point, you won't be concerned, two things. One is that it's a platform company, and now if it indeed gets into setting up its own hospitals, then, that's a capital-intensive business. That's one. And the second, at a more sort of, academic level, many a times, most of the times, in fact, running a hospital and running an insurance company are two very different businesses at odds with each other. The hospital owner will always want to charge more, and the insurer will always want to ensure that you pay as less as possible or as efficient as possible. So, thematically, aren't they very different businesses?
Yeah, and actually, PB Fintech is not an insurance company. So, it's like an insurance.
Exactly. It's in the middle. it's been the bridge, but now I don't know, I mean, this is a whole new thought process here.
Well, all I can say, Survi, is I can trust you to get the management on your channel and quiz them, as you always do. I'm looking forward to that interview. All I can say is that knowing the profile of the company and the management, they will not make any strategic move so sharp which will affect creation. I think a company like PB Fintech, Zomato, Paytm, they're very focused on creating value for minority shareholders, and they will not do anything to dilute that particular strategy.
No, absolutely. Got that. You know, just a quick word, Deepan, these big IPOs which are coming up, right? Hyundai is the big one, planning to raise $3 billion. I mean, what's your sense? Have you given it a look? Should one start to put some money aside when it comes? You know, I think about 16-17% share of the market in terms of total volume of cars sold in India. Maruti's at about 45%. Go on.
Yeah, Prashant, good morning. Yeah, absolutely. I think that Hyundai will be a very successful IPO, and post-listing also a lot of investors, retail and institutional, will line up to include in their portfolio. And I think that their strategy, their models, especially the EV strategy, seems to be better than even Maruti. And look, the automobile industry has been a good value creator. There are very few listed stocks, and now Hyundai also will join on the four-wheeler side. So very positive, and typically MNC companies have a fancy on Indian stock markets, and I don't think this one will, not meet that bar as well. So looking forward to the IPO of Hyundai, and I think this Diwali we're going to have a blockbuster IPO Diwali, almost 50,000 crores worth of IPOs coming in. I think this NTPC Green also is one if valuations are attractive, and there is Swiggy also which is coming through. So I think that investors have to keep some money aside to look for applying for these IPOs, and any allotment I think will be like a absolute lottery, as we have seen in Bajaj Housing.
A point taken, Deepan. You know, so there are people who are worried about a lot of the supply coming, but I think you're not in that camp really, right? I mean, there's enough demand, and that's kind of creating its own supply as well, and some high quality paper, as you said. I just want to quickly play out what Manish Chokani told me about this amount of supply which is going to come, and why that is necessary as well, because otherwise, you basically risk what he called a melt up, which is not good, at least in the long run. Listen in.
Great that we are going up on a wall of worries in a way that every time we meet, we are worried about, is this the end? Is this market going to fall? Will the investor flow stop?
Correct.
Will people run away? Markets don't climax at periods like that. And this seems to be more like the 90s bull market, where small caps were doing phenomenally well. And what tipped it eventually, of course, one was the Asian crisis, which happened outside our control. And B, it just got overwhelmed with supply. And that's really what capitalism should do, that prevent what I call that melt up, where the entire market goes up 10x in a decade. And then you don't see that prices for, maybe next 10 or 20 years. So I'm hoping we don't get a melt up, and supply response takes care of it. And supply is coming, but it's still what I call a quadrant 3 or quadrant 4 level supply. The big guys haven't yet come. And in the bigger ones, if I take the top 10 companies, no one is supplied. Having said that, the owners of those companies, whether it's BAT selling down ITC or Singtel selling down Bharti, that's happened. But it's not like the Reliances or the Tatas or someone has come with massive issuances, which I think is around the corner. It should come.
I mean, bankers we speak to tell that over the next 12 to 18 months, about $25 billion worth of IPOs should happen. But that is, I'm not sure how much of the...
So, Prashant, 25 also, I'm saying, is a small number now. It's a $5 trillion market cap. So if you don't do 50 billion, is 1%. So issuance is, the government ought to be doing 25 billion. The larger groups easily can take 25 to 50 billion. And this is combination of primary and, of course, QIPs and so on. We've seen promoter selling, we've seen PE selling, we've seen MNC strategic selling, and it's gone from across the world, right? If GE of US has sold, Whirlpool has sold, BAT has sold, Sumitomo from Japan has sold, Singtel has sold, and now Hyundai is approaching the market. So all these chaps are getting it right. But we still haven't come and raised the money.
And that will happen according to you?
I think it's inevitable. I mean, that's what capitalism is, right? That demand for paper will create the supply.
Will create the supply, and Manish is not worried. Deepan, you're not worried either, right? I mean, that's what I could take away. I hope you heard the soundbite. So Manish's view is we should do $50 billion. Not just IPOs, QIPs, etc. We're already, I think, in the ballpark. But your sense?
See, Prashant, all we can analyze is the fundamentals of the company and the economy and the industry. How much of supply will come and what the demand is are beyond our estimate. You just cannot estimate or put a number on these things. And more supply creates, attracts more supply, and more demand also creates more demand. That's the unique thing about capital markets. Higher the price, higher the demand, lower the price, lower the demand. That's a unique feature of capital markets. And what we are seeing is like a once in a generation transfer of wealth from other asset classes into equity. And at the same time, there's adequate supply also coming through. At the same time, there's a lot of froth also in a few names within the market. So we are in a classic bull market. And really, I cannot make out a case where even our 10% type of a correction can take place. I think bad news is being used to buy even more. And how much money on the sidelines also is difficult to say. But I would say that the only warning sign I'm looking out for is a failure of a good quality IPO when it starts to list or it doesn't get subscribed or it lists below its market price. That perhaps would put a kind of an end to this phase of the bull market, but I don't see that happening in the near future.
All right, Dipan, I wanted to ask you about the other large trade that we're looking forward to today, that is on 5-star. My colleague Vivek yesterday gave us a heads up that that's a possibility. And sometimes, the stock price seems to be range bound till this large trade gets out of the way. Now, there'll be a cooling off period for the next many months, so that you won't get additional supply coming in from those entities. What's your view on the company? I'm looking at a DAM Capital note today, and they're saying on a price to book, 5-star and SBFC, they trade at similar multiples. But on a PE, there's a sharp discount, and the return ratios actually are better for 5-star in comparison to SBFC. Your view?
No, I think a lot of NBFCs are trading at attractive valuations. A lot of banks also are trading at attractive valuations. But the thing is that we have very high ownership in the bank NBFC space across portfolios, not just with us, but I can see with even a lot of other investors. And that's keeping the valuations pinned down. But at some point of time, as we are seeing rotation in leadership, rotation of money moving into different sectors, something similar will play out also with banks and NBFCs. And that's one pocket where valuations are still reasonable as compared to growth rates. And still it's kind of decent environment for them. So very positive on a company like this and, providing an exit opportunity for investors. I would say that, new investors will come in and who will perhaps, support the management and take the company to greater heights. So very positive on banks, NBFCs and 5-star also in general.
All right, Deepan, got that. So that's banks and NBFCs, which are in focus at this point in time. Just a quick word on autos as well, the already listed ones, not the new ones which will come. Mahindra and Mahindra. I think stocks done very well. Last 3-4 days I'm talking about. Friday was a big day. Monday was a pretty good rally. And by the way, the optimism is not coming from the passenger vehicle segment. It's coming from tractors. Escorts, for example, has had a decent run recently. Deepan, do you like anything here?
See, Prashant, the tractors operating profit margins in M&M are higher than the passenger vehicle and the utility vehicle. So if the tractor business starts to do well for them, then it could give a big leg up to M&M's profitability. And stock, of course, has run up in the last few months or so, years as well. The new models have been very well received and they have a dominant position in the tractor industry. So I would prefer to remain overweight on M&M as compared to a lot of other automobile companies where we are seeing that, sales are starting to stagnate and they're looking forward to the festival season to reduce the inventory which is there with the dealers.
Dipan, briefly when we spoke about IPOs, you mentioned about Bajaj Housing. As someone who didn't get it, they'll be quite depressed when they saw the stock go all the way to around 190. Now it's come to around 150. Get in or wait buy?
No, I think it's still expensive at 150 also. Maybe let's look at a couple of quarters or so. And once the price to earning multiple is a little narrow, that may be a good entry point. I think at 150 also it is going at 80 times or something like that if I'm not mistaken. So I'll just wait for reasonable valuations.
Okay. All right. Deepan, stay on. We'll come back to you and, get some more thoughts going. For the time being, I think we have to take a very quick break. Come back on the other side. We'll also have our technical experts join in, Mitesh Thakkar and Sudarshan Sukhani, with some trading ideas for the day.
The valuations are berserk over there. I mean, again, great companies, but and again, I usually don't talk about stocks, but just to put some sense. And again, don't get me wrong, I'm not disputing valuations or anything, but just to give the Infosys example, let's say our favorite stock this year was, say, Zomato. It's a $30 billion market cap. Let's say we expect the market normally to give you a 15% CAGR for 10 years, which is 4 times. So it should be a $120 billion market cap in 10 years. Let's say it's a 30p by then, because it'll be a fairly large company. So it needs a $4 billion PAT, profit after tax.
So when we say melt up, I just want to sort of finish that point. It usually we are talking about like a frenzied move in the very short term, but that's not what you mean. You think
no, I mean it makes a major long-term top, which is not a great thing. So I mean, it's great that we are going up on a wall of worries in a way that every time we meet, we are worried about, is this the end? Is this market going to fall? Will the investor flow stop?
Correct.
Will people run away? Markets don't climax at periods like that. And this seems to be more like the 90s bull market, where small caps were doing phenomenally well. And what tipped it eventually, of course, one was the Asian crisis, which happened outside our control. And B, it just got overwhelmed with supply. And that's really what capitalism should do, that prevent what I call that melt up, where the entire market goes up 10x in a decade. And then you don't see that prices for maybe next 10 or 20 years. So I'm hoping we don't get a melt up, and supply response takes care of it. And supply is coming, but it's still what I call a quadrant 3 or quadrant 4 level supply. The big guys haven't yet come. And in the bigger ones, if I take the top 10 companies, no one is supplied. Having said that, the owners of those companies, whether it's BAT selling down ITC or Singtel selling down Bharti, that's happened. But it's not like the Reliances or the Tatas or someone has come with massive issuances, which I think is around the corner. It should come.
I mean, bankers we speak to tell that over the next 12 to 18 months, about $25 billion worth of IPOs should happen. But that is, I'm not sure how much of the...
So, Prashant, 25 also, I'm saying, is a small number now. It's a $5 trillion market cap. So if you don't do 50 billion, is 1%. So issuance is, the government ought to be doing 25 billion. The larger groups easily can take 25 to 50 billion. And this is combination of primary and, of course, QIPs and so on. We've seen promoter selling, we've seen PE selling, we've seen MNC strategic selling, and it's gone from across the world, right? If GE of US has sold, Whirlpool has sold, BAT has sold, Sumitomo from Japan has sold, Singtel has sold, and now Hyundai is approaching the market. So,
welcome back. Hope you're having a good and a safe morning given the weather update that we have. Well, let's get in Mitesh as well as Sudarshan on the show. Good morning, gentlemen. Thanks a lot for joining in. Mitesh, yesterday we had a late surge coming in on the Nifty Bank. It had that technical factor because of the expiry-related factor that plays out. Today, the Nifty's turn. How do you approach trade?
So, overall, the market trend remains very bullish, and there is no sign of a correction. So I think one good way to ride this momentum is keep trailing your stop losses, which is what something which you suggested. And currently on the Nifty 25,850, 830 zone, which is what I highlighted yesterday as well. And yesterday we got a low of 25,878. So I think that is the area, and pullbacks around those levels should be used to add on to your long positions and keep a stop below this 25,800 levels. As long as you're not breaking that, I think the immediate move is on the upside. The longer term trend is also on the upside. In case you break 25,800, there could be a slightly deeper pullback, and then you would want to wait to buy on declines.
Okay. So buy on declines could be a strategy to go with. Got it, Mitesh. Darshan, good morning. What's the approach that you would take today?
Good morning. Let's assume that the markets open higher today. On that basis, take profits and step aside. We've had a very, very decent run. The US markets are now coiling. Essentially, they are going into a huddle, into a small consolidation. We never know which side this consolidation can break. Usually, I would have said it breaks on the upside, but we've done that 3 times in the last 10, 15 days. Gone into a huddle, gone into a consolidation, broken on the upside. So I don't think we should push our chances. If you see a rally, or even if you don't see a rally, I mean, if you get a rally, it's so much better. Exit all your long positions. Now the markets can still go up, and that means I'll be left, without a long position. That's fine with me. Today, I would close my positions and step aside.
Okay, all right. Got that. Gentlemen, good morning. Good to have both of you here. Sudarshan, what would your specific trades be?
See, the trades are all on the long side. And there are so many mid-cap stocks that are giving us those buy-on-dips opportunities. You know, it's a cycle. This is cyclical. It keeps on happening now. This is a very good time. GAIL is a buy with a stop under 211. GNFC is a buy with a stop under 647. M&M Financial Services is a buying opportunity with a stop under 330. And finally, Tata Chemicals, which is also giving a sense that it's looking up now, is a buy with a stop under 1021. All of them are buy on dips, and they are in a dip.
Mitesh, what about you?
I have a mix of buy and sell calls, Prashant. Good morning. Buy on Maruti with a stop at 12,600 for targets of 13,500. Buy on Power Grid. Disclaimer, I have some options positions over here on the positive side, so the view is biased. There's vested interest. So buy on Power Grid with a stop at 352 for targets of 385. On a mild decline, buy on Axis Bank around 1260, 1265 levels. Buy with a stop at 1244 for targets of 1295. And one sell call, that's Dabur. I think yesterday we saw some profit booking in FMCG names, and Dabur could possibly see more decline. So on a mild pullback, let's around 630. The stock is closed at about 627. So around 630, sell with a stop at 641 for targets below 610.
Okay, all right, gentlemen, got that. So thanks very much for all the calls. We'll come back to you a little closer to market opening. Need to take a break, and then we'll have the pre-opening rates with us. Let's see if they're indeed as buoyant as what the implied open was indicating. And Rahul Malani of Sher Khan by BNP Paribas will join in. We'll talk about the banking sector with a focus on some individual names. Back in a moment.
The valuations are berserk over there. I mean, again, great companies, but and again, I usually don't talk about stocks, but just to put some sense. And again, don't get me wrong, I'm not disputing valuations or anything, but just to give the Infosys example. Let's say our favorite stock this year was, say, Zomato. It's a $30 billion market cap. Let's say we expect the market normally to give you a 15% CAGR for 10 years, which is 4 times. So it should be a $120 billion market cap in 10 years. Let's say it's a 30p by then, because it'll be a fairly large company. So it needs a $4 billion PAT, profit after tax.
So when we say melt up, I just want to sort of finish that point. It usually we are talking about like a frenzied move in the very short term, but that's not what you mean. You think
no, I mean it makes a major long-term top, which is not a great thing. So I mean, it's great that we are going up on a wall of worries in a way that every time we meet, we are worried about, is this the end? Is this market going to fall? Will the investor flow stop?
Correct.
Will people run away? Markets don't climax at periods like that. And this seems to be more like the 90s bull market, where small caps were doing phenomenally well. And what tipped it eventually, of course, one was the Asian crisis, which happened outside our control. And B, it just got overwhelmed with supply. And that's really what capitalism should do, that prevent what I call that melt up, where the entire market goes up 10x in a decade. And then you don't see that prices for maybe next 10 or 20 years. So I'm hoping we don't get a melt up, and supply response takes care of it. And supply is coming, but it's still what I call a quadrant 3 or quadrant 4 level supply. The big guys haven't yet come. And in the bigger ones, if I take the top 10 companies, no one is supplied. Having said that, the owners of those companies, whether it's BAT selling down ITC or Singtel selling down Bharti, that's happened. But it's not like the Reliances or the Tatas or someone has come with massive issuances, which I think is around the corner. It should come.
I mean, bankers we speak to tell that over the next 12 to 18 months, about $25 billion worth of IPOs should happen. But that is, I'm not sure how much of the...
So, Prashant, 25 also, I'm saying, is a small number now. It's a $5 trillion market cap. So if you don't do 50 billion, is 1%. So issuance is, the government ought to be doing 25 billion. The larger groups easily can take 25 to 50 billion. And this is combination of primary and, of course, QIPs and so on. We've seen promoter selling, we've seen PE selling, we've seen MNC strategic selling, and it's gone from across the world, right? If GE of US has sold, Whirlpool has sold, BAT has sold, Sumitomo from Japan has sold, Singtel has sold, and now Hyundai is approaching the market. So all these chaps are getting it right. But we still haven't come and raised the money.
And that will happen according to you?
I think it's inevitable. I mean, that's what capitalism is, right? That demand for
Welcome back. 2 minutes to go before we start getting the pre-open rates and about 16 till the actual market opening. Well, let's get you some F&O cues and some F&O trading ideas as well. We have Chandan Taparia joining in for exactly that. Chandan, good morning. So what are the calls you're going with now that the Nifty is above 26,000? Are you still long?
Good morning, Surbhi. Thanks for having me. So Nifty index has been making higher tops, higher bottom on weekly scale, and levels are gradually shifting higher. We have seen rollover of around 67%, and today is the last day of this expiry. And expiry on expiry basis, this index is up by around 3.35%. And this is the fourth consecutive positive expiry where longs are rolling and levels are shifting higher. We have seen comparatively in-line rollover cost with expectation of 75% rollover, which indicate that bullish bias could continue. We have seen built-up of long positions, put writings are gradually shifting higher. Your volatility index is cooling, which also indicate that data internal indicates upside momentum. So till Nifty holds above 25,800 zone, overall bullish stance could continue for an upside target towards 26,250, and then positionally talking about 26,850 zone. That is our positional target as per the 164 gain square. Now looking at the Bank Nifty, yesterday we had a monthly expiry for Bank Nifty index, and this index has outperformed in this series. It closed with gains of around 5.76% on expiry basis. Rollovers were in line to 65%. And the good part is that index has been moving in a rising channel from last 2.5, 3 years, and now at upper band of the rising channel for a fresh leg of breakout. So if it manages to hold 53,750, the ongoing momentum could continue for an upside target towards 54,500, and fresh rally can be seen towards positional target of 55,555. So overall trend and setup are positive in both the indices until key levels are respected. We suggest and advise to hold the long position and use any small decline as a buying opportunity in indices. Now looking at the stock specific, first trading idea is buy on NTPC. We have positive view on most of the power name, and most of the power stocks have seen a power momentum on the last trading session. NTPC has been making higher tops, higher bottom on the daily, weekly, and the monthly scale, and supports are gradually shifting higher. It has given a small consolidation breakout, and ongoing momentum can take it towards 452. So one can buy with support of 425. Second trading idea, that is buy on Oberoi Realty. After Fed's rate cut, now there will be focus on RBI policy meet. And because of that, most of the rate sensitive sector and stocks started to witness buying interest. Oberoi Realty has been making higher tops, higher bottom, and most of the stocks from the same sector are doing well. So expecting further rally towards 2020, one can buy with support below 1895 level. Last trading idea, that is buy on escorts. We have positive view on the Nifty Auto, and selective auto stocks can do well even after the recent run up. So here we recommend to buy on escorts. The stock has seen a fantastic rally in last 3 to 5 trading session, and follow-up is clearly visible. Technically speaking, it has given a breakout from a classical pole and flag pattern on weekly scale, which indicates further rally and momentum in the counter. So one can buy with support of 4280, and this stock can extend the rally till 4580 to 4600 zone.
All right, Chandan, it's a pleasure having you with us here as always, and thank you for that analysis and those trades as well. Appreciate it. So that is the F&O side of things. Well, Sonal is here now with the day's momentumizer stock. Sonal, what's on your radar? Good morning.
Good morning, Prashant. The stock on my radar is Mahindra Life Spaces. Yesterday, the stock surged. It was up around 5%. Yes, the realty pack in general was doing really well. So this is one stock that came on my radar. The volumes were at 5 times of the average volumes the stock trades at as well. And if we look at the performance so far, it has actually underperformed the other real estate stocks and Nifty Realty as well. The stock is up around 6% year to date, while Nifty Realty surged 44%. So some up move is what we are seeing in the name in last couple of trading sessions. Yesterday's turnover on NSE was around 97 crore rupees. 5 days before that, the average was around 9.9 crores. So yesterday's volumes were 10 times the average value that we see in terms of trading on this particular stock. Stock was at the 50-day DMA of 575.48. And right now it's above the 20, 100 and 200-day moving average. So a lot of momentum that we are seeing in this name today.
Okay, all right, got that. Thanks very much, Sonal, for it. So we'll keep it on the radar. Let's get back to Deepan for a couple of questions as well. Deepan, let's talk about metals, and within that, let's talk about one stock, which is Vedanta. Nigel just told us that the company is going to be considering the fourth dividend so far this year, right? And I don't know, it's probably a good thing because the promoter is also, in need of that money, and they're doing more and more dividends. So as a minority shareholder, it doesn't hurt. But the bigger question is that there is a bit of a uplift in general on the metals pack, considering what's going on in China. So would you buy metals, and within that, would you look at Vedanta or something else?
Deepan, before you answer that, I just want to make one more point. At the start of this year, if you bought Vedanta, you would get it around 270 rupees. All right, you got the stock at 270. Forget about the appreciation of the stock.
The dividend.
You've already got 35 bucks back of dividend. So effectively, you've got close to around 15% return via dividend itself. But it's not the one for the faint-hearted. You don't know what Mr. Agarwal wants to do next. It's the best placed stock, I would say, with regard to this commodity cycle post that QIP that they did. But Deepan, at 485 rupees, how much of the good news is in the price? I have a very split verdict out here. Some part of the sell side under say, it's a touch me not stock. The other one says, it can't be a better play than this. Your take?
Yeah, well, I think that I'm also as confused what rating to give for Vedanta. But on one hand, definitely, I think the entire group is gradually going towards safety, and some of the concerns which are there about debt at the holding company level are getting allayed slowly. So that's a good trend. But I'm not a great fan of commodity stocks, as Nigel knows very well. And, there could be a lot of cycles over here. Earnings volatility also takes place. So from that point of view, I don't think it is really at that attractive valuation at that typical 8-9 times PE multiple, where you can buy with limited downside and great deal of margin of safety. And look, the world is getting into very complex space where, you have interest rate cuts because the economy is slowing down in some parts of the world, and then China is stimulating. And which way, at the end of the day, the commodity prices move is very difficult to say. So just best to stay away from commodities, in my opinion. That strategy has worked well. There are so many other ideas one can pursue. So I would just prefer to wait and watch as far as commodity stocks are concerned.
Okay, all right, got it. So wait and watch on some of the commodity names like Vedanta. Got it, Deepan. Let's move on to banks. Of course, one of the talking points today is the fact that we'll watch out for how yields react to the second half borrowing calendar as it gets announced. Remember, the government announced a gross borrowing of about 14.1 lakh crores, out of which more than half is believed to be done by the end of September, and we'll know what the plan is for the second half today. Anyway, bond yields have been moving down in a pretty dramatic fashion. Yesterday, the 10-year yield was down to about a 32-month low. We're looking at levels of about 6.75 now in anticipation of more foreign flows coming into the market, as well as, of course, eventually the RBI also getting on the rate cut bandwagon. So in this environment, how do you look at financials and banks? Rahul Malani, DVP Fundamental Research at Sharekhan by BNP Paribas is with us. Rahul, good to have you on. So let's start with that overarching question. We are probably entering a rate cut cycle. A, do you believe that? And if yes, then what's the best way to play it?
So good morning, Shubhi. So currently on the banking outlook, we believe that there is no earnings upgrade, at least in the next 6 to 12 months. But rather than there is a earnings downgrade risk, marginal earning downgrade rate led by moderation in growth and normalization of trade cycle, as most of the asset quality, best of the asset quality is behind us. And margins will still be under pressure due to the elevated retail cost deposits, although wholesale deposits rates have come down. And we are factoring in about 25 basis points rate cut in December 2024 by RBI. So, and over a period of we are factoring around 75 to 100 basis points over this cycle. So basically, margins would definitely come down for banks, but over the cycle it will be passed on. So near term, there are no earnings upgrade trigger for the banks, but rather than there are certain marginal risks to the earnings estimates currently now.
Okay. So let's talk about the larger banks first, because here also there's a fair amount of confusion. On one hand, I mean, there's a view that the best of the credit quality is behind us and credit costs will start rising from here on. But we're in a downward rate cycle. So what's the call on large banks and which are the ones that you like the most?
So among the large banks, HDFC Bank continue to be in the course of balance sheet correction, and it will be a gradual stage and it will take time. So among the large and while the one side Kotak Bank is involved in the improvement in its internal control systems and digital platforms, while we continue to prefer ICICI Bank because we believe that it is relatively well positioned among the large private banks as versus if you compare the growth versus the liquidity plus the deposit growth plus the asset qualities and the additional buffers on the balance sheet, we continue to believe that it is a sustainable story for at least over the medium term. For example, in the range, it will continue to deliver 15 to 16% growth irrespective of the sector industry growth. While because it has been continuously, if you look at the deposit growth, it has continuously maintained the deposit growth in line with the loan growth, and which gives us a better visibility compared to the other peers.
Okay, all right. Hi, good morning and good to see you. And what about the PSU segment? That was the sector that re-rated big time. PSU banks in particular, SBI, PNB. What's your view on these PSU banks now? Because many believe that bulk of the re-rating is done. Bulk of the good news is in the price. Would you concur?
So our view is that the outlook is still better and will continue to deliver at least 16 to 17% ROE at least in the next 1 to 2 years, despite some moderation. But they will still able to report ROE in the range of around 1% range.
Okay. All right. Okay. All right. Thanks a lot, Rahul, for joining in and giving us your view. Bit of a technical snag out there, but we have 5-star, that large trade. I think bulk of that did take place in the last few minutes. So I think we should get that stock up. I think it's opened up with a gain of close to 0.5%. And if I'm not mistaken, I think Crow shares have got changed out there. It's up close to around 5% or thereabouts. So let's see whether or not it sustains. But it's almost 9:10. Let's get Mitesh back in. Hi, Mitesh. Welcome back. Tell us, what's your call at 9:10?
Yeah, I'll go with a buy on Maruti for targets of 13,500.
Got it. All right. Well, I think let's get Sudarshan's view as well. Sudarshan, what's your call?
Consider buying GAIL with a stop under 211.
Okay, GAIL is the call that you'll go with. Got it. Thank you very much, Sudarshan and Mitesh. We'll watch out for these stocks today. Let's go across to Nimesh now and see what's the standout brokerage report of the morning. Nimesh, good morning. What are you looking at?
Hi, sir. There is an interesting report on auto ancillaries from BofA Securities. They've made some changes to the few stocks. So today they've upgraded Sona Comstar to buy from underperform, so technically a double upgrade. And they've raised their target price on Sona Comstar to 845 versus 670 earlier. They've also reiterated their buy on Samudra Motherson, and there they've raised their target price to 240 now. And they've downgraded the Bharat Forge a notch to neutral from buy, and they have a target price of 1800, which suggests a potential upside for Bharat Forge as well. Now, as far as for the sector is concerned, they believe that the auto ancillary companies offer a solid structural earnings growth with new avenues opening up, including the electricity and premiumization, which will lead to improved margins as well. And most importantly, there is an export opportunity which is opening up for all the Indian companies. So that's a big reason for the big upgrade. They also see a big inorganic opportunity, especially in Europe, which is opening up for a lot of the Indian companies. So that inorganic deals could be something to track for all the Indian OEMs. And additionally, most of the OEMs are now consciously focusing on reducing the cyclicality by foraying into the non-auto segment. So a big report on auto ancillaries in terms of stock specific. Sona Comstar has been upgraded to buy now with a target price of for 845, and they have reiterated their buy on some of the Motherson as well.
Interesting note, Nimesh. Thanks a lot for joining in and giving us all of those details. Well, I'm keeping an eye out on the one that's not for the faint-hearted. That's Vedanta. They've already given 3 dividends. They're saying they want to give 1 more. So they're going to consider the 4th interim dividend for the year in October itself, and October 8th is the date. Now, so far, they've already given a cumulative dividend of close to around 35 rupees or thereabouts. Who gains the most? The promoter entity. They have 56% stake in the company as of the last disclosed shareholding pattern in July 2024. And you'll be wondering, why are they going giving out such big dividend when they also have big capex plans? Well, Vedanta Resources' primarily source of income is from Vedanta Limited. So they get it via brand fees, via dividend payouts as well. And in case they sell some stake, then that's as well another income for them. And Vedanta Resources is in far better shape. But this dividend that they get from Vedanta Limited, it helps them service their debt and it helps them take care of any kind of obligations as well. So the payout, in fact, helps re-rate the Vedanta Resources, which is the parent company. So positive reading out there, though the stock has seen a bit of a run in the last few sessions.
All right. I think, we'll see how this one goes, but lots of interest and lots of opinion and debate on both sides of the spectrum here as far as Vedanta is concerned. I think, we're going to look at market open levels come up in just a bit. It's look at the change in the pre-open, 1 point and 2 points. So it's going to be a quiet start, no doubt. And we'll pick up from there. So 26,000 round there without too much happening, at least in the first, as far as the first look goes. Stock-wise, I'm sure it's going to be a lot more, some more movement and not just what we're seeing out there on the indices. So first rates anytime now. And by the way, all these blocks which have happened, which are happening, I mean, I think all of those stocks are also in focus, and Five Star, for example, and a few others as well. Vedanta, as Nigel mentioned, we continue to keep an eye on the power names. We've got a discussion lined up a little later here on the show as well. So lots to track. What do we have? First rates coming up. It is nothing. It's a flat start, as flat as I can remember, at least in the recent past. Nothing. Bank Nifty's got nothing. The Nifty's got nothing. The Sensex got nothing. And the mid-cap index got something, 0.1%. Not even that now. So it's quiet out there. What do we have as far as the sectors are concerned? Early, but the big pain point has been the IT services index that is starting about 0.25% higher. So 42,024 as far as the Nifty IT index is concerned. Market breadth out of the gate seems to be positive in the ratio of about 2:1. 20 stocks are lower. The heat map on your screen, 20 lower, and about 30 stocks are starting up in the green. So that's the first look at market open. Surabhi.
Okay, extremely quiet. Let's look at what's moving on the Nifty 50. Maruti Suzuki is the leader right now, 1% gain, followed by SBI Life. Then comes in Shriram Finance. And then you have a few tech names that have been sulking in the last couple of sessions. They're finding some green today. So Infosys would be one of those stocks. Tech Mahindra, LTI Mindtree, a little bit of a little shade of green on some of these names. There's a Nestle, Tata Consumer, about 0.5% up on these stocks as well. Bajaj Auto and Tata Motors. So basically the early trends are auto seems to be fine because you've got three names, Maruti, Bajaj Auto, as well as Tata Motors on the upside. And then you have a little bit of buying on IT. On the flip side of the screen are the banks. Axis Bank, ICICI Bank, weak trends to begin with. HDFC Bank is also absolutely at the flat line. So depending on which way these stocks start moving, we'll have more clarity on the market direction. Hero Moto is not participating in the other auto move. It's actually down about 2% as we speak. ONGC is also a bit of a weak link today. Let's see where the metal stocks are because they've had a good couple of days. Tata Steel is down about 0.5% as we speak. JSW is also on the lower side, as is Hindalco. So a bit of a cool-off in the metals universe. Very, very quiet.
Well, that's right. Let's focus on a few more names than Trent. They like what Citi has to say. They have initiated with a buy rating. They have a target price of 9,250. They're talking about a potential 21% upside, and that's why they've included Trent in the Pan-Asia High Conviction Focus list. So that's the reason why, in fact, that stock is higher. It's up closer around 3%. Or thereabouts. On the flip side, you have Manappuram. That's a little bit under pressure. We understand that in money control exclusive states and Manappuram's MFI arm, that's Ashirwad Microfinance, has deferred listing plans. So we'll require some clarity on that front, but that stock is a little bit lower. Crompton, the stock is down close to around 3% as we speak. So that's the one that's taking a bit of a knock on the downside. What else is doing well? IDFC, that's higher in today's trading session. So that one has popped up in trade. I think I saw Reliance Infra took a bit of a breather. The stock was down 2.5%, but that stock has been getting bought on dips. So let's see whether or not it bounces up. But that's already rallied from around 230 to 330, all of this in a matter of a month or so. So just keep that in mind. For the time being, it's recovered from the low point of the day. Reliance Power continues circuit to circuit up close to around 5%. Easy trip after the dropping that we saw. It's bounced back a little bit. And IEX, Investec is positive on the stock, but it's struggling to even move into the green. Stock has corrected more than 15% in the last 3 sessions.
Well, I think, it's got a bit more action as far as indices go as well. We've got the market, which is at about 26,027, slightly above yesterday's high, about 10 points above yesterday's high. What do we have with regards to what else is going on? So Trent is the second biggest volume-led gainer with a 3% gain. And I think that City Note is sort of showing up with some impact. Prestige Estates is another one which is up 2%, 1880 or so on Prestige Estates. It's got large volumes on it. Signature Global is another one, right? I mean, real estate name out of Gurgaon, 3% higher, 1630 on Signature and volumes as well. Rainbow Hospitals, 5.5% up, 1460 on it, and it's got decent sized volumes. So that's another one. Mukta Arts, it's got volumes and we don't ever sort of, it never shows up with volumes like this, but 15% gain on this one. Look at almost 1 million shares now on Mukta Arts. Zaggle is up 2.5%. We'll be speaking with the management a little later. 441 on Zaggle. Stock's done very well recently. Uno Minda is up 1%. Triveni Turbines, Skipper Limited, etc. I mean, these are basically what's coming up with right after market open. Look at Policy Bazaar. Policy Bazaar has lost 10% in the last 2 days. It's down another 3%. We reported from sources that they're looking at entering the healthcare segment. Hospital, 1675, about 3% down. We've got Saregama, which is down 3%. Crompton is down about 3%. NMDC is down 1.5%. There is, of course, Hero, which is the biggest loser with a 1.5% cut. So this is just the first couple of minutes as far as market open is concerned. Rana Gupta is with us, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Thanks very much for your time. Rana, the more and more, slowly but steadily, the drumbeat continues that, reallocate your portfolios, tilt your portfolios, and do 2 things. One, get into names where you're really convinced, and of course, generally be convinced more in the large cap space than in some of the smaller names. That's the general view from the institutional community that we speak with, Rana. Do you share that view as well?
Good morning. Yes, I think that's a pretty relevant point because the market has been melting up because of the flows and lack of, let's say, good quality paper supply from the corporates. So I think to put this in context, let's look at the return numbers because valuation numbers we have discussed often. I think the Nifty in last 2 years has given returns of 20% plus CAGR. That of the mid cap is 40%. Now compare this with the long-term returns. Nifty's long-term returns is about 13%, and that of mid-cap is 19%. So first point is that the Nifty and NSE mid-cap are somewhat, they're giving higher returns than their average. Some of it is justified because the macro is improved, corporate profitability is improved, but may not be all of it. And then secondly, you can see the mid-cap over a long period of time has given 1.5x, but now they're running at 2x. So that is because of PE expansion. So could there be some consolidation expected? I think, yes, that's pretty much possible. Now, taking a step back, if you look at the market action, we tend to look at only last 3-4 months. But if you look at even this year, January to June, the market was in a very tight 5% range. So can we go again into that kind of consolidation range at 5% for next 3 or 6 months? That's pretty much possible.
Okay, all right. So, Rana, hi, morning, great to have you on. Just a sense, if the market, first of all, do you see any immediate downside risks? Any reason to believe that one should be taking some profit off? And if not, then I think then one moves to the question of then how do you add incremental money to the market?
Right. I think the downside, like downside risk, right? One reason why one could potentially argue for downside risk is to say that downside could come from the earnings not meeting expectations and valuation too high, so on and so forth. But we think although the micro looks a little soft, earnings will not disappoint by a big margin. Now coming to the flows and the PEs, the valuation, it will not correct on its own. The risk that I see and the valuation where it could correct if the supply of papers overwhelm the demand for equities. And as we understand for the month of October, November, quite a few large IPOs are planned. And we'll have to wait and see how the responses are those to IPOs. If, let's say some of them do not give the expected returns, I think that could cause, that could lead to some soaring of sentiment and therefore some correction in the PE ratios. So that is one risk, definitely the supply and the valuation of the supply that we're looking out for. Secondly, I would also like to highlight that from here till about February, there are quite a few state elections. Now, we are fully aware state elections do not alter the equation in the central government. Nonetheless, there could be a sentiment impact if the state election outcome were to be adverse to market expectations.
All right. Hi, Rana. Good morning and good to see you. And since you briefly spoke about these IPOs, two IPOs that listed in the stocks ran away was Ola as well as Bajaj Housing from very different sectors. But the stocks ran away and actually from the peak, they've corrected a fair bit. What's your view on a couple of these names? Some of them have big potential going ahead, but they seem to have run ahead of themselves.
So without getting to any company specific, I would say that the IPOs that have come, they are either from very good corporate houses or in a segment which is not very large in Indian markets, not very large float available. Now, investors want to either own a very good corporate issuing paper and or they want to also own these new emerging areas. Now, the thing is that the supply of issuers papers is so low and everyone wants to own. It is the pure demand supply that is taking the price up. I think if you look at any valuation parameters, these would appear to be factoring in like probably FY27, FY28. So that's just happened due to the supply of the supply of papers, but the demand being much higher than that.
Okay. The other sector that sort of we're looking at obviously is on the whole manufacturing side. The big debate has been whether the best of it from a market perspective, from a stock appreciation perspective, whether that's behind us or whether all dips should be bought. So when you talk about a large theme like manufacturing, if you could break that down more in a more granular basis, what's your overall thought? And then if you were to invest, again, fresh capital, then what part of it would you be looking at?
No, sure. I think that's a great question. And we have been highlighting, I think, since about April, May, that manufacturing as by and large a big theme is kind of peaking out. Now let's get to a more nuanced approach. Let's break down manufacturing into broadly two parts. One, which is impacted by government spend and policy, both. So this will be typically a railway, defense, power segment. These stocks over the last 2 to 3 years have seen tremendous amount of rally, and the valuation there looked very expensive. Now, by definition, all these companies are now factoring in very good execution, but on the ground, that may not be the case. I think these companies will continue to do well as corporates, but the stock price just gone way too high, not to justify these kind of multiples. Then come to the other side, which is a policy driven. Now, Indian government has taken several policy in the areas of electronics manufacturing, in terms of, let's say, energy independence, so on and so forth. We see some opportunity there, although I think mostly in the electronics manufacturing, because that's a very large addressable market in India as well as globally. You might have seen that one of the world's largest phone maker is increasing their sourcing from India. So there could be plays around that value chain. So that is something that we like. In the industrial goods area, some of the global companies are increasing their sourcing from India. That is something we like. But I think going to even the energy value chain, I think there also, I think the stocks, because of, again, lack of quality supply available, has run quite a bit ahead of their fair valuation.
If you can quickly pull up the Policy Bazaar stock, I just want to make a quick mention of it. Volumes now are humongous. It's the number one volume-led loser right now on the NSE. And take a look at the cut that's coming through. It's down 5%. Actually, we should put an alert with our story. So that's basically what 16% down in 3 days flat. 1634. Rana, I don't want you to comment on policy bazaar per se, but the news story is that they are looking at getting into hospitals. This is what we put out yesterday. As an investor, how do you look at it? I mean, largely a platform company now getting into the healthcare space. And anything you say is not to be construed as investment advice. So go on. Feel free.
Right. I think, again, without specific reference to any platform, I think healthcare as a space, we are quite optimistic. We see large opportunities because if you look at the large hospitals, right, which where also the stocks are done very well, their ARPOB are like 70,000 rupees, which is considered quite high for, let's say, if you were to consider the income of majority of Indians. So there exists a large opportunity to provide affordable healthcare and with affordable insurance coverage. So I think there's a large, again, untapped opportunity there, but that's out there. How to capture it, what kind of plans one would make, and what kind of capex it will require. That I think someone needs to do much real work on. I would also have to highlight one thing. Ultimately, as stock investors, we make money on the profits, not on the TAM expansion. On that, we make money on corporates capturing that in profit in the profit after tax and delivering good return ratios, and that will come through execution. But top down is the space of affordable healthcare, affordable insurance. That space as such is quite exciting.
Okay, all right. Rana, we'll leave it on that note for today. Thank you very much for joining in and giving us some perspective on the market. The market, by the way, I mean, it's such a quiet start, but it's now trying to build a little bit, 45 points up on the Nifty. You've got some red on the mid-cap screen, so let's see how that goes along. Still about a 180-point dip on the mid-cap index. So a bit of a diverging trend. It looks like there's some interest in large caps and profit-taking continuing on the mid-cap side. Let's move on now to the big story that came through yesterday. The Ministry of Power has finalized a national electricity plan for 2023 to 2032. The total cost of the plan over this entire period is going to be 9.15 lakh crore rupees. That's the kind of investment we're talking about. The National Electricity Plan aims to meet peak demand of 458 gigawatts by 2032. One of its key targets is to facilitate renewable energy integration as well as green hydrogen loads into the grid. To talk about this development, we have with us Mr. Anil Gupta, CMD of KEI, and we also have Amit Oplenchwar, the director at Kalpatru Projects. Thank you, gentlemen, so much for joining in. So we've got the big headlines in yesterday with the big targets going all the way up to 2032. Let's get your opening thoughts on what you think about this plan and whether the targets are achievable and the investment that is being spoken about. Mr. Gupta, you go first. What did you make of some of the bigger headlines that are in of the plan as of now?
Yeah, thank you for inviting me to the show. This is a very ambitious plan. Basically, as the power generation is increasing, whether renewable power or, with this coming up of this pump storage projects, new thermal capacity generations and green hydrogen, which is talked about. So it is very important to, undertake increase in the transmission capacity to evacuate that power and bring it to the grid and then subsequently to the distribution network so that the consumer is able to use it. So the plan is to expand this network, this circuit kilometer, by almost 50 to 60%, and the transformation capacity of the substations also by 70 to 75%. It is a big opportunity because we have to, feed the demand of power to data centers, to a lot of artificial intelligence networks, growing demand in the urban and rural areas and industries. So unless the power transmission is jacked up, it will not reach to the targeted consumers. And it will bring a huge opportunity to EPC companies to electrical cable companies, the transformer manufacturers, and many other companies who are supplying this to this sector.
So absolutely, and I think this is becoming more and more clear that if we have to feed power to all these data centers and what we're talking about on the renewable side, you've got to be investing in the grid. And I think that's what the plan really focuses on as well. So just quantify the opportunity if you can. I know it's early days, but for KEI, for instance, what could this mean in terms of revenue potential? Not this year, but let's talk about let's say, a 3-year plan.
See, only from this, I think the opportunity is around 50 to 60% more sales from the cables in this sector. But it will have a compounding effect because the power, from these transmission lines will be delivered to the distribution companies, to household sectors, to real estate, to industries. So it will have a compounding effect by around 2.5 to 3 times compared to what it has a direct impact. So I think it will, triple the requirement of products used in the power systems through transmission of this type of power.
Got that. And that's well put. Gentlemen, good morning. Great to have both of you here. Prashant this side. Mr. Gupta, if I can request you to don, they say that businessmen often make the best analysts. So I'm not asking you what the benefit for KEI will be. If you can just step back, and when you say this is transmission capex, right? It'll require sort of cables, wires, etc., as you said, and companies like you will benefit. But what else you think in the value chain in transmission capex? What are we looking at? If you could just give us a bird's eye picture, and what kind of companies will benefit?
Prashant, it will benefit all the EPC companies in this sector. It will benefit the conductor manufacturing, ACSR conductor manufacturing companies. It will benefit the transformer manufacturing companies and all the companies like ABB, Siemens, or the companies who are supplying, products to the power sector, power transmission, generation, and distribution sector. Because once the power is there, it has to be used. It has to be used by by the distribution company, and then it has to be used by the actual user. So in complete value chain, whatever products are, I can say that panel manufacturers in HT segments, LT segments, or whatever products are used in this particular sector, specifically it will benefit a lot to the EPC companies because they will get the contracts and then they will buy the products.
Actually, on that note, let's bring in Amit as well. Amit, exact same question to you. You're right in the thick of the action as all these numbers and targets are being discussed. What's the opportunity? If you could put some numbers to it.
So, Subhi, thanks for having us. I think, first of all, to put context to this plan, I think it's amazing. It's very futuristic. It's very progressive. And I'll tell you for 3 reasons. One thing is to add capacity to meet future demand, right? Today, our per capita consumption in India is literally at 1255 kilowatt hour as of 2022. US is 9 times that. China is 4.5 times that. So for the next 10 years that this plan rolls out the targets that you all have in front of you, I think for everybody in the value chain, and especially for large EPC companies which have technological difference in terms of capability, I think it's a runway of 10 years where there's going to be unabated work. I think, but more importantly, the reason why this grid is very progressive is because if you've noticed, they've spoken about 4 very, very important things. Other than adding capacity, what is more important as the goal is to ensure reliability and sustainability of the grid, right? Today, we are also talking about 3 areas. One is ISTS that you would have read, making sure that power is wheeled across all states so that we have uniform distribution of power. It doesn't matter where it's getting generated or where it's getting consumed, right? It gets into a very stable pan-India grid. Second it is going towards HVDC technology, right? We've only done 33 megawatts of gigawatts of HVDC so far till now, right? Year to date. And I think in the next 10 years, we've got to add exactly the same amount of HVDC networks. Now, HVDC is, as you know, it's high voltage, it's direct current. It reduces the transmission loss over large distances when electricity is carried. So I think our grid becomes more stable, it becomes more efficient, it becomes more reliable. And all of these things in this plan are very, very progressive. If you look at also Osowog, I don't know if you paid attention to that. It's between Maldives, UAE, Saudi, and Singapore. We are also talking about one grid where there's one sun and one grid. Now, all of these places, we are present, for instance, and our cost of generation in India is much lower compared to these countries. And there can be a transfer over a period of time also if this plan gets implemented. So to answer your question, I don't have exact numbers, but if you look at all the capacity targets, whether it is for pump hydro, whether it is for renewable, whether it is for transmission capex, substation, they are very, very large numbers. And we being one of the top 2-3 players, I think for KPIL, it holds really good that for next 10 years, we have absolutely a clear runway. We are more concerned about how do we enhance our management bandwidth and capability to execute all these orders over the next 10 years, right? We've had a lull over the last 4-5 years, and now suddenly there's an explosion in terms of amount of work that's coming. We've already established our design centers for HVDC and other networks in Baroda, in Mumbai, in Noida, in Brazil, and in Sweden. And I think they're constantly focusing on how to use AI, drones, helicopters, etc., to use in our execution capability, and hence becoming faster, more reliable than we are even today by using technology in our execution. So work doesn't seem to be a problem.
No, I get that. I think you've given us, you've given us a great backdrop, and it's a good position to be in, right? You're saying next 10 years, you will be a very, very busy person, along with everybody else in the company. But just help us understand. But just help us understand, I mean, as a company, given the extent of the opportunity, will you be present in all parts of the value chain when we're talking about, upping the ante on transmission infrastructure and grid connectivity? I'm just trying to get more granular details on how you will pivot or how you will capture the opportunity in what segments. And again, the same question, not a roadmap for today, but if we talk about the next 2 to 3 years, compared to the targets that you had you already factored in this kind of a network and grid expansion? We're just trying to understand if the announcements yesterday mean a much bigger business opportunity.
So let's look at us in the next 2 to 3 years, right? In the value chain, you start with manufacturing and then you go on to execution. As you know, today we manufacture transmission line towers. We are one of the largest manufacturers of transmission line towers. But because of this roadmap, there is pump storage hydro, there is hydrogen plants that are being talked about, as a result of which it gives me an opportunity to expand my current manufacturing portfolio immediately to look at hydrogen electrolyzers and other parts of the value chain in transmission and substations. Second, so far as my other businesses are concerned, we have a very large water division, and once pump hydro storage kicks in, it helps my water division to get business, which is a completely new segment that opens for us. We already have the capability to do those. There are large hydropower plants being talked about. We have a very large heavy civil division, and that is a new opportunity set altogether, which we've not done before for our heavy civil division. So it's, across the value chain from manufacturing to water business to heavy civil and, of course, transmission and substation. I think for the next 10 years, it opens a huge runway for us.
This is interesting. You just mentioned a couple of new verticals as well, hydrogen electrolyzers, heavy civil work, along with everything else that you already do. Very quickly, gentlemen, because we have, I think, less than a minute left on the conversation. So, Amit, you'll have to start thinking about money and putting more capex to work as well, right? Because you're talking about a bigger opportunity here. Maybe some sense, again, I'm trying to get back to some definitive numbers. Capex this year, and now with this kind of a backdrop, what is the increase in capex that you would look at?
So Surbhi, we've already said we're going to do around 450, 500 crores of capex this year. But the good thing about transmission networks is that it's not a very capex intensive business. What you need is engineering capability, which we already have. The incremental capex is not as heavy as some of the other sectors like heavy civil, etc. So in that sense, I won't be able to give you an exact number. But I don't see capex being a problem for us given the strength of our balance sheet to...
No, because you mentioned newer, Amit, because you mentioned newer businesses like getting into electrolyzers, like heavy civil. That's why I'm saying, I'm trying to understand the company pivot.
To be honest, we don't have plans yet because we still have to see what technology works best, etc. So I will be able to tell you that as we firm up the plans going forward.
Okay. And Mr. Gupta, very quickly, same question to you from a company perspective, additional investments, or a revenue number, any number that you can leave us with, perhaps?
You see, we have already undertaken a very heavy capex in our new greenfield project coming up at Sanand near Ahmedabad. It is a capex of almost 1,800 crore rupees, which will be done in this and next financial year. And it will have a compounding effect of our turnover. We will be able to increase our sales by almost 5,000 crore per year from that project. And we intend to grow by 17 to 18%. Secondly, we are going to bring large HVDC extra high voltage cables in that plant up to 525 kV. So in this yesterday's announcement, lot of HVDC new lines are going to come up, and I think many of them may be through the HVDC cable, not through the overhead lines alone. So this is going to benefit us like anything in terms of enhanced use of extra high voltage power cables in HVAC as well as HVDC.
Okay, all right, gentlemen, great conversation. Thank you very much. This is pretty futuristic stuff, and we hope to get more granular details as the plan rolls along as well. And good luck to both of you in terms of making the most of it. Thank you for joining in today. Well, that's sort of a curtain raiser on what to expect from some of these power companies on the transmission side as the National Electricity Plan rolls along. We'll take a break. On the other side, Avinash Gokhandi of Zaggle Prepaid Ocean Services will join in to talk about their new acquisition of span across IT solutions as well as mobile wear tech. More details coming up.
And we're a long way off from that climax. Or
I hope I'm not proven wrong next week, but I think this has legs to go.
This has legs to go. PSUs, capital goods, real estate, infrastructure, that's essentially been the leader of the bull market. But people, defense, etc., right? That part, it looks like we're starting to rotate. People are starting to rotate out of that.
Which is inevitable.
Inevitable. You think that's done, or is just like a pause and refresh case here?
Again, in terms of market cycles, when you see the leaders of every cycle, then they go to sleep for a decade. So the leadership of 2000 to 2007, which you were earlier alluding to, was indeed commodities and infrastructure, power, real estate.
Right.
And then the excesses which happened in that period made them complete pariahs. So if 4 years ago, we were on a show and Ramesh and I remember we would talk about PSUs and everyone was like sniggering, like what's wrong with these chaps? But because the
Welcome back. Well, let's focus on Zaggle Prepaid. Well, that's the next management on the show. The stock has surged, has more than doubled actually in this calendar year itself. The company has announced stake in two firms. They've acquired stake. They bought 98% stake in span across IT solutions for around 32 crores. And they've also invested around 16 crores for around 26% ownership in mobile wear technologies. To discuss this and more, we have Avinash Gokhandi, the co-promoter, MD and CEO of the company. Hi, Avinash. Good morning. And interesting aggression is what you're showing. Some inorganic growth. Let's talk about the first one then. Span, you're going to be paying around 32 crores, but the revenue that's last reported is less than 5 crores. So what's, justify these valuations for us? It's a little bit baffling, but clearly you believe there's big growth potential and there's a big scope out here. So from this 5 crores, what is the potential of this company, and give us the rationale?
Good morning, and thank you so much for having me. I like the term that you used, aggression. We would like to look at it more as, our belief in what we are building. So look, we'd already acquired 45% stake in Span Across. The brand name is Tax Spanner. And the thesis is very simple. The whole ecosystem has evolved in the last decade or so. Tax filing has gone up. There are more and more individuals and companies filing, whether it's their income tax, whether it's their GST. And we are seeing this complexity increase because the way people's salaries are, getting augmented with rental income, with investments, with other, sources of income, filing taxes for millennials has become increasingly more complex, and they need support. Span Across does a great job on that. We've seen, them being able to service companies like HCA, like Accenture. There were a whole host of these contracts that come to us as well, and that's extremely valuable to us. The other, of course, factor is the GST filing, right? And GST filing for mid-sized companies, smaller companies. We have a whole host of channel partners, vendors who need support in being able to do this well. And Tax Spanner brings that capability. So we've seen tremendous traction in the partnership in the last 6 months, and that's why we've gone ahead and made the acquisition.
Ash, business-wise, not questioning you. There's definitely a good rationale that you've gone ahead and bought this, and you're paying 32 crores. My question to you, and from the stock market perspective, they have appreciated this move. The stock price is up more than 4-5%.
Right.
But how do you see the revenue scaling up of this acquired business? From 5 crores, where is it headed?
Well, we don't look at it from a standalone basis because the synergies are superb, right? The synergies are on both levels. One, this business itself benefits from our large base of corporate customers. We have more than 3,100 corporate customers. We have more than 2.9 million users. They are able to offer tax filing capabilities to all these, companies and users. We also have a very large base of channel partners who are dealers, distributors, retailers for a variety of companies and vendors of a variety of companies. They are capable of serving this audience as well. And that number is, running into lakhs. And that's where we believe that, revenues for the Tax Spanner business would grow. Revenues for the Zaggle Save business would grow because we are getting more, stickiness from our corporate customers.
Avinash, hi, morning. Prashant here. Good to speak with you again after a while.
Yes, Prashant.
So my question was, so is this a service you throw in? I mean, is this because we've got lots of these companies, right, who you can file your tax return for, as low as, I think, $500, maybe lower, lots of these. So this will be like an add-on or sweetener to that you throw in to your existing relationships, or this is really valuable that you can make money of it, if you can give us a sense.
Prashant, it's really valuable because you can make money on this. It's also an add-on, right? And today, if you look at corporate customers want a holistic, comprehensive solution. They want, capabilities for their employees where they're taken care of end-to-end, right? So we already are a market leader in the employee benefits segment, and this becomes a great addition to that capability. From a corporate perspective also today, a lot of companies, we may not necessarily acquire all users in a company, all employees in a company, because all employees may not be incurring expenses or claiming reimbursements from the company, right? But everybody needs to file taxes.
So what's the TAM for this from your universe? Forget about selling this to new customers, but in your existing universe,
yes.
Just some idea. Obviously, you've done internally. You've discussed this. What's the TAM? How many people? And would you charge per filing? I mean, would it be something like that? Yeah, go on.
So So it would be a part of our bundle in terms of our SaaS revenue, Prashant, right? So we'd be able to increase our SaaS fees per corporate. The number of corporates that we think would be interested in this sort of a service would run into thousands, right? Because every company has employees who have these challenges. We also sit with a very large base of as I said, SMEs who are channel partners or who are vendors. So we have more than 500,000 of those who are active on our platform, and that's a large base to whom you can offer both, IT services, IT filing services, advanced tax, your GST. So that's another big opportunity that we see that we'll be looking to tap into.
Avinash, hi. When one looks at a lot of the broker notes and the research around Zaggle, one thing that was constantly popping up is the expectations from your vertical called Zoyer, which is where I think you target the mid-segment, the mid-market clients, right? And now you just spoke about, this latest acquisition. So I have a slightly bigger picture question for you. Tell us, if we break up the company, there is obviously the employee benefits business, there is Zoyer, there is Forex cards. So just tell us, I mean, in terms of the revenue breakup, how will the individual key verticals grow over the next 1 year or so? And all the optimism around Zoyer actually leading that growth, and I think you're talking about growing in international markets, etc. Is all that optimism well placed?
So yeah, thank you for that, Subhi. It's very well placed in our view. We've seen tremendous traction in Zoyer. 40% of our spends are now Zoyer, right? Last year, if you look at our program, last quarter, if you look at our program fees of about 126 crores, 55 crores came from Zoyer, right? So Zoyer has really taken off, and Zoyer was zero on 31st March 2023. So there's obviously, and if you think of it logically, right, everybody needs vendor payments, everybody has vendors, everybody files for GST. You have petty cash use cases for NBFCs, AMCs, brokerage houses, retail chains, very large retail chains, small retail chains. Everybody has petty cash challenges, right? So these are use cases which are very, very ubiquitous. You also have the standard use cases around SaaS spends, marketing spends, like Facebook, Google, AWS payouts. So you look at all the places where people are spending, people as in companies, and they want a better handle of how to optimize on that. They want to be able to have evidences of those spends, that those are bona fide spends, and they want to have limits and policies on what basis these spends would be authorized or allowed, and married to a payment instrument which is going to be able to allow you a seamless recon, which is what we offer here.
So, okay, just to go back to the numbers to round things up, the last guidance given by the company for this year's growth was, I think, 45 to 55%, with an aim to hit EBITDA margins of about 10%. Are you on track with that, or is, say, Zoyer growing and some of the other acquisitions that you're doing, is all of that coming together in such a way that you would be exceeding the guidance on revenue or margin?
Yes, so we are absolutely on track for that. And in fact, in the last analyst call also, we had said that depending on how our numbers shape up at the end of Q2, we may up the guidance. And, Q2 seems to be shaping up really well. All the growth that we're talking of should be 45 to 55% is organic. This is not coming in from the acquisitions. Those would be like icing on the cake. And that's how we are looking at it. All the revenue that we're talking of is essentially from Save, Propel, Zoyer, all the existing businesses that we have. Right?
And within those existing businesses, if you could rank them in order of growth, what should we expect? Save, Propel, Zoyer, what would be the order?
Zoyer, Save, Propel, right? That's the order. Zoyer being, the larger, market potential, because everybody has vendors. Vendor payouts are also larger. And followed by Save. Employee expenses is really taken off. Just today, I saw in Economic Times a large article about how business travel is doubling. So business travel is very, closely linked to, expense management. As business travel grows, your expense management capability has to mature, because, everybody is traveling. How are you going to be able to make sure that those are, according to the company policy? There's no leakage, there's no fraud. How do you make it easy for people to file their expenses? There's so many nuances and factors here.
And 10% margin this year, EBITDA margin?
EBITDA margin is our guidance. We are staying, consistent with that. We'll be around 10%, and that's what we are aiming for.
Right. Top line growth of what would 45 to 50%? That's the range, right? What you've said.
45 to 55, which we may increase, Prashant, after Q2 numbers.
Okay. All right. That's interesting. You don't want to say by how much, right?
Well, too early, but we're the numbers are looking good. Let me put it this way, really good.
Okay, numbers are looking really good. The stock's also looking really good. On margins, what I have is adjusted margins are between 11 and 13% for the full year. Is that...
So that was last year, Prashant. This year guidance is about 10%. And because we're capturing market share, that's what we're going to stick to right now.
Okay, all right. Thank you very much for joining us, Avinash, and good luck as you continue to execute. The market likes what you're saying. Stocks up 6% at this point in time. Now, two big IPOs are set to hit the street as market regulator SEBI has cleared food delivery and quick commerce players Swiggy's confidential IPO filing. The Korean automaker Hyundai's $3 billion issue could also be India's biggest ever. Let's talk about this and, of course, all the block deals which are happening non-stop as well. Neha Agarwal is MD and Head of Equity Capital Markets at JM Financial Institutional Securities, and she's with us to take some questions. Neha, good morning. Good to have you with us here. Thank you for your time. So demand is there, and, of course, supply is rising to match it. Just a quick word on Hyundai first, if you will. $3 billion, whenever you have a large issue comes and markets have already done very well, people use historical sort of, stories about large IPOs and how they've kind of acted as a bit of a issue for the market. How would you look at it? So the basic question is, will this kind of supply overwhelm demand, or you think the market will just sort of deal with it and move on? What's your sense?
I think, Prashant, every supply of paper in the Indian markets is making its own demand. I would look at it in a very different lens. I think what we're witnessing right now in India is unprecedented era of economic development. Just look at the macroeconomic stability, the pro-business policies which are coming through. All the FI inflow mind share which India is attracting is one of the highest. So it really, every paper, whether it's IPOs, QIPs, blocks, are making massive demand history. Look at Bajaj Housing, right? It made history in the kind of demand it got through. Markets are stable. It's doing extremely well. Similarly, I think Hyundai also will not be an aberration to the market. You're going to see huge reception both from the FII and the domestic community for these transactions.
So, I mean, it gets absorbed and we move right back on, right? Or you think it could, I'm talking about the next, say, 2-3 months or so. You got many others, like Vari is coming. There is the NTPC green issue, which is coming. Of course, the two that I already mentioned. Do you think the ask price will be secondary markets consolidated a little bit, or you think, what's your sense there? Yeah.
I'll give you two data stats, right? If you see first half of financial year 25, we've already clocked in about $8 billion of IPO and about $7 to $8 billion of QIP, which is in a way akin to primary capital raise, right? Because all of that money is going into the balance sheets of companies which are looking for growth. So $15 billion of equity inflows, equity of supply of paper has come through in first half. And the way we're seeing pipeline is another $20 billion of IPOs and another $10 to $15 billion of QIPs in the offering for the next 6 to 9 months. And if you ask me, the most intuitive question will be, is there enough demand for these kind of papers? And my answer would be yes. Because as long as it's sustainable business models, as long as the cash flows are strong, great management team out there, investors have been extremely receptive.
Neha, just one question. So take all that, right? I mean, let's just talk about the IPO. IPO funds which are being raised. Have you looked at how much of the money which is being raised is going into the company? How much of it is growth capital? How much of it is investors getting an exit?
Yeah, so the first half of this financial year, it was actually 50% of primary and 50% secondary. But what I'm seeing in all the latest offerings that we're doing, I wouldn't be wrong in saying a very high delta towards movement towards primary capital, which is growth money actually going into the company, which could be in mirroring a deleverage to growth strategy. A lot of deleverage is happening, is a lot of growth capital expenditure which is coming through. Half would be at least 60 to 65% of primary raise, which is growth capital through IPOs.
Okay, got that. So
but Prashant, I don't think we should forget QIPs because QIPs is all about primary raise, right? And actually, first half, we saw more QIPs in Indian markets than IPOs. And I think that trend will continue. Because a lot of capital expenditure comes through QIP. Sorry, Prashant.
So from here to the end of the financial year, what's the pipeline according to you looking like? IPOs and QIPs?
Would be about $30 billion at least.
20, so, both put together? 30.
Yeah, so at least 15 to 20 of IPOs and another 10 to 15 of QIPs.
Okay, this is till March 25, right?
March 25, yeah. We've already done about 15 in the first half and another 25, 30 to go.
Wow, it's going to be a big year. What's the, when you speak with the investors and pitch it to investors, etc., all these issuances, where is maximum interest? I mean, is it everywhere? Are there any sort of hot areas? I mean, in the US, for example, the big overriding theme is AI. Are there any themes here? The thing about India, of course, is there is so much, right? So many sectors, so many new emerging sectors, old, new, everything. I mean, but are there any preferences investor-wise?
Before I get into the sector thematics, I think one thing which is driving a lot of cornerstone conversations is the big E, which is your earnings. 2 years back, we were seeing a lot of price to sales, IPOs getting valued off revenue. But I think pragmatism has come through. There's been constructive conversations around earnings. And now it's more about EV, EBITDA, and price to earnings. So a lot of businesses which emulate earnings trajectory, where there's unit profitability, there's cash flows, investors are getting a much higher mind share into that. Coming to sectors, I would think renewables is one sector apart which is getting a lot of interest. You will see more than $4 to $5 billion of fundraise in this sector. It could be via IPOs or QIPs, because one thing is that the IRR metric of this sector is phenomenal now. So investors are far more receptive to understand this sector. There's great interest from foreign institutional investors also. So renewables is one space. The other one would be overall manufacturing. I think that will be the key theme, even overriding this sector. It could be in the form of precision equipments, autocoms. We did a couple of QIPs last week, which was in the autocom space. Phenomenal response. I think the trend will continue for these two sectors as we speak.
All right, Neha, we'll leave it there. Great conversation and great insights. Thank you very much for joining us here on CNBC this morning, and look forward to our next one soon. Well, we'll take a quick commercial break here. We're going to just look at the market for a quick bit before we do that. I think 44 higher on the Nifty, 26,050 is where we stand at. So take that break. Mitesh is going to be back with us for some technical ideas. Stay with us.
So steep that it's eventually an investor's job is about valuation. Like I said, the greatest Infosys may not give you the return, and the what so-called poorest PSU may give you the best return. So it was a mean reversion trade which happened, and of course all the right policy things happened for infrastructure and defense and railways and so on. So you go from being what I call terrible to bad is a rate of change, but you went from terrible to being good.
Yeah.
So that rate of change is so dramatic that's what the markets have discounted.
And now maybe to great.
And now you're imagining it to be great. Some of them may make it, but most of them won't. So I would be very, very cautious in those kinds of places. And typically these are not high return areas. By definition, if you make 25% IRR in an infrastructure business, the cost to the consumer, which is the average public, is going to be too high. So your money made is really on leverage, and therefore the return on equity comes in that business. So. And people are shy of doing leverage after, again, the last cycle. And the flip of it, to just complete, the leadership of the last cycle was all the high-quality businesses in the last decade, which were all getting re-rated. Asian Paints, Page Industries, Kotak Bank,
consumers, retail.
even, and including banks, because banks became 30% of the index. And you're seeing that getting corrected, that Kotak, HDFC haven't performed for the last 5 years. Again, great companies. But it's the excess of that which is now getting reverted back. And now they've become so hated that when will HDFC move? And there are memes on HDFC doing the round the way it was for ITC. And then you saw the way when ITC moved, it just doubled before anyone realized it.
You think...
so things like that tend to happen. I can't forecast what will happen in...
But you're very bullish on the financialization theme.
I am very much.
Welcome back. So let's quickly look at the market and get some more trades going with Mitesh. Mitesh, how are things appearing now, and what are the individual calls you'll go with at 10?
Yeah. So things are pretty okay. Both the indices were quiet in the opening and they've kind of pulled back again. So I think it looks pretty good to me. As I said, I think, declines to about 25, 850, 880 is the buying zone. And maybe if it moves higher, we'll look at a higher trailing stop loss level. That is also your trailing stop loss level. And IT, I think, is picking up pretty nicely. So there could be some movement there in the IT stocks. I have a buy on HCL Tech for targets of 1820 and a stop at about 1780 can be looked at. And the other one is ITC, which is just on the verge of making a fresh high. So buy here once it crosses day's high of 523. Take a stop at about 516 and look for targets of 540.
Okay, all right, got it. Thanks for that, Mitesh. We'll touch base with you again during the course of the day. Right now, let's look at Trent. This stock's up about 3%, and it seems that there's some favorable brokerage commentary that seems to be supporting it. Nimesh, what's up?
Well, Sirbi, there are a couple of reasons why the stock is buzzing in trade. Don't look at today's 3% move, but look at what the stock has done in the last 1 year or so. It's been a big outperformer, almost 2.8 lakh crores of market cap now. So that's the kind of company that's been now Trent. As I said, a couple of reasons the stock is buzzing. The first one being Citi has put out an initiating report on Trent. They've initiated a buy with a target price of 92.50. They are the most aggressive as far as target price is concerned. Now, Trent has and they've actually added Trent to their Pan-Asia high conviction buy list, so focus list. So that's the reason why Trent has been buzzing. As far as company is concerned, the company has seen a big transformation from a single format to a multi-format and a multi-category company, which has led to a revenue CAGR of almost 36% in the last 5 years. From here on, for the next 4-5 years, Citi sees a revenue, EBITDA and PAT CAGR of around 40 to 50%. So that's the kind of growth that Trent is likely to report. That's the first reason. The second technical reason is Trent is getting added to the Nifty effective from tomorrow's close. Now, I was looking at some alternatives notes, and most of them are suggesting that this will lead to an inflow of close to $670 million, which is equivalent to almost 74 lakh shares. It's a thinly traded stock, so you need to see if there is a big supplier who can provide this kind of liquidity tomorrow when it's get added to the Nifty. So, as I said, two specific reasons the stock is buzzing. One, the Citi initiation, and two, the technical reason that the stock is getting added, which will lead to an inflow of close to $670 million.
All right. Thank you very much, Nimesh, for that. That's an interesting one. Appreciate it. And thank you for getting us that. 3% higher on Trent, and what, of course, has been one of the best performing wealth creators over the last couple of years now. We'll take a break. We are back. It's The Economy with Lata, and we'll connect with Aishwari Khandelwal of India Ratings and Research, and also Alok Misra of Microfinance Institutions Network, and we put the spotlight on the MFI space and the troubles there. Stay tuned.
The magic one that everybody is talking about at this point in time is AI and what AI can do, and specifically generative AI. How do you see that linking back to the efforts on the healthcare side, the innovations that you're working on? I mean, how transformative is AI likely to be, or are we on the cusp of seeing that kind of transformation?
Usually when you get new technology, it's applied to in the rich world for those who are well off. And what we'd like to do this time with AI is make sure, both in terms of discovering new interventions for nutrition or vaccines or drugs, and helping give people health advice, in voice and their native language, that we actually bring these AI advances to those most in need. I mean, after all, where's the greatest shortage of doctors? It's in developing countries. And so the foundation is leading the way by giving grants to various people and pushing this forward, even for a topic as complex as nutrition. The AIs are going to help us understand things faster than we would without it.
If you could do a startup all over again and focus on AI, what would the niche be that you would like to address?
Well, if you could go back to my school days even, and then I was saying, hey, how do we make software as smart as human beings? And I, was constantly thinking about it. I underestimated how long it would take, but here we are on the cusp of that. And so
welcome to It's the Economy. The first quarter was known to be a troubled one for microfinance companies, since many of them, and the list will come up for you, Fusion, ESAF, Cridag, Bandhan, Equitas, all of them reported, as you can see, higher gross NPAs in Q1 of FY25 compared to Q4. But what has rattled investors is the disclosure made by Fusion just a few days ago, when it said that it will have to raise its provisioning from the originally estimated 350 crore to maybe 500 to 550 crore. Now the buzz in the market is, among the investor community, is probably there are microfinance borrowers out there who have 6, 7, 8, 9 loans from various microfinance institutions. So there seems to have been clear overlending and probably unbridled lending. There have been some safeguards put in by the MFI and the Microfinance Institutions Network, but we will have to yet to see the results, because Fusion is giving the impression that second quarter is going to be as bad as the first quarter. Let's ask the experts. Aishwarya Khandelwal, the Associate Director India Ratings, who has put out an excellent report last month, and Mr. Alok Misra, the CEO and Director of Microfinance Institutions Network, the MFIN. Gentlemen, good morning, and thank you very much indeed for joining us. Well, Aishwarya, your report is about a month old, but are you getting a sense that September has been worse? I was under the impression that as the rains come, rural India will actually have more money. But what is the sense you are getting in the last 1 month?
So, yeah, I mean, once the disciplines goes away in this sector, it takes normally 1 or 2 quarters to bring back the discipline. I think so. We have written in the report also, it will take another 1 or 2 quarters to bring back the situation. I mean, the collection efficiency is getting back to the normal. Normally, the second half of the year is when the disbursements, 60% of the disbursements takes place. So normally, second half of the year is good quarters for the sector. So mostly fourth quarter when we could see some improvement on the ground. Third quarter, it will start improving, but I think fourth quarter, when we will see the start improvement.
Aishwarya, I think I asked you the second question first. Let me ask you the first question. Just detail to our viewers, what is the extent of problem that MFI companies are facing?
Right. So I would start, post-COVID-19, with the implementation of the harmonization guidelines and the removal of the interest rate caps. So there was substantial increase in disbursements by the microfinance companies. So the AUM has grown by 25%, 26%. So what this has led to, the average outstanding per borrower has increased by around 25% over the last 2 years. Plus, there was also increase in the interest rates by the microfinance companies, which has increased by around 250 to 300 basis points. So overall, the debt obligations for the microfinance borrowers has increased by around 30% over the last 2 years. And compared to that, if we, use the proxy as wages, it has increased by only around 12.5%. So clearly there is an over leveraging which has happened over the last 2 years, and that we are seeing it now. The heat waves and the elections were just the triggers which has brought this thing up. But I think the things needs to improve now. Going forward from the second half of the year.
Got it. So basically over-lending, inability to collect during the very hot summer that we had. Some companies even reported high attrition and, as you said, higher interest rates. Mr. Mishra, good morning to you. Thank you for joining us. Well, I think MFIN gave an advisory to your companies to reduce the number of loans per individual, what you called guardrails. Have you seen any improvement? What is the average? It looks like there are 4 or 5 loans at least per borrower.
Okay. Good morning, Lata. And because this is a very important topic, and I think Khandelwal also from India Rating said a few things. Let me give you a little bit of time. I will put things in perspective and come to your question. If you look at the data, because we are talking about 2 critical things. One is over-lending and over-leveraging. And I think he also referred about interest rates. First, I will just give you numerical data, empirical data. As per the data which we rely on is the Credit Bureau. As per the Credit Bureau data, at the end of June 2024, 84% of clients had 2 or less than 2 lenders. So what I'm trying to say here is that the problem which is being made out to be that everybody has 5 loans, 5 lenders, 6 lenders, 7 lenders is not true. Nearly 5% borrowers are 5 to 7% borrowers are there who have more than 4 lenders. And there, the ticket sizes also, if more lenders are there, will be more. So the outstanding will be more. So we saw that in some cases, such cases, there can be a problem. So we introduced the guardrails in July. So the point what I'm making here is that the thing which was being talked about is that the phenomena of 6, 7, 8 lenders is widespread is not so. That can be verified from credit information companies' database, easily available. Second thing I think we talked about was that the average loan outstanding per borrower, which is average outstanding, credit outstanding of microfinance loans per borrower has grown very high in last 3 years. I would give you the figures from in March 20, it was 39,353. As of March 24, it has gone to 55,260, which is the CAGR of 8.8%. If you discount the inflation numbers, the real growth would not be too much. And the third point he made was about interest rates. Yes, interest rates have moved up 150 basis points to 175 basis points because of the reasons which I have earlier told about it. But let me tell you that if I take a 20,000 rupees loan and at 24%, at 22%, and at 20%, in 4%, the EMI difference works out to be 99 rupees. So that is not much of an issue. So there are other factors behind
Mr. Mishra, 1 minute. Your numbers, let me confront you with other numbers that we are getting.
Yeah, please.
If you looked at the MFI numbers, look at their GNPA, look at their gross NPAs in the first quarter. All of them have reported 2 to 3 percentage points more, not 20, 30 basis points. 2 to 3 percentage points more. Look at Fusion MFI. From 2.89, the bad loans have gone to 5.5%. ESAF again from 4.7% has gone to 6.6%. Equitas SFB 2.6 to 2.73. And even Bandhan, which is one of the scheduled commercial banks with a large proportion of microfinance loans, there is a good 40. None of the other banks have shown this kind of increase. So, you are giving me an average number of, loans per borrower. But as Aishwarya's report points out, it is not evenly distributed. There are a large number of loans given in UP and Bihar, where the per capita income is not growing at the same pace that it is growing in Tamil Nadu, where you can give the same 49,000 or 50,000 rupees outstanding per borrower. But per capita income is much higher in Tamil Nadu. It is not that way in Bihar and Uttar Pradesh. So, the numbers are saying that there is a problem.
Yeah, I will. So you talked about the GNPA numbers, or the portfolio at risk numbers. And let me say that even on industry-wide, if we track the portfolio address 1 to 180 days, from March to July, the last figures are from July, it has gone up by 140 basis points. I admit that. But what I'm trying to say, Lata, is that it is not that we don't feel that the portfolio quality should not come back to the earlier levels. But what I'm saying is that the diagnosis should not be simplistic. There are a host of factors. Like you said about heat wave, that was one factor in May and June. But post that, we have been having other factors also. Like, for example, I would say in many parts of India, there is a movement which goes in various variants, which is asking and inciting borrowers not to repay. I would also not deny that in some pockets, maybe in some districts, there might be over-lending. So there are a host of factors. We cannot simplify to that there was an oversupply and in all over India, and that is why the NPA has gone up. We have to look at place by place.
I take that. Of course, there are a whole host of reasons. What I'm now trying to find out is the end game. You know, there is one brokerage report which is worrying after looking at the Fusion disclosure that the NPAs over there are looking higher than peak COVID times. So let me come to that question. You know, where is the end game? Aishwarya, when do you see it declining and how? Will it only be when the promoters put in more capital? Is there any other way it will get solved?
So as of now, I mean, the large NBFC MFIs, I think, are adequately capitalized. Most of them are operating at around 3.5 times of leverage. I think the more challenging situation will be for the small and mid MFIs. The funding availability for them would be a challenge from now on, because I mean, the lenders will be cautious in lending to them. So I think the growth levels of the overall industry will come down to around 15% in the current year. And credit cost for the overall year, we expect to, for the full year, expect to increase to around 4.5% for the full year. So I think from the fourth quarter onwards, I think situations will start improving. Yeah.
Yeah, we do have a very good harvest. It's a La Nina year, so hopefully that should, alleviate. Mr. Mishra, Dr. Mishra, what's your sense? Have you been in? Has RBI reached out to you? How do you see who is bringing the extra capital, and when do you think the wheel can turn?
I think that what we see is that if I look at, because September I don't have data, hardcore data, but field reports are coming. So the picture is mixed in September. Some people say they see improvement. Some say it has stabilized. Some say it has gone similar to August. But what the field situation is saying that with the implementation of guardrails, which we have put in, the lower disbursements, I think our sense is by October, by November, you will see good stability. December will stabilize, and in Q4 you will see that we should be back to normal because the harvest is normal. It is good, as you rightly said. The discipline is returning back, and we are taking some additional measures to strengthen processes. That should help us back. On capital side, I think, as Asura was telling, the top players who control 90% of market are well capitalized. They have around 25% capital adequacy. That I don't see much of a challenge.
Okay. Just a very quick one sentence, sir. How do you control people from giving the 5th, 6th and 7th loan?
Yeah. So see, that as you said earlier, when we introduced the guardrails, it is not an advisory. It is from the SRO, the members who are our members. It is a directive. And we check the quarterly disbursements made during the quarter from the credit bureau for every company. And if we see violations, we will take the enforcement action as per our charter.
All right. That's good to hear, sir. And anyway, fourth quarter is not that far away. Thank you very much, Aishwarya and Dr. Mishra, for throwing more light on this budding problem. One hopes that it is not more than a couple of quarters away in terms of solution. Wrap up on Bazaar. Chart Pass is coming.
I applies the lens of the foundation. If I was somebody young, sure, I'd compete with, OpenAI and all these people. But, now I'm in the stage of saying, how do I help other people working in AI apply it to those most in need?
As far as India is concerned, the role and relevance and the significance of India, especially as far as the foundation is concerned, and what you're hoping to do on the innovation side.
So India's the country the foundation does the most in. Other than the US, that's our largest group. We have a great team there. We work a lot with the national government and many of the state governments. And not only do we see in areas like nutrition or using ultrasound to detect a difficult pregnancy, we're doing a lot of studies with our partners there, which will have a benefit for India. But also, because the digital infrastructure in India is so strong, we can try things out there and take them to other countries. The digital infrastructure itself is a great example where the leadership has laid that foundation, and now both India and Gates Foundation are going to Africa and other places and saying, hey, you should do the same thing.
Was there a specific learning from this trip to India for you?
Well, it was pretty amazing in Odisha to see how the digital approach was connecting with farmers, that they had categorized which farmers were in which location, what were they growing. And so when they would see crop disease outbreak, they could notify them. If they saw weather coming, they could notify those farmers. If the market prices were changing, they could help guide the farmers. And so the digital revolution, bringing that into that agricultural sector, that was the first time I saw that at work. And it's being scaled up in India. Now we'll take it to the rest of the world.
News which just came out, a government-to-government deal between US and India to set up a semiconductor fab unit in the country.
Right.
There are elements of technology transfer, etc. That's the cutting edge, semiconductor, and sort of plans to localize production. Right. I just wanted your thoughts.
I think it's great. Right? I would love to, India's quote a non-aligned nation, and I don't think we should be asking to align, but I think it's great that we're reaching out to each other, helping each other, investing in each other, and I would love to see far more of that. And this has two elements. One is the national security part, which of course all countries have an interest in. And the second is just, a better economic relationship.
Over the last 2-3 years, we've seen the rise of the so-called industrial policy across the world. Yeah. National security is being prioritized, as you said. Do you see this as part of that, in the context of that?
Yeah. So industrial policy, I'm a little cautious about. I think to combat some of these things and to do things in your country's own interest, which are hard to do economically, you're going to need some economic policy, industrial policy, like the United States has, for rare earths and things like that, and lithium. Every country is different, so the national security needs of
Trend surges nearly 3% after Citi issues a bullish note on the stock. The brokerage has issued a buy rating target price at around 9,250 rupees per share.
Investec issues a buy rating on IEX with a target price of 215 rupees a share. The stock surges after 2 days of losses as the brokerage believes that the company will continue to deliver volume growth of around 44% going forward.
Frontend corrects post-analyst meet. The stock is down more than 4%, even as brokerages like MSN and Nomura issue equal weight and buy calls, respectively.
Hero Motors slips in trade. This after brokerage UBS issues a sell rating on the stock with a target price of 3,350 rupees a share.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me today is Vivek Iyer. Well, Vivek, the market's trading in the green, up close to around 50 points odd, but a lot of portfolios may not be feeling too good because, of that index that's on the top of you. The mid-cap index is trading with a count of around 0.6%, and the breadth of the market is in favor of the bears. So headline index positive, but otherwise plenty of stocks losing the ground a little bit.
That's right. A whole host of stocks, and like you mentioned, the portfolio not looking good. Typically because a lot of mid-cap and small-cap stocks are part of individual portfolios, and that pocket of the market, in fact, for the last couple of trading sessions, have actually seen quite a bit of selling pressure, despite the fact that benchmarks are in the green. But let's welcome Sachidanand Uttekar from Trade Bulls for a technical check on the market. Good morning, Sachidanand. How are you looking at the markets, and how are benchmark indices looking to you currently?
Good morning, Vivek. Good morning, Nigel. I think clearly the market is looking very steady. In fact, it has been a very strong month of September. We've already seen some strong gains reinstated by Nifty Bank as well, which has been outperforming. But if you look at today's data itself, there's a good amount of conviction that 26,000 level should hold on throughout the day. The UI cluster at around 26,100 could be at play, and once we see the Nifty, trending near the same, the probability of a breakout remains open. So we are of the opinion that the market trend has been very steady. The momentum should take the indices of higher further towards 26,270 eventually, and that's why we are still recommending building long positions here. The base at 25,950 looks very strong from a trailing stop loss perspective. So keeping a stop loss somewhere close to around 25,935, one can still deploy long positions here. From an intraday swing perspective, we may see an immediate swing towards 26,110, but eventually we see a further rally towards 26,720, 26,270. When we look at Nifty Bank, I think it looks more consolidative. We have a very strong support built up at 53,900, but on the higher side, there is ample of congestion at around 54,250, 54,400 kind of a zone. So probably we may see Nifty Bank, consolidating within this range, but Nifty may see a very strong rally.
Okay, all right. What about individual stocks?
Nigel, I think the focus has to be on pockets wherein there is a good short covering data. First of all, if you look at some of the IT stocks, they have been consolidating throughout this particular series. We are looking at HCL Tech now. If you look at the data for the last 4 weeks, the stock was consolidating within this band of 1750, 1800. If you look at the 60 minutes chart, it looks like a broadening structure in place. The OI break at around 1800 has driven some momentum. So we are expecting this particular momentum play to continue. We are of the opinion that there could be a very strong confident rally towards 1870 on the higher side. That's why we are recommending building long positions in HCL Tech October futures. The stop loss for the trade should be placed at around 1785, and a positional swing is expected towards 1870. The second stock on our radar is Dr. Reddy's. Now, if you look at the overall structure, the stock has already given a breakout from a falling wedge formation. It has managed to sustain and recover about its 50-day exponential moving average, which is placed somewhere close to around 6,700. There's a RSI breakout on the daily scale above the 50 level, so which is a good strong sign of a recovery. We are expecting this particular momentum to continue towards 6,900. That's why we are recommending building long positions in October futures here, keeping a stop loss somewhere close to around 67.10.
Thank you so much, Sachinandan. So HCL Tech and Dr. Reddy are the two stocks on your radar. Let's now shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Lekha Badlani of moneycontrol.com joins us now to talk about a stock that she is tracking closely. Lekha, over to you.
Top pick is Rainbow Children Medicare, which is the largest pediatric hospital in the country in terms of bed capacity. Now it further plans to increase this capacity by 35% in the next 3 years to reach approximately 2,600 by the end of FY27. Now Rainbow has achieved a revenue growth CAGR of 19% in the last 5 years, and the management expects the momentum to continue and has guided to a revenue growth of high teens for the current fiscal. Now, most of this growth will come through volumes, as Rainbow is seeing good demand traction across its units, while growth in ARPOB would be limited given the price hikes already taken last year. Now, the new hospitals of less than 5 years are currently operating at a lower occupancy, and few of them are yet to make operational profits. However, 4 of the recently commissioned hospitals should achieve an EBITDA break-even by the end of FY25 or first half of FY26. Now, with the ramp-up of new hospitals, Rainbow should see an uptick in volumes, occupancy, and margin improvements in the coming years. Its obstetrics and gynec segment also continues to grow well. Now, we think with the rising middle to high income group, preference for specialized childcare services, and the growing preference for assisted reproductive technologies such as IVF holds ample synergies and growth opportunities for Rainbow. We're trading at an EV/EBITDA of 24 times FY26 estimates. We think the valuation is reasonable to accumulate the stock for the long term.
Okay, Lekha, thanks a lot for that. For the time being, though, we slip into a short break. Come back. We'll continue to focus on markets. We'll also get you some stock-specific action.
Around energy, I think for everybody it's going to be semiconductor chips. So I do think that's industrial policy. I would caution industrial policy when it's used for regulations, bureaucracy, politics, votes, social, and it doesn't have, the twin of permitting. It's not going to work. So you got to be a little cautious when you use it. But yeah, we're going to have some. And like I said, I think it's very important that America and India have a great economic relationship.
Would you agree, though, that in the former part of what you described, industrial policy is kind of taking the lead? Businesses and who you align with, who you want to do business with, building supply chains. A lot of that is now, it seemingly is led by that. I mean, what governments really want to do.
Well, no, it's two different. Governments have always negotiated economic arrangements, stuff like that. If you look at the United States, the industrial policy is a very teeny part of the economy. So it isn't like it's taking over the economy. Right. I think in other parts of the world, it's obviously a much bigger part of the economy. So, but yeah, nations, because of national security and because of what some people might consider unfair competition, there will be forms of industrial policy. If I was a government, I'd be very, very careful. It should be very targeted, very specific. It shouldn't be to protect local industry. It shouldn't be to just create jobs. It should be for a very specific reason. But you're gonna see it, and hopefully it's well done.
Let's talk about the big event from last week, which is interest rates coming down. The Fed cutting by 50 basis points. Do you think it was a bit excessive, given the fact that GDP is expected to grow at 3%, stock markets are at all-time highs? I mean, there's no issue with credit spreads, etc. Indicators are all pretty good, and you get a 50 basis point cut. What do you make of it?
I think it's a lot more ink than it deserves. I think they raised rates to 5 very quickly. They were a little late, which they acknowledged. They raised it to 5. The economy is slowing down. Inflation is coming down, and relative to inflation, even if inflation is 3%, the 5 is maybe a little bit too high. So they made a big step to get it close to what they think it might be. They've got plenty of room to go down, and hopefully we'll continue to exhibit growth with inflation coming down. I'm a little more skeptical than other people about that, but it is happening, and they're just reflecting reality. Yeah.
You've been cautious in the past about prospects and said, well, one has to be prepared for things going wrong. Are you a little more positive now? I mean, this is not a cut when you're facing a recession or things are looking weak. It's like a happy cut. So, I mean, are you a little more...
So my caution is all geopolitics, which may determine the state of the economy. Okay. But it's really the geopolitics that these things, they're getting worse, they're not getting better. There's chance for accidents in energy supply. God knows other countries get involved. You have a lot of war taking place right now. You have American warships being attacked almost every day in the Red Seas. That's my biggest caution. The economy fluctuates.
Welcome back here tuned into Chartbusters here on CNBC-TV18. Well, in an exclusive interview, my colleague Ekta caught up with Prem Kumar Nair, the group CEO at IHH Healthcare, and began by asking him about Fortis acquisition and the long-pending open offer for Fortis Health. Let's hear out a slice of this interesting conversation.
I think this matter has wound its way through the courts, Supreme Court, right, and now it's with the Delhi High Court. I would say a lot of the issues have been resolved, right? And this is probably the last final matter, the forensic by Delhi High Court, which is ongoing now, all right? I won't comment on it, right, because it is going through the courts at the moment. And we anticipate that once it is resolved, we let the court process, go through its, usual route. We will, and then we'll have to decide what to do next. The open offer was at $170. Fortis today is at 600 plus, right? So we will have to make a decision on how we move forward. There are many ways in which we can increase our stake, as you know, right? But one thing's for sure, we will be staying in India and we will be staying with Fortis.
So there's no chance of selling out that 31% stake?
Absolutely not, all right? We have got Fortis, we've got Gleneagles, we've got twin engines of growth in India. And given the attractiveness of the Indian private healthcare market, we intend to stay and grow in India.
But what do you think about this long journey of litigations, which is still not over at this point in time? Was there a time where IHH rethought its decision of acquiring Fortis?
Well, to be very honest, I think there were times when we were wondering what we got into, right? But over the years, most of the matters have progressed and resolved, one by one. There were several matters going on at the same time, right? So most of them have been resolved, right? And I think we feel, right? I don't want to judge what's going to happen, but we feel that we are at the tail end of this matter, all right? And we really will have a chance to go ahead, all right? Both with Fortis and with Gleneagles, all right? And increase our presence in India.
So when do you expect to hear back on the open offer?
No, can't predict that for the moment.
Probably by the end of this year
Hopefully,
or next year?
6 months to a year, hopefully. Yeah.
Okay. Well, this is a hypothetical situation, but if in case the open offer does get approved,
yes,
like you mentioned, the price was 170 rupees. Today, it's over 550 or 600 odd rupees for Fortis in terms of a price. What will IHH do? Will there be a revision of an open offer price on the higher side? What is the decision?
Okay, given that we would like to increase our stake, I think we would have to revise, right, our offer to the other shareholders. So that's probably what it will take for us to do it.
Okay, so you will probably revise the price higher for the open offer if in case you do get that permission to go through. On the other hand, if in case the open offer does face hurdles again, what will IHH do? Will it go through any other route in order to increase its stake? Because currently you do have minority stake.
Yes. Well, first of all, I must say we are happy with what we have at the moment. As I said, we control Fortis, right? Fortis is improving year by year, operational metrics, financial metrics. There's no restriction to their growth. As you can see, they bought a hospital in Manesar, they disposed of 2 hospitals in the south, right? And they're looking at more acquisitions. They've got a plan to expand by 2,000 beds from their current 5,000 beds purely by brownfield expansion.
Correct.
Right? So that's their same store growth, essentially. Right? So Fortis can continue to grow, all right? And we hope there will come a day when we have, years down the road, when we have between the two entities about 10,000 beds, right? That will bring us maybe into the top 3, right, hospital groups in the country. That's our aspiration, right? So I think Fortis can, even with the stake we have now and the current growth trajectory of Fortis, it'll continue to grow, right? But of course, we would like to increase our stake, either increase the open offer, we can do a creep, all right?
Creeping acquisition, 5% every year.
We can do that, 5% every year, we can do that. Down the road, maybe we can look at folding Gleneagles into Fortis, that's another option.
All right, well, interesting conversation there. They could possibly look at revising their open offer price and also look at other ways of, increasing their holding in the listed entity Fortis, though currently they're quite satisfied with what they have. We'll keep getting you snippets of that conversation all through today's training session. For the time being, let's slip in a short break. We'll get you more on markets and stock-specific action on the other side.
Much about the fluctuation of the economy, and obviously the Federal Reserve will try to do its job to moderate the vicissitudes of the economy, but we are spending a lot of money, and in my view, that spending the money causes growth. It also causes inflation, and whether it all moderates, I think it's true for countries around the world. We got to really think through how much debt countries can put on before it causes a real problem. So I'm long-term optimist. Short run, I'm a little more skeptical than other people that everything's going to be great. Markets are pricing things like they're going to be great. I'm putting me on the cautious side of that one.
US has been trying to reduce its dependence on China. India has been and is expected to be a big beneficiary of it. Do you think we are sort of using that full potential right now, or there's a long distance to go?
Well, look, going to China, okay, national security, America was overly reliant. That's not being angry at them. You should ask why we didn't do it before, but in terms of rare earths, semiconductors, penicillin, ingredients for pharmaceuticals, obviously every nation look at it and say we can't rely on someone who might one day be an adversary. That doesn't make them an adversary today, for supply. Just like JP Morgan's always have multiple diverse supply chains, we don't rely on anything. The second one is around disagreements around policy, like if countries are aiding and abetting industries to dominate global industry and beggar thy neighbor, well, that's not going to work either. So you're going to have people, they're going to be hard fought. It's not going to cause deglobalization, but it's important that countries do that. And so, and it's just starting. It would take years. There's semiconductor, you're talking about 5, 10, 15 years. So even if it's going to take place, it's going to take a long time. But companies are doing it on things like iPhone. I know iPhone production. So some things can move quick. Some will take years. Huge opportunity for China. I mean, for India. A huge opportunity for India. People call it the China plus one strategy now, that companies that relied solely on China are going to look at India, Vietnam, Malaysia, Indonesia, etc.
We've got U.S. elections, and I think one thing which both Democrats and Republicans agree on is China. You'd agree with that? I mean, in that sense, what's happening is in a way irreversible. The break in relations, sort of a Cold War.
I think you have to be very specific in this one. I think national security, everyone's going to do. Unfair trade, everyone's going to do. I think because of the Ukraine, the terrorism in Israel, Russia, Iran aiding and abetting, China's kind of on the other side of America in that one. So that's causing a lot of the tension. I think the better thing to do is get fully engaged, which they've done, our government, to try to protect ourselves in national security, unfair trade. And yeah, I think if the war goes on, yeah, there will be contentious issues between the...
Welcome back. You're watching Chartbusters. One stock that's seen quite a bit of a correction today is PB Fintech. The company reveals it plans to enter the healthcare space. Winnie is here with more details.
Absolutely. It's not just been today that we're seeing PB Fintech fall, but for the last 4 trading sessions, we're seeing a sharp fall coming in PB Fintech, almost 15% decline in just the last 4 trading sessions. Now, obviously, the entry into healthcare space, we understand that they want to make this entry. They're exploring that idea, and they want to maybe look at opening up some own chain of hospitals as well. If that does happen, that would be more capex heavy. They would require a lot of investment on that. So because it's going to, require a lot of capex, we're seeing a bit of a fall coming in. Short term, yes, increase in capex, but long term, there's a value creation that comes out. So yes, clearly right now pressure is coming in on the stock because it'll be capital intensive. Company came out with a clarification also last evening, saying that they want to explore, they are looking to explore this. They will continue to look to explore these ideas. But as of now, there's no decision made on this front. So yes, PB Fintech is a stock that we're keeping an eye out on. Last 4 trading sessions, a 15% decline.
All right, thanks a lot for that. We'll wait by to see whether or not the management can join on the channel and clarify their position as well as rationale behind this kind of thought. Well, let's focus on Crompton. That's the other one that's under pressure, post an analyst meet. Brokerages, well, the verdict is split out there. Upasana joins us to tell us more about that. Upasana?
Well, that's correct. Crompton remains in focus as company recently held its analyst meet, and few of the brokerages have highlighted some of the important key takeaways. Now, Morgan Stanley has given an equal weight with a target price of 323 per share. It says that the company has given a long-term revenue growth guidance of mid-teens, out of which it expects 10 to 12% from its base business and 2 to 3% from its new business. The company also expects EBITDA margin to improve by 200 basis points.
Okay. All right. Thanks a lot for that. We'll come back to Upasana, in fact, get more details on that particular meet. Let's speak about Vedanta. Vedanta is going to be considering a 4th interim dividend. So that's going to be interesting, right? That's what's keeping the stock elevated. Now, as we know, it's the best commodity play, but you have that overhang in terms of what is the promoter entity going to do next. Let's highlight what they've paid out so far. In FY25, we're only 6 months into this financial year, and they've already declared a dividend of closer on 35 rupees. The promoter entity, they stand to gain the most because they have nearly around 56% stake in the company. So that's important. And, you'll say, but why are they paying out dividend when they have such big capex plans? Vedanta Resources' core source of income is dividend, the brand fee that they get from both the listed entities, that's in the Sunzinc as well as Vedanta. And also when they sell some stake in these listed entities, they get some money out there. So the Vedanta Resources, debt obligation gets fulfilled with all these dividends. So that's the reason why they're doing this. For the time being, the stock is up close to around 0.5% or thereabouts.
Thank you so much, Nigel. It's one dividend after the other, but I believe this actually helps the parent company,
Indeed.
like you just mentioned. Moving on, market veteran Ramesh Tamani says the Indian market is now transitioning from mid caps to large caps. He also shares his thoughts on the retail participation in the F&O market. Listen in.
जो सेबी की जो रिपोर्ट आई थी अभी 1-2 दिन पहले, वो बोल रहे थे कि retail public who has gone primarily into futures and option trading have lost money. उनके हिसाब से 90% have lost money, which is about 1 crore of people. 50,000 crore रुपया नुकसान किया उन्होंने. 50,000 crore रुपया उसने किया. 50,000 crore रुपये में could buy the complete Tata Elxsi or companies like Biocon. That is the amount of money they lost. So it is bittersweet. मुझे बहुत अच्छा लगता है कि Indian prosperity में Indians participate कर रहे हैं. I feel a bit sad that people are playing in the F&O market without understanding the market. Market is, bull markets have length. Bull market कोई permanently चलता नहीं है. कहीं ना कहीं जाके रुक ही जाता है. We are very lucky, we're very blessed, unlike China, Thailand, Japan, who haven't had new highs in almost a generation. Investors, Indians have constantly seen new highs in the market out there. So very blessed. Having said that, it just seems to me that the market is now transitioning from mid caps to large caps. Leadership has shifted in the market. And typically, if you have a very ferocious rally from this point, that would signal some sort of, ending of the bull market. मेरे को जब लगता है ये जो K-pop के जो shares आने हैं, Hyundai, Samsung, they'll all start coming with IPO soon in India because they're getting such valuations in India. So why won't they encash it out there? That will suck up a lot of market liquidity from the secondary market, and that would be kind of a warning sign of trouble ahead.
Well, some very important commentary coming in there from market veteran Ramesh Tamani. Well, just having a look at, few of the stocks. First up, some time ago, we did the interview with IHH where they mentioned, about the open offer as far as Fortis Healthcare is concerned. Fortis Healthcare, is done quite well after that particular interview. In fact, the stock has seen a bit of a spike. The second stock on the radar, something that you highlighted even in the previous show was Manappuram Finance. Manappuram Finance, Money Control article suggests that they have gone ahead and put the IPO of the MFI arm, that is Asirwad Microfinance, and that particular IPO has been postponed. And in fact, that particular article also mentions that the company has confirmed to Money Control. MFI stress is something that they have alluded to, and also valuation mismatch. On the back of that, Manappuram, it's recovered, from the day's lowest point, but that's another stock that we mentioned. And Hero Moto, UBS has gone ahead and given a sell call. They have a very steep downside risk, from the current level. And that particular stock too, if you look at Hero Moto Corp's intraday chart, almost 2.5% lower. Anything on your radar?
Well, that's right. A couple of names that were actually fancied, and the investors, they like the outlook for these companies, IRDA as well as Bajaj Housing. If you pull up both those two stocks, IRDA, I think, is corrected from more than 300 rupees to around 220 rupees. As we speak, volumes picking up out there. The stock has seen a good recovery. Bajaj Housing Finance as well, it listed at around 130, 135, went all the way to 190. And now that stock, in fact, it's see a correction. For the time being, though, it's pulling back a little bit from the day's low. So keep an eye out on that one. And Easy Trip, we need clarity from the promoter. What are they doing, with regard to their holding in the company, diversification of business as well. Stock got clonked yesterday. Today, in fact, it's pulling back a little bit, up close to around 5 to around 6% odd. But on that note, we'll wrap up on this edition of Chartbusters. That's it from Vivek as well as myself and the entire team that put the show together. Trading Hour comes up next.
That. So both sides, I think, will be fully engaged. Both sides are going to be tough, but I don't think either side is talking about disconnecting.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon
Hello and welcome to Trading Hour. I'm Sonal Bhutra. With me is Hurmaz Patakia. Good morning, Hurmaz. You know, it started on a good note. We are still in the green, maintaining those levels above the 26,000 mark, but we've come off from the high. So that's the first thing right now. So it's very important to see whether we sustain above that 26,000 mark or not, because every time we touch it, there is some retreat that we see already. But having said that, yes, today it looks like a decent day for the benchmarks, at least for sure. And we did see good handover coming in from the Asian markets as well. For now, the Nifty PSU banks and the Nifty IT space, that is contributing to the gains that we are seeing right now. CPSE index, that has been doing well in last couple of trading sessions, that has been seeing some profit booking right now. If we talk about Asian markets, most of them ended higher with good gains actually. Nikkei up 2.5%, Kospi up 2%. We had Hang Seng sitting with gains of 2%, and the Shanghai also higher by 0.7%. So Asian markets strong. The US markets, they gave us a very mixed handover. But Nifty mid-cap and small caps, they continue to be under pressure. Nifty mid-cap so far in this week is flattish, but with some negative bias. And Nifty has a support at 24,800. So these are some important levels that we'll be watching out for. Very, very important. Very important today will be whether we sustain these 26,000 levels or not. And other than that, of course, we do have a lot of action in the broader markets coming up as well.
Good morning to you as well, Sonal. It's been a good morning for the Nifty at least. And as you mentioned, right, some resistance after we crossed 26,000. But for now, the index is holding on to those levels. As of now, it's a big day today for the Nifty as well. It's the monthly expiry, so we'll have to keep an eye out on that. It's been a good series for the Nifty, almost 850 points. Now make that 900 because of this 50-point gain that we have seen this morning as well. So it'll be the fourth consecutive positive positive FNO series that the Nifty will have on closing. So we keep an eye out on the index. But yes, the broader markets are seeing some bit of pressure in today's session as well. There are almost 70 stocks on the small cap index that are trading with losses this morning as of now. There are around about 65 stocks on the mid cap index that are trading with losses as well. The advanced decline ratio in favor of the declines as of now, and there is plenty of stock specific action as well. PSU banks, it's one day up, one day down for them, but for now they are in the green, as Sonal was highlighting. But yes, pressure coming in from the broader markets. The benchmarks are holding steady, but starting off with our focus on some of the big movers this morning. One of them is IEX, and this has been the stock that has been in focus all through the week, and today the stock is higher on the back of an Investec initiation. Vivek is joining in now with more details. Vivek.
Well, thank you so much for that, Harmal. Last 3 days we've been speaking quite a lot about IEX and what really has dragged down the shares. Today there's been a bit of a bounce back. So Investec has come out with a note. They have an initiating long fast position on IEX. They have a target price of close to 215 rupees a share. What is it that they're saying? They're saying that the stock has plummeted almost 17% over the last 2 trading sessions due to media reports about an upcoming submission of a simulation report by Grid India, post which CERC will decide on market coupling. Remember, market coupling continues to remain the biggest overhang as far as IEX is concerned. Investec also says that they don't have any insights on timelines as far as coupling implementation is concerned, but they believe the process of operational implementation will be lengthy and may not significantly benefit the power ecosystem. As far as operations are concerned, they expect IEX to deliver a healthy overall volume growth of 44% and a core volume growth of almost 17% for Q2 FY25, which they believe will drive almost a 30% higher EBITDA growth compared to the same quarter last year. They also expect additional clarity on coupling during the Q2 results. However, operational implementation, according to Investec, could take almost 2 years, which ensures near-term earnings at least will be stable. Valuation is corrected to 35 times 1 year forward compared to 45 times that other exchanges are trading, and this is the basis on which they have initiating long fast as far as IEX is concerned.
Right, so IEX continues to be the stock on our radar, has been for this entire week already. Thank you so much, Vivek, for joining us with all those details. The other stock which is buzzing in trade is Zaggle. It is higher in trade today. In fact, earlier we spoke to MD, CEO and co-promoter Avinash Godkhindi, and he says the company is on track to meet FY25 guidance of 45 to 50%. Listen in.
The thesis is very simple. The whole ecosystem has evolved in the last decade or so. Tax filing has gone up. There are more and more individuals and companies filing, whether it's their income tax, whether it's their GST. And we are seeing this complexity increase because the way people's salaries are getting augmented with rental income, with investments, with other sources of income, filing taxes for millennials has become increasingly more complex. It would be a part of our bundle in terms of our SaaS revenue, Prashant, right? So we'll be able to increase our SaaS fees per corporate. The number of corporates that we think would be interested in this sort of a service would run into thousands, right? Because every company has employees who have these challenges. We are absolutely on track for that. And in fact, in the last analyst call also, we had said that depending on how our numbers shape up at the end of Q2, we may up the guidance, and Q2 seems to be shaping up really well. All the growth that we're talking of, 45 to 55%, is organic.
That was the management of Zaggle speaking on their recent acquisition and on the road ahead as well. The stock slightly off the highs of the day, but still holding on to gains of 3.5%. Excuse me. The other one that's moving in today's session is All Cargo Gati, and some news bits came in this morning that the company is now planning to hike price increase, has announced a price increase from the 1st of January of 2025, and it's around about the same time this year that a lot of these logistics companies announce price increases or pricing structures for the next year as well. So All Cargo Gati has announced a 10.2% increase on an average in their prices from the 1st of January. Now, this is the first such price increase that they have taken in over 4 years, and this is the first first time that they have taken a price increase after their acquisition of Gati. And they've also mentioned that this price hike is not applicable to those customers who sign in for the company between the 1st of October and the 31st of December this year. So that for them the price increase would not be applicable, but for the rest it will be. Now, why they have increased their prices? They mentioned that they would need these funds for strategic investments in infrastructure and technology, and a price increase was also necessitated because of the inflation and rising input cost, is what the company has mentioned. And basis this price hike, they will be able to make their customer service a lot better, is what All Cargo Gati has mentioned. And they've also highlighted their growth strategy for the road ahead, and they've mentioned that 6 out of their 8 planned city hubs that they were planning in metro cities is also expected to be operational by the end of financial year 2025, which is this financial year. And their ERP platform is also undergoing a complete overhaul in order to improve the efficiency of the company when it comes to deliveries and other aspects as well. So all in all, a price increase announced by All Cargo Gati. The stock had seen a bit of a spike once the announcement had come in, slightly off those highs, but still holding on to gains of around 1.75%.
Okay, so that's All Cargo Gati on our radar, some price hikes that have come by. By the way, just take a look at Godrej Properties, because the company just informed the exchanges a while back that they will be undertaking fundraise that the company has planned. The meeting is on 1st of October. This would be via issue of equity shares or any other eligible securities as well. Now, do remember the last time that the company had done a QIP, it was back in 2021, where they raised around 3,750 crore rupees via QIP. This was March 2021, and this, if it is a QIP issue again, that would be the next one after that. The company had been on a land acquisition spree. Their debt increased because of the same reason, and expansion is something that has been their vision and goal as well. Pan-India expansion is what Godrej Properties is looking at. The stock up 13% week to date as well. So that is the reason why we saw Godrej Properties buzzing a lot ahead of a possible fundraise that the company is planning.
Interesting. Keep an eye out on Godrej Properties and a lot of these other real estate names that have been buzzing in this recent past. But time for a short break here on Trading Hour. On the other side, we'll be joined by the management of Krishna Diagnostics to discuss their recent stake buy in Apulki Healthcare. Stay tuned. Back on the other side.
Of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The valuations are berserk over there. I mean, again, great companies, but and again, I usually don't talk about stocks, but just to put some sense. And again, don't get me wrong, I'm not disputing valuations or anything, but just to give the Infosys example. Let's say our favorite stock this year was, say, Zomato. It's a $30 billion market cap. Let's say we expect the market normally to give you a 15% CAGR for 10 years, which is 4 times. So it should be a $120 billion market cap in 10 years. Let's say it's a 30p by then because it'll be a fairly large company. So it needs a $4 billion PAT, profit after tax.
So when we say melt up, I just want to sort of finish that point. Investing.
Back with us here on Trading Hour, on to some corporate conversations. Then the Krishna Diagnostics is the management on our radar. The board has approved a 23.5% stake acquisition in Apulki Healthcare. And with this, the company will get exclusive partnership and operating and maintaining diagnostic services of Apulki's hospitals. Now, to discuss more on this, we are now being joined by Mitesh Dave, the Group CEO of Krishna Diagnostics. Mr. Dave, good morning. Thank you so much for joining in. I'd like to speak to you more about this acquisition first. Can you tell us more about this? What does this have a financial impact on your balance sheet post this acquisition? And is there a plan to increase this 23.5% stake further in Apulki?
Yeah, hi, good morning, first of all. And thanks for giving me an opportunity. Well, if I should talk around how it's going to impact our balance sheet or the overall financial structure, as such, there won't be anything because it's going through the internal accruals incomplete. And with that, it gives us a future horizon also when we are looking at the top line.
Okay. So give us some more details on this, Mr. Dave. I wanted to understand how much will you be paying for this 23.5% stake. What is the top line that you're talking about? Your volumes will increase, of course, because you're getting the rights to operate and manage the diagnostics lab under Apulki Healthcare. So how do you see increase in volumes? And will it be largely in radiology? Will those kind of volumes see an increase for you?
Exactly. So first of all, while details around the number of the quantum of overall investment will be shared once after the we are going to conclude with the few condition precedent. But however, answering to your second piece, wherein the volumes, certainly, so today the volumes are on rise, looking to the cardiac and the cancer areas, and it gives Krishna a larger exposure to the larger base to provide integrated and comprehensive suite of entire diagnostic services. So with that, we have in total volume which is coming out from this oncology and cancer care area, cardiac care areas, but also it will cater to the ophthalmology or maybe the ENT or any other allied areas where there is a need of a diagnostics. It varies, so it adds up from the radiology as well as to the pathology, from advanced imaging for CT, MRI, PET, USG to the routine to the specialized pathology as well.
By when are you expecting to complete this transaction, Mr. Dave?
It may take another 10 to 15 days time to conclude that.
And which is post which you would talk about the financial considerations?
Yes.
And is there a plan to increase this stake further in the future?
So, well, that's going to be the way the overall thing shapes up into the future times. However, for now, it's on the card to establish what all of the cards to go with the one which we have bagged it for, which is like Apulki in Pune and KDMC. And as such, Apulki hasn't planned to set up another 10. So it's important first to stabilize and to smoothen the operations and then looking around to invest or to take more stake around or not.
Okay. So, Mr. Dave, give us a sense of what is the current number of hospitals or, centers does Apulki Healthcare have right now, which you will be able to manage? What are their plans to increase going forward? That would mean higher volumes for you as well. And with all of these segments coming up, radiology and the other high margin segments, will this mean a margin increase for you going forward as well and in FY25 itself?
Yes, so Apulki currently has two hospitals. One is with the Baner and one is in the Pune and second in the Mumbai. And over the future, in next 10 decade, and it's in next decade, it's going to have close to 10 other hospitals coming up, where Krishna poised to have exclusive diagnostic partners. Talking around the overall financial impact in term positive, it will carry the positive financial impact because of the way the overall structuring has been made and the rates at which this going to be. Currently, Krishna is more around the CGHS plus discounting, wherein this going to be at a CGHS level. So it will have a positive impact on the overall PAT and the EBITDA as well.
Just wanted to follow up on that. Right now, what's your split like? How much is coming from, say, pathology, radiology versus the other segments? And with this acquisition, will that mix change for you?
Yes, the mix going to get changed, but that's going to be over the time because it's going to start their operations in the coming financial year. Number one. Number two, currently, if you'll see, our mix is around approx 45-55 pathology versus radiology. And as and when this Apulki getting started and over the time, the overall mix might be see across certain changes, but not to the larger extent.
Mr. Dave, I wanted to ask you about the current number of CT scan machines and that you are currently operational. And you had mentioned in your first quarter earnings call that you are operational currently in 21 CT scan centers, particularly in the state of Maharashtra itself, and there are plans to install another 18. Is that plan on track? And if you could give us a sense of how many overall across the country are you operating in?
So currently, if you'll see that in Maharashtra, with the quarter two coming to end, we are operational at 36 facilities. So if we'll go with that, another 3 which we had shared it out in the first quarter's earnings call, we're going to get live by the end of this month. So we are pretty much on the track with that. And overall in radiology, if we'll talk around, we have close to 60 plus kind of imaging centers as of now spread across.
Okay. Mr. Dave, I wanted to understand demand trends in quarter two. We are towards the end of quarter two as well. Quarter one was very strong for the company. You saw a 20% growth. Margins expanded to 25%. Is this a trend that would continue, or do you think second half will be better than first half?
So certainly second half always carries little impact from the seasonal as well, wherein the cases on rise because of the rainy seasons. There are the greater instances as well. So you can expect something better than the quarter one.
Okay, so there'll be betterment than quarter one. So what kind of targets do you have for FY25? Margins have improved to 25%. You've done 26% as well in quarter one. Is that a range that we can look at? And the 20% growth that you saw, do you think that is something maintainable?
So yeah, the growth is pretty much maintainable, and that's why we are going to carry it for the entire financial year, even when we would be ending FY24 and 25 as well. So I don't see there is any challenge to it.
Mr. Dave, you did 170 crores in the first quarter. Would, if you extrapolate that, would 700 to 750 or maybe 800 crores by the end of FY25 be a realistic possibility on the top line front?
It's absolutely realistic, and we are very much on the way.
I wanted to ask you one final question on the radiology order that you had won from the Baba Atomic Research Center. How is that progressing, and when is that expected to accrue into your P&L?
So that might take a little more time, looking to the quite a few operational areas which we need to take care, looking to the kind of a terms and condition. But yeah, maybe within this financial year.
Okay, last question from my side before we let go of this conversation, Mr. Dave. You know, last year or before that, we were talking a lot about pricing pressure coming by in the diagnostic space. There were a lot of online players joining the industry as well. Do you think that competitive intensity is done with now and prices will stabilize, realizations will stabilize, or maybe improve from these levels?
Now, as such, while there was a certain kind of a price wars which was there in the past, or is still going on, I should say, it's not yet ended, but certainly people are more aware now and they're looking for the qualitative diagnostics. So I guess, yes, in the coming times, looking to the qualitative diagnostics, accessibility and affordability going to play a major role, where this price has to get settled down to provide people or the masses the qualitative diagnostics.
All right, Mr. Dave, thank you so much for sparing time and joining us to talk about this acquisition and, of course, a lot about the business as well on the road ahead. Wish you good luck for the rest of FY25. That was the management of Krishna Diagnostics there. 1.5% higher so far, around about 850. Time for a short break. Up next, we discuss the way forward for the markets. Ajit Banerjee, the Chief Investment Officer at Shriram Life Insurance, joins us on the other side. Stay tuned.
Usually we are talking about like a frenzied move in the very short term, but that's not what you mean. You think
no. I mean, it makes a major long-term top, which is not a great thing. So, I mean, it's great that we are going up on a wall of worries in a way that every time we meet, we are worried about, is this the end? Is this market going to fall? Will the investor flow stop?
Correct.
Will people run away? Markets don't climax at periods like that. And this seems to be more like the 90s bull market, where small caps were doing phenomenally well. And what tipped it eventually, of course, one was the Asian crisis, which happened outside our control. And B, it just got overwhelmed with supply. And that's really what capitalism should do, that prevent what I call that melt up where the entire market goes up 10x in a decade. And then you don't see that prices for, maybe next 10 or 20 years. So I'm hoping we don't get a melt up and supply response takes care of it. And supply is coming, but it's still what I call a quadrant 3 or quadrant 4 level supply. The big guys haven't yet come. And in the bigger ones, if I take the top 10 companies, no one is supplied. Having said that, the owners of those companies, whether it's BAT selling down ITC or Singtel selling down Bharti, that's happened. But it's not like the Reliances or the Tatas or someone has come with massive issuances, which I think is around the corner. It should come.
I mean, bankers we speak to tell that over the next 12 to 18 months, about $25 billion worth of IPOs should happen. But that is, I'm not sure how much of the...
So, Prashant, 25 also, I'm saying, is a small number now. It's a $5 trillion market cap. So if you don't do 50 billion, is 1%. So issuance is, the government ought to be doing 25 billion. The larger groups easily can take 25 to 50 billion. And this is combination of primary and, of course, QIPs and so on. We've seen promoter selling, we've seen PE selling, we've seen MNC strategic selling, and it's gone from across the world, right? If GE of US has sold, Whirlpool has sold, BAT has sold, Sumitomo from Japan has sold, Singtel has sold, and now Hyundai is approaching the market. So all these chaps are getting it right. But we still haven't come and raised the money.
And that will happen according to you?
I think it's inevitable. I mean, that's what capitalism is, right? That demand for paper will create the supply.
And we're a long way off from that climax or whatever.
I hope I'm not proven wrong next week, but I think this has legs to go.
This has legs to go. PSUs, capital goods, real estate, infrastructure, that's essentially been the leader of the bull market. But people, defense, etc., right? That part, it looks like we're starting to rotate. People are starting to rotate out of that.
Which is inevitable.
Inevitable. You think that's done, or is just like a pause and refresh case here?
Again, in terms of market cycles, when you see the leaders of every cycle, then they go to sleep for a decade. So the leadership of 2000 to 2007, which you were earlier alluding to, was indeed commodities and infrastructure, power, real estate. And then the excesses which happened in that period made them complete pariahs. So if 4 years ago...
Welcome back. You're still tuned into Trading Hour. It's time to talk about market fundamentals now. Ajit Banerjee, Chief Investment Officer at Shriram Life Insurance, is joining us now. Mr. Banerjee, good morning. Thank you so much for joining in. And we are talking on a day where Nifty is comfortably above the 26,000 mark. We are touching new records every day. What are you making of the markets now? That's, of course, the big question. Isn't it too stretched in terms of valuations? If it is there any space where you are finding entry available now at these valuations?
Good morning, Sonal. Thanks for having me on the show. I think quite a long question, so I need to break it up piece by piece to respond to you. Yes, it's a fact that at this point of time, the valuations looks quite stretched. But certainly we need to look at it from a long-term perspective, because if you see in the realm of the overall, where the other large economies of the world are standing, then certainly India is the only oasis in the desert, as we see. So certainly, if you are actually trying to, position yourself from a long-term perspective, where else do you actually have an opportunity to invest and make money? So keeping this in mind, I think the FIIs and FPIs who thought for a while that the valuations are very stretched and they pulled out, now have, possibly has realized that they cannot wait till the cows come home. So therefore, they are once again coming back to the market. And yes, finding at this point of time the right pockets, right set of stocks, right sectors, at a reasonable valuations, what you would like to, is a bit challenging. So therefore, you need to focus primarily on the fact that structurally, which are the sectors and the stocks which have a long-term, prospect to come. And naturally, at this point of time, the way in which the economy is poised, the Fed has already, announced its rate cut. So definitely, and the rate cut also has happened at a time which is primarily to ensure that there is no, slippage into a recession, what initially was envisaged. So they are ensuring that the soft landing is ensured. So once that is the situation, then we can expect that there will be also revival of the growth in the US. And if the growth revival happens over there, that's good for the entire world. Because all said and done, they are the one which is the largest economy and largest financial market in the world. So if they are looking good, then we can expect certainly that, and the money is available cheap, so the emerging market stands to benefit. So now specifically to, to find out which are the sectors, I think we need to look at it from I would say, a long-term perspective and what fits it into presently the economic, positioning of the country. For example, at this point of time, where India is headed, so I think the rural-based economy is poised to do well. So therefore, it may make sense to focus on the FMCG sectors, within auto sectors, maybe the two-wheelers as well as tractor segments, so as to say. Pharma also is looking good. IT from long-term perspective, there is a ray of hope which is there. So there are certain sectors certainly, which you have to do a deep dive to get into.
Mr. Banerjee, good morning. Thank you for joining in. You called India an oasis in a desert, but the desert will have a lot of cactuses as well. So are there certain sectors where you're recommending your clients to take some money off the table now?
So almost, the rose also has a lot of thorns. You need to pluck it carefully, right? So I think, that always be the case. So I think, if you have to make money, you need to be careful. And, the worry is that a lot of momentum buying is happening. And that is where you need to certainly, sort out and do a deep, due diligence for picking up the stocks. So it cannot be a situation that, it will be an easy flow, while the liquidity is easy flow at this point of time. But certainly picking up the right stocks will not be easy. And that's what I can respond at this point of time.
Okay, all right. So, we've seen rate cuts and we've seen FIIs putting back some money in the markets. Do you think this is a trend which could continue? Because it's not a secular trend that we've seen so far. But do you think FIIs could come back to India in a big way now?
I guess they realized that, they cannot stay on the sidelines for long. Otherwise, they're going to miss the, bus. And certainly they want to join the bandwagon now. But that does not mean that, they would be wedded, even if the ground realities deteriorate. I think that possibility still remains. So certainly they would be, looking for markets where possibly the growth and the valuations both are favorable. But that would be slightly hard to find at this point of time. So naturally then, with so much of money available and also cheap money going to be available now. So in that case, the option would be actually India and they would be coming. And also if you see that, with, just now I was seeing one number that about 50,000 crores worth of IPO, including the big names like, Hyundai as well as, Swiggy in the pipeline. So I think that would certainly warrant a lot of flows from the FIIs. That is what my reading is.
Mr. Banerjee, we'll leave it at that. Thank you so much for sparing time and sharing with us your thoughts on the road ahead for the markets. Looking forward to chatting with you more often on this platform. By the way, to pull up a couple of stocks that are seeing some selling pressure. One of them is KFin Technologies. That stock is now down to the lowest point of the day, almost 5% lower. There is a KFin Technologies. And on the flip side, the other stock that is doing well though is Bajaj Housing Finance. The recent listing, it saw a bit of a decline for a couple of trading sessions, but today firmly in the green, 4.5% higher is Bajaj Housing Finance, now 160, still below its closing price on the listing day, which was 165, but still firmly in the green. Time for a short break here on Trading Hour. On the other side, we put the spotlight on some more stocks that are buzzing in today's session. Stay tuned, back on the other side.
Ramesh and I remember we would talk about PSUs and everyone was like sniggering, like what's wrong with these chaps. But because the correction had been so steep that it's eventually an investor's job is about valuation. Like I said, the greatest Infosys may not give you the return and the what so-called poorest PSU may give you the best return. So it was a mean reversion trade which happened, and of course all the right policy things happened for infrastructure and defense and railways and so on. So you go from being what I call terrible to bad is a rate of change. But you went from terrible to being good. So that rate of change is so dramatic that's what the markets have discounted.
And now maybe to great.
And now you're imagining it to be great. Some of them may make it, but most of them won't. So I would be very, very cautious in those kinds of places. And typically these are not high return areas. By definition, if you make 25% IRR in an infrastructure business, the cost to the consumer, which is the average public, is going to be too high. So your money made is really on leverage, and therefore the return on equity comes in that business. So, and people are shy of doing leverage after again the last cycle. The flip of it, to just complete, the leadership of the last cycle was all the high quality businesses in the last decade, which were all getting re-rated. Asian Paints, Page Industries, Kotak Bank,
consumers, retail,
even, and including banks, because banks became 30% of the index. And you're seeing that getting corrected. That Kotak, HDFC haven't performed for the last 5 years. Again, great companies. But it's the excess of that which is now getting reverted back. And now they've become so hated that when will HDFC move? And there are memes on HDFC doing the round the way it was for ITC. And then you saw the way when ITC moved, it just doubled before anyone realized it.
You think...
so things like that tend to happen. I can't forecast what will happen in...
But you're very bullish on the financialization theme.
I am very much.
Welcome back. And a whole host of stocks are moving around in the broader markets today, even as the indices are at a high. But the broader markets is seeing a lot of stock-specific activity. And to talk about all of these buzzing stocks, we have our entire research team that is joining in. First up, Nimesh joins in on Trent, and that is after Citi issued a bullish call on the stock. Nimesh, over to you.
Hi, Armaz. You know, there are a couple of reasons Trent is buzzing in trade today, but not only for today. In fact, if you look at this year itself, it's been a big outperformer and a massive wealth creator as well. Now commanding a market cap of close to 2.8 lakh crores. As I said, you know, there are a couple of reasons for that for the stock to buzz to be buzzing today. One, Citi has initiated a coverage on the stock with a buy rating and a target price of 90 to 50. This seems to be the most highest and most aggressive as far as target price is concerned. Now, they've also added the stock to the Pan-Asia High Conviction Focus list. You know, that's the kind of conviction they have on Trent. Now, the company has seen a big transformation from a single format to a multi-format and a multi-category player, which has led to a revenue CAGR of almost 36% between FY19 to FY24. But from here in the next 4-5 years, Citi expects industry-leading growth of almost 40 to 50% CAGR between FY24 and FY27 estimated between revenue, PAT and EBITDA. That's the key reason why they've been so bullish on Trent. The second reason is the technical factor. Now, Trent is getting added to the Nifty effective tomorrow's close. According to most of the brokerages, the estimated inflow is in the range between $600 to $700 million. JPM is at $670 million, which means buying of close to 74 lakh shares. Remember, it's a thinly traded stock, so if there is no big supply, you might see a big reaction tomorrow as well. So, two reasons why the stock is buzzing. One, Citi initiating report with a buy, and two, the technical factor that it's getting added to the Nifty effective tomorrow's close.
Okay, those are important points. Thank you so much, Nimesh, for joining us with all those details. It's just not the broader markets or the stocks which are moving into Nifty. Nifty stocks are also in focus. Hero Moto has slipped in trade after brokerage UBS has issued a sell rating, citing number of reasons here. Vinny is getting us more details on this one. Vinny.
Good afternoon. Yes, we are seeing a fall coming in for Hero MotoCorp. UBS sell rating, target price 3,350 rupees per share is what they've given. The main reason for this sell rating is that they believe that the wholesale volume numbers, because of festive season, there's optimism around that. But the retail numbers, there is a bit of an underperformance, and that could be a bit of a pressure for Hero Moto. Other than that, the festive season, obviously, we'll see this next couple of months, which could see some bit of an excitement in terms of volumes. But after that, that is not something that is aiding the whole year performance for the company. So the Vahan retail growth also is much lower for Hero specifically. And over the last few years, if you've been looking at it, the retail market share for Hero Moto during the festive season also has been dropping. So that market share on the retail front has been dropping over the years, and the new launches is not something that has been supporting them. Keeping an eye out on that, because September 2024, they'd seen a market share loss on the retail side, and despite these launches, it was only around 24%, actually below the 24% mark. Do not forget, valuations are quite high, currently trading at 26 times. You know, when you compare it to the historical average as well, it's been quite high. So keep an eye out on that. The stock has already seen a run up since Q1 earnings con call of around 20%. So interesting to watch out for here today, down and out in trade.
One of the losers on the Nifty is Hero MotoCorp compared to most of the other auto stocks that are doing fairly well in today's trading session. But next on our radar is the big boy HDFC Bank, and that is on the back of some fresh brokerage calls that have come in on the stock. Vamakshi is joining in with more details on that. Vamakshi, tell us more.
Well, Hormaz, HDFC Bank in focus today after, there are a couple of brokerages that are reacting to the buzz around HDFC Bank's potential sell down of nearly 60 to 70,000 crore worth of loans to bring down their LDR or the loan to deposit ratio. The first one that I'm looking at is the one that came from Nomura. They have a neutral call, target price of 1,720 per share. They say that this sell down could accelerate the LDR resolution, but in turn could impact the medium term EPS as well as ROE. They've cut their FY26-27 EPS estimates by around 2%. They further add that overall market for securitization of loans is projected to be somewhere around 2 lakh crore for FY25, and this potential sell down of the loan book could actually be almost 30 to 35% of the market. It remains to be seen whether such large volumes can be absorbed. But on the other hand, we have quite an optimistic call coming in from Macquarie. They've got an outperform call, target price of 1,900 per share. They say that HDFC Bank's LDR from a peak of 110% has declined to 103.5% and is expected to come down further. This potential sell down is in line with the strategy of consolidation of balance sheet as well as focus of the company on margins and profitability. In fact, they go on and say that they expect NIM to improve a further 5 basis points sequentially in the second quarter to 3.52% as compared to most other banks. Also note that Q2 will be the first quarter post the merger when the YOY numbers will be finally comparable due to base effect and sell down. As per reports, Q2 loan growth could be less than 10% is what they anticipate. They believe that HDFC Bank's peers may report flat to slightly declining margin, and in fact HDFC Bank is their top banking pick on easy liquidity conditions. So overall, a positive view coming in from Macquarie.
All right, positive view. The stock has recovered sharply from the lows as well. It's absolutely flat right now. If you look at HDFC Bank, an important will be the quarter 2 operational update, as Vamakshi mentioned, the first quarter after the merger where we can compare the YOY numbers. We'll do one thing, we'll slip into a break now. When we come back, we'll discuss market technicals with Vishal Malkan, also discuss the top trading bets.
The magic one that everybody is talking about at this point in time is AI and what AI can do, and specifically generative AI. How do you see that linking back to the efforts on the healthcare side, the innovations that you're working on? I mean, how transformative is AI likely to be, or are we on the cusp of seeing that kind of transformation?
Usually when you get new technology, it's applied in the rich world for those who are well off. And what we'd like to do this time with AI is make sure, both in terms of discovering new interventions for nutrition or vaccines or drugs, and helping give people health advice, in voice in their native language, that we actually bring these AI advances to those most in need. I mean, after all, where's the greatest shortage of doctors? It's in developing countries. And so the foundation is leading the way by giving grants to various people and pushing this forward, even for a topic as complex as nutrition. The AIs are going to help us understand things faster than we would without it.
If you could do a startup all over again and focus on AI, what would the niche be that you would like to address?
Well, if you could go back to my school days even, and then I was saying, hey, how do we make software as smart as human beings? And I was constantly thinking about it. I underestimated how long it would take, but here we are on the cusp of that. And so now the lens I apply is the lens of the foundation. If I was somebody young, sure, I'd compete with, OpenAI and all these people. But, now I'm in the stage of saying, how do I help other people work in AI apply it to those most in need?
As far as India is concerned, the role and relevance and the significance of India, especially as far as the foundation is concerned, and what you're hoping to do on the innovation side.
So India's the country the foundation does the most in. Other than the US, that's our largest group. We have a great team there. We work a lot with the national government and many of the state governments. And not only do we see in areas like nutrition or using ultrasound to detect.
Welcome back. You're still tuned in to Trading Hour on CNBC-TV18. Well, it's the monthly expiry day, so a lot of move that is expected towards the last trading hour. So it's a good time to get a technical check on the markets. Vishal Malkan from malkansview.com is joining in for just that. Vishal, good morning. Thank you so much for joining in. Tell us what's expected from the Nifty today in terms of important levels.
Hi, good afternoon. And I think the way markets are positioned right now, it's making higher highs and higher tops, higher bottoms and higher tops, which is a clear sign of a strong uptrend. And we can see a clear sector rotation happening on the macro level, where we saw that in the last few days, metals and even the banking sector have picked up in the last 10 days odd. So it's clearly a bull run. We always think that whenever market makes a new high, we are skeptical that it may have a correction and all, but as of now, there are no signs of correction.
So 26,200, 26,250 on the cards then for the Nifty, Vishal?
Very much possible, yeah.
And what about your specific stocks then? What are you betting on this morning?
So I'll go with the flavor of the month, which is October series, would be metal. And my first pick would be VEDL, which is breaking out fresh out of that 480, 490 levels with breakout on RSI levels as well as Bollinger Bands. So I'll go with a buy on that with a stop of 478 for targets of 520 and 540 in the next few trading sessions. And the second one, I'll go with the banking sector, especially in the PSU bank, where the Bank of Baroda is showing good support at levels of 240. So I'll go with a buy on that with a stop of 238 for targets of 255 and 265 in the next few trading sessions.
Okay, all right. So those are the names that Vishal has bets on. Thank you so much for joining in with those technical trades. Let's move on. Market veteran Ramesh Damani says the Indian market is now transitioning from mid caps to large caps. He also shares his thoughts on the retail participation in the F&O market and PSU stocks. Now, listen in.
जो सेबी की जो रिपोर्ट आई थी अभी 1-2 दिन पहले, वो बोल रहे थे कि retail public who has gone primarily into futures and option trading have lost money. उनके हिसाब से 90% have lost money, which is about a crore of people. 50,000 crore रुपया नुकसान किया उन्होंने. 50,000 crore रुपया उसने किया. 50,000 crore रुपये में could buy the complete Tata Elxsi or companies like Biocon. That is the amount of money they lost. So it is bittersweet. मुझे बहुत अच्छा लगता है कि Indian prosperity में Indians participate कर रहे हैं. I feel a bit sad that people are playing in the F&O market without understanding the market. Market is, bull markets have length. Bull market कोई permanently चलता नहीं है. कहीं ना कहीं जाके रुकी जाता है. We are very lucky, we're very blessed, unlike China, Thailand, Japan, who haven't had new highs in almost a generation. Investors, Indians have constantly seen new highs in the market out there. So very blessed. Having said that, it just seems to me that the market is now transitioning from mid caps to large caps. Leadership has shifted in the market. And typically, if you have a very ferocious rally from this point, that would signal some sort of ending of the bull market. मेरे को जो लगता है ये जो K-pop के जो shares आने हैं, Hyundai, Samsung, they'll all start coming with IPO soon in India because they're getting such valuations in India. So why won't they encash it out there? That will suck up a lot of market liquidity from the secondary market, and that would be kind of a warning sign of trouble ahead. But what a great run they've had. I mean, 30 गुना बढ़ गए, उसके बाद 20% घट गए, तो घट गए. I mean, there are a lot of other stocks in the PSU sectors, in the oil and gas sector, for example, in engineering, in construction, that still looks good. I mean, no sure goes up all the time. Everything corrects. So it's just, it's a fallacy thinking. Everyone says, oh, I told you so, but you didn't tell me when the price was 200 and I could make 30 times the money. Bull market का जो leadership अभी भी PSU में, but the roles are transitioning. So I feel somewhere in the oil and gas sector, some in engineering, some in construction, will continue to do well. Power sector will continue to do well. It'll be a good time for stock market, it'll be a good time for investors, and it'll be a good time for entrepreneurship in India. I think democracy almost demands that. As the best example is that whether you look in the America S&P 500 or look in the Sensex 30, look at where they were in 1980 and look at where they're 2040, 50 years later, 60 years later. Most of the components have left. They're new companies, new blood, new ideas.
So like in life, in stock market, best is yet to come.
I would think so, Anuj. I would definitely think so. I'm hopeful. So I may not live to see another 10, 20 years of what's happened in the stock market. But if you ask me, I feel that the investing for the next 30 years is as much fun as it was the last 30 years. And as Warren Buffett said, that if you could have a pill to live longer, he'd give up a large part of his money, but he would retain his, wisdom and his health. So he could continue to invest and see the great Indian experiment, what happens.
we're doing a lot of studies with our partners there, which will have a benefit for India, but also because the digital infrastructure in India is so strong, we can try things out there and take them to other countries. The digital infrastructure itself is a great example where, the leadership has laid that foundation, and now both India and Gates Foundation are going to Africa and other places and saying, hey, you should do the same thing.
Was there a specific learning from this trip to India for you?
Well, it was pretty amazing in Odisha to see how the digital approach was connecting with farmers, that they had categorized which farmers were in which location, what were they growing. And so when they would see crop disease outbreak, they could notify them. If they saw weather coming, they could notify those farmers. If the market prices were changing, they could help guide the farmers. And so the digital revolution, bringing that into that agricultural sector, that was the first time I saw that at work. And it's being scaled up in India. Now we'll take it to the rest of the world.
News which just came out, a government-to-government deal between US and India to set up a semiconductor fab unit in the country.
Right.
There are elements of technology transfer, etc. That's the cutting edge semiconductor, and plans to localize production. Right. I just wanted your thoughts.
I think it's great. I would love to, India's quote a non-aligned nation, and I don't think we should be asking to align, but I think it's great that we're reaching out to each other, helping each other, investing in each other, and I would love to see far more of that. And this has two elements. One is the national security part, which of course all countries have an interest in. And the second is just, a better economic relationship.
Over the last 2-3 years, we've seen the rise of the so-called industrial policy across the world. Yeah. National security is being prioritized, as you said. Do you see this as part of that, in the context of that?
Yeah. So industrial policy, I'm a little cautious about. I think to combat some of these things and to do things in your country's own interest, which are hard to do economically, you're going to need some economic policy, industrial policy, like the United States has, for rare earths and things like that, and lithium. Every country is different. So the national security needs of India are going to be more around energy. I think for everybody, it's going to be semiconductor chips. So I do think that's industrial policy. I would caution industrial policy when it's used for regulations, bureaucracy, politics, votes, social, and it doesn't have the twin of permitting. It's not going to work. So you got to be a little cautious when you use it. But yeah, we're going to have some. And like I said, I think it's very important in America.
Welcome back. Now, marking a decade of the Make in India campaign, veteran industry leader R.C. Bhargava commented that tax policies in the country need to be regularized and smoother for companies and individuals alike. Listen in.
I think one of the things which I personally think is required, which happens the world over, is further simplification and rationalization of the GST system. All major economies today, the developed countries, do not have a multitude of tax rates and levels and cesses and all of that, which distorts the picture in the marketplace. Worried about the loss of revenues, which they did when the GST came along also, but it has proven that GST actually was a great, great boon for everybody, including the state government. And I think they have to now fall in view with a more progressive approach to taxation. You look at the taxation on products, petroleum products. The tax varies from state to state, and it makes it very difficult for consumers to easily move towards buying motor vehicles because of the high cost of maintenance. Equally, states have put other taxes like the road tax and things which have substantive additions to the capital cost of buying. We saw the impact and we are seeing the impact.
Okay, that's the word coming in from Maruti. But with that, we'll wrap on the show. And as we do that, here's some good news for our viewers. India's business news leaders now click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store.
Have a great economic relationship.
Would you agree, though, that in the former part of what you described, industrial policy is kind of taking the lead? Businesses and who you align with, who you want to do business with, building supply chains. A lot of that is now, it seemingly is led by that. I mean, what governments really want to do.
Well, no, it's two different. Governments have always negotiated economic arrangements and stuff like that. If you look at the United States, the industrial policy is a very teeny part of the economy. So it isn't like it's taking over the economy. Right. I think in other parts of the world, it's obviously a much bigger part of the economy. So, but yeah, nations, because of national security and because of what some people might consider unfair competition, there will be forms of industrial policy. If I was a government, I'd be very, very careful. It should be very targeted, very specific. It shouldn't be to protect local industry. It shouldn't be to just create jobs. It should be for a very specific reason. But you're going to see it, and hopefully it's well done.
Let's talk about the big event from last week, which is interest rates coming down, the Fed cutting by 50 basis points. Do you think it was a bit excessive, given the fact that GDP is expected to grow at 3%, the stock markets are at all-time highs? I mean, there's no issue with credit spreads, etc. Indicators are all pretty good, and you get a 50 basis point cut. What did you make of it?
I think it's a lot more ink than it deserves. I think they raised rates to 5 very quickly. They were a little late, which they acknowledged. They raised it to 5. The economy is slowing down. Inflation is coming down. And relative to inflation, even if inflation is 3%, the 5 is maybe a little bit too high. So they made a big step to get it close to what they think it might be. They've got plenty of room to go down, and hopefully we'll continue to exhibit growth with inflation coming down. I'm a little more skeptical than other people about that, but it is happening, and they're just reflecting reality. Yeah.
You've been cautious in the past about prospects and said, well, one has to be prepared for things going wrong. Are you a little more positive now? I mean, this is not a cut when you're facing a recession or things are looking weak. It's like a happy cut. So, I mean, are you a little more...
I'm not... So my caution is all geopolitics, which may determine the state of the economy. Okay. But it's really the geopolitics that these things, they're getting worse, they're not getting better. There's chance for accidents in energy supply. God knows other countries getting involved. You have a lot of war taking place right now. You have American warships being attacked almost every day in the Red Seas. That's my biggest question. The economy fluctuates. I don't worry that much about the fluctuation of the economy. And obviously the Federal Reserve will try to do its job to moderate the vicissitudes of the economy. But we are spending a lot of money. And in my view, that spending the money causes growth. It also causes inflation. And whether it all moderates, I think it's true for countries around the world. We got to really think through how much debt countries can put on before it causes a real problem. So I'm long-term optimist. Short run, I'm a little more skeptical than other people that everything's going to be great. Markets are pricing things like they're going to be great. I'm put me on the cautious side of that one.
U.S. has been trying to reduce its dependence on China. India has been and is expected to be a big beneficiary of it. Do you think we are sort of using that full potential?
Heavyweights continue their gradual climb, but mid-caps under pressure. Consumer durables and utilities are the big drags, even as IT, metals and autos eke out gains.
Tata Motors arm JLR has announced a £500 million investment to transition to parallel production of ICE, EV and hybrid vehicles at its Halewood unit. The move is part of JLR's plan to electrify all its brands by 2030, the Tata Motors stock gains.
The Karnataka government is considering a new 5-year policy to promote EV and strong hybrid vehicles with road tax exemptions, incentives for customers and capital subsidies to draw automakers. Maruti climbs on that news.
China may be considering an infusion of 1 billion yuan or $142 billion into the biggest state banks to increase support to its ailing economy. The move a part of the economic stimulus package to give a fillip to commodities. A very good afternoon. You're watching Halftime Report. I'm Ekta Batra. With me is Manglam Malu, and it's turning out to be a session where we're just about consolidating our gains above 26,000 for the Nifty as we speak. So good going there. But we have the mid-cap index, which is sulking a bit again. So the mid-cap index, which is down around 0.5% at around 60,133 odd levels today. Advanced decline ratio on the declining side. So it currently stands at around 1,700 stocks advancing to around 2,200 stocks declining on the Bombay Stock Exchange. It seems as though it's a day for the frontliners. Broader market seeing some amount of pressure. Hi, Manglam.
Hi, Ekta. Take that point. Broader market seeing some pressure, but it's absolutely okay with the kind of up move that we've seen. The Nifty continues to move higher, and what's interesting is it's also, the September series expiry. This will be the 4th consecutive series that we will see gains on the index, and that's not been the case for the last many series that we've been tracking data for. Nifty comfortably around that 26,090 mark. Let's see whether there is a melt up towards the second half of trade, largely because a lot of calls written at the 26,050 and 26,100 mark as well. Meanwhile, some lines at the bottom of your screen coming in from SpiceJet, so we'll keep an eye out on that. Of course, we heard a lot from the management in yesterday's interview with CNBC-TV18 as well, so we'll keep an eye out on developments out there. Currently, the stock marginally in the green. But let's take a look at some of the big movers today. IEX trading higher on the back of an Investec initiation. Vivek joins in with the details of that one. Vivek, what is it that Investec is saying?
Well, Investec has initiated a long fast as far as IEX is concerned. What they're saying is that given the fact that the stock has plummeted almost 17% in the last 2 trading sessions, mainly due to media reports about an upcoming submission of a simulation report by Grid India, post which CERC will decide on market coupling timelines. Remember, IEX, the biggest overhang on the stock has been the fact that there is the overhang that market coupling could come into effect. Now, what Investec mentions is that they have no insights on timelines for the notification, but they believe the process of operational implementation of market coupling could be quite lengthy and may not significantly benefit the power ecosystem. Expect IEX to deliver a healthy overall volume growth of 44% and a core volume growth of 17% for Q2 FY25 that they expect to ensure that the company will see an EBITDA growth of almost 30% on a year-on-year basis as far as Q2 FY25 is concerned. They also say valuation is now corrected to 35 times 1 year forward price to earnings, while other exchanges are actually trading at close to 45 times. So they believe this offers a good buying opportunity as far as IEX is concerned.
Okay, all right, Vivek. Thanks very much for that. That's on IEX. But Vedanta is trading in the green as it is set to consider its 4th interim dividend for FY25 on the 8th of October. Nigel is here to give us more perspective on all of the dividends they've considered and what this means.
Well, that's right. Vedanta has got a global tailwind as well for them because the Fed is going to be cutting rates, which is positive for metal counters and positive for base metal prices as well. And that's the best exposed out there. The other factor is China is looking to pep up the economy. And if China comes back, then metal prices normally do well. So they've got a global tailwind from firing from both sides, the Fed as well as China. In company-specific news, though, they're going to be considering their 4th interim dividend on October 8th. To give you a context, well, in this year so far, we're only 6 months into the year, and they've already given dividend of close to around 35 rupees. At the start of this year, the stock price was around 280 rupees or thereabouts. And, if you just put that in context, well, the dividend itself has been close to around 15% or thereabouts. So it's been giving out good dividends. But you'll question, why are they giving dividends? Well, the promoter entity is the biggest beneficiary. Every 100 rupees that comes out, nearly 57% goes to themselves itself. And Vedanta Resources, they get 3 broad revenue streams. One is the dividend, second is the brand fee, and the third is if in case they do sell out any stake, then they can use that. And Vedanta Resources wants to keep its debt obligations under check. If Vedanta Resources is in a better space, it gives further tailwinds to Vedanta Limited, which is the Indian listed stock. After some underperformance in the last few years, Vedanta is making a comeback and making a comeback in style. Global tailwinds as well as the dividend hope.
Right, Nigel, thanks a lot for that. So that's about Vedanta closing in on that 500 rupee mark for the share at the high point of trade. But Trent is the one which is the biggest mover that we've seen in the last 6 months, the last 12 months, whatever time series that you look at today as well, doing extremely well. And after this up move that we've seen already, brokerages believe that there's still some room for more. Nimesh joins in with the details of the Citi note on Trent and other reasons why the stock is buzzing.
Well, Mangalam, what a wealth creator this stock has been, right? I mean, you've been tracking so closely. So, a couple of reasons today the stock is buzzing in trade. First, Citi has initiated coverage on the stock with a buy rating and a target price of 90 to 50. This seems to be the most aggressive as far as target price is concerned. They've also added the stock to their Pan-Asia high conviction focus list. Now, the company has seen a big transition from a single format to a multi-format and a multi-category leader player, which has led to a revenue CAGR of almost 36% between FY19 and FY24. However, from here on, Citi expects for even faster growth of between 40 to 50% as far as revenue and PAT CAGR is concerned between FY24 and FY27. So that's a kind of growth trend is going to report according to the Citi note. The second reason is the Nifty inclusion. Remember, the stock will get added to the Nifty effective from close of tomorrow, which is September 27th. Now, according to the brokerage notes, this is going to lead to an inflow of around $600 to $700 million. JPM is at around $670 million, which means a buying of close to 74 lakh shares. It's a thinly traded stock, so we need to see whether there could be a big supply on this. If not, you can see a big reaction tomorrow as well. So, as I said, two reasons why the stock is buzzing. One, the Citi note, and the fact that the stock is now getting added to the Nifty effective tomorrow's close.
Okay, all right, Nimish. Thanks very much for that. In fact, Zaggle Prepaid is higher on trade today. Earlier, we did speak to the MD and CEO and co-promoter. And he says that the company is on track to meet their FY25 40 to 50% growth guidance. Listen in to what he had to say.
Simple. The whole ecosystem has evolved in the last decade or so. Tax filing has gone up. There are more and more individuals and companies filing, whether it's their income tax, whether it's their GST. And we are seeing this complexity increase because the way people's salaries are getting augmented with rental income, with investments, with other sources of income, filing taxes for millennials has become increasingly more complex. It would be a part of our bundle in terms of our SaaS revenue, Prashant, right? So we'll be able to increase our SaaS fees per corporate. The number of corporates that we think would be interested in this sort of a service would run into thousands, right? Because every company has employees who have these challenges. We are absolutely on track for that. And in fact, in the last analyst call also, we had said that depending on how our numbers shape up at the end of Q2, we may up the guidance, and Q2 seems to be shaping up really well. All the growth that we're talking of, 45 to 55%, is organic.
All right, so that's the view coming in on Zaggle Prepaid. We'll take a short break, come back at you more on the markets, and also chat with Anuj Sethi, who's a senior director at CRISIL, to put the spotlight on the apparel sector ahead of the festive season, just after the monsoon as well. So what is the expectation from this sector? We will get a handle from the experts at CRISIL. Stay tuned.
Or there's a long distance to go?
Well, look, going to China, okay, national security, America was overly reliant. That's not being angry at them. You should ask why we didn't do it before, but in terms of rare earths, semiconductors, penicillin, ingredients for pharmaceuticals, obviously every nation look at it and say, we can't rely on someone who might one day be an adversary, that doesn't make them an adversary today, for supply. Just like JP Morgan's always have multiple diverse supply chains, we don't rely on anything. The second one is around disagreements around policy, like if countries are aiding and abetting industries to dominate global industry and beggar thy neighbor, well, that's not going to work either. So you're going to have people, they're going to be hard fought. It's not going to cause deglobalization, but it's important that countries do that. And so, and it's just starting. It would take years. The semiconductor, you're talking about 5, 10, 15 years. So even if it's going to take place, it's going to take a long time. But companies are doing it on things like iPhone. I know iPhone production. So some things can move quick. Some will take years. Huge opportunity for China. I mean, for India. A huge opportunity for India. People call it the China plus one strategy now, that companies that relied solely on China are going to look at India, Vietnam, Malaysia, Indonesia, etc.
We've got US elections, and I think one thing which both Democrats and Republicans agree on is China. You'd agree with that. I mean, in that sense, what's happening is in a way irreversible. The break in relations, sort of a Cold War.
I think you have to be very specific in this one. I think national security everyone's going to do. unfair trade, everyone's going to do. I think because of the Ukraine, the terrorism in Israel, Russia, Iran aiding and abetting, China's kind of on the other side of America in that one, so that's causing a lot of the tension. I think the better thing to do is get fully engaged, which they've done, our government, to try to protect ourselves in national security, unfair trade. And yeah, I think if the war goes on, yeah, there will be contentious issues between the far more contentious because of that. So both sides, I think, will be fully engaged. Both sides are going to be tough, but I don't think either side is talking about disconnecting.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Welcome back. You're watching us here on Halftime Report. A bunch of moves in the market itself. The mid-cap index actually is now, moved to the low point of today's trading session, even as the Nifty is moving towards that 26,100 mark. So just keep an eye out on that one. The Nifty has been led, of course, by Maruti Suzuki. Hindalco is doing well. HDFC Bank has moved to the high point of trade, as has Eicher Motors and Tata Steel. So a bunch of stocks aiding the cause of the Nifty in absence of a significant support coming in from the Nifty Bank itself, which is sitting with a gain of 0.25% as against the frontline indices closer to about 0.33%. But this is a good time to put the spotlight on the apparel sector. CRISIL reports do suggest that India's organized retail sector is expected to record a near 8 to 10% revenue growth this financial year, riding on the festive season demand and increasing preference for fast fashion. You and I know that. We've seen that in the numbers of companies that operate in the fast fashion as well, for the first quarter at least. The reports also say that retailers are a little cautious on opening new stores. So to discuss this and more, we have Anuj Sethi, who's the Senior Director at CRISIL itself. Anuj, thanks a lot for joining in. 8 to 10% growth this year on the back of a good festive season is still lower than the compounded growth that the sector has been reporting between, say, FY18 to FY23 itself. I wanted two data points from you. One, in the first half so far, basis your conversations with the companies, what has the growth been? And what is it that you're anticipating in the second half? And how does the second half in particular compare with all the other years in the previous times that the companies have reported numbers? Only to understand if the growth is back-ended or there could be weakness in the festive season as well.
Sure. Good afternoon. We are anticipating 8 to 10% growth this fiscal, but it is almost similar to what we saw last year. Of course, it is lower than the 5-year average, but that included a couple of years, post the pandemic, when growth rebounded very strongly. So that number has got skewed up a bit because of that. Having said that, the first half this fiscal has been somewhat subdued. We are still waiting for numbers, but what was evident in the first quarter was that growth was somewhat muted, lower than the actual number we have put out for the full year. But there are some positives we are looking forward, in the second half, which will drive demand. Besides, of course, the two reasons you mentioned, the festive and wedding season. Number of wedding dates in the second half is much more than in the first half. This was the reverse last year. Secondly, we've had a normal to above average monsoon so far this year, which augurs well for rural and the demand from the Tier 3, Tier 4 cities. Third, inflation is under control, which means your cotton prices also have corrected, which means the garments can be more affordable this year. So there are these positives, which we believe will, lead to better demand in the second half of this fiscal. Coming back to your the second part of your question, how is it different from earlier years? Last year we had demand very strong in the first half, and then it started petering out, the second half. This year it's the other way around, and these keep changing, post-pandemic, because post-pandemic growth was in excess of 20%.
Okay, so what is a sustainable growth rate you expect, Anuj?
Yeah, on a steady state basis, about 10% is what we expect should be a sustainable growth rate because the base also has been increasing over the years. We are almost at 2.2, 2.3 lakh crore now.
Okay. So, the other thing that stands out in your report is that retailers are now getting a little cautious on opening new stores. Instead, they are looking at efficiencies in their existing stores itself. How much could these efficiencies aid their margins by? Last year, it was 7%. And as a result of which, on the profitability front, what's the kind of growth that you are expecting? How does that compare with the 5-year average?
Right. See, we are expecting a slight improvement this year to about 7.2 to 7.4% from about 7% in terms of the EBITDA margins of last year. That's definitely a good improvement coming along with the revenue growth. But having said that, it's still at least about 100, 150 bips lower than the trends what we have seen, a long-term average what we have seen. A couple of reasons for that is that some amount of discounting and write-offs continued in the first quarter as well of this fiscal. Last year, that's what impacted the margins. A lot of write-offs had happened because of stocks being carried over suddenly, and cotton prices also corrected. So those write-offs happened, which continued a bit in this quarter. But I think by and large, we are seeing the end of that, and henceforth we should see the demand with the demand improving, the profitability improving. The discounting also should come down gradually as the year progresses.
So what's the profit growth estimate that you have for this year?
It's 7.2 to 7.4.
No, that's the margin, right? So 20 to 40 basis points margin improvement, 8 to 10% revenue growth. How much does the profit grow by?
Profit should grow by at least 10 to 15% over last fiscal.
Okay, so profit should grow by around 10 to 15% over the last fiscal. Just wanted to understand that why are retailers cautious on opening new stores, according to you?
Yeah. See, this is also linked to what has been happening in the last couple of years. It's the value fashion segment, which today contributes about 60% of the overall 2.2, 2.3 lakh crore size of the overall apparel segment, which is growing, in double digits. And here we require stores which are, lower in size compared to, say, in Tier 1 and metro cities. And the fact that these are being set up more in the Tier 3, Tier 4, as well as even in the rural areas, and to some extent in Tier 3 cities. So the spend is not that much what we require for the larger stores in the metros. Plus, the store sizes also are much smaller. These are largely standalone stores also. So that is one reason. So overall, we expect about 38 to 40% reduction in the area under addition, which will come this year compared to last year.
How much would that be according to you? And what's the average addition that we've seen over the last 5 years?
So last year, we saw about 3.6 million square feet being added. This year, we're expecting about 2.2 million square feet to be added.
Okay. Just wanted to understand, if you have to just compare apples to apples, Anuj, I know that, the wedding season would be in the second half and you don't have that data as of now. But if you had to compare apples to apples in terms of, what we saw last year in terms of growth in the festive season and the wedding season and what you are estimating now, what are the key differences and challenges and maybe the growth parameters?
Yeah, see, typically 35 to 40% of the demand for apparel comes in the wedding season, the festive and wedding season. That is the Shara Diwali and up to November. December becomes a bit slack in terms of demand. And then in January, you have your EOSS part 2 starting in the year. So that's how it is. It's very similar to what's happening every year. It's only that, see, the number of where the wedding, the dates come, I think that makes some amount of difference, especially on the premium segment. And also on the some segments like, ethnic clothing. I think those are heavily dependent on the wedding and festive season. So shifting of dates, from one quarter to other definitely makes some difference. That we are seeing very evident this year.
Right. Just finally, before we let you go, if you could leave us with two specific trends. One is that, we've seen a big surge in the way Zudio has grown. Whether that continues, what's the expectation for this year on that one? And secondly, online, we've seen a lot of, sales, fast fashion sales shift online as well. If you could give us a sense of how much online is as a proportion of this fast fashion and at what rate is that growing? Because that could also explain the lower store footprint addition.
Sure. So, while I not comment on company specifics, but fast fashion is gaining popularity due to better affordability, attractive offers, fast sharing trendier styles, and also preference of branded clothes. And all of this is, made possible by fast fashion. Roughly 20-25% of the fast fashion sales is happening online. There are a number of players who have come, plus existing players also have, increased their reach through the online channels. I think that definitely has helped. So this segment is seeing strong growth, but these are also at the garments also at much lower price points. So the profitability to some extent, because you need to keep pushing. And here also some discounting is offered. The margins here also are pretty similar to overall what we see in the apparel industry.
Okay. All right, Anuj, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the view coming in on the entire apparel sector and the kind of growth that we could probably see in the second half. We would probably see growth picking up. Well, for the markets, the Nifty just about higher by around 92 odd points. It's a quiet day. The mid-cap index down around 0.6%. We'll do one thing, take a break. Up next, Aditya Agarwal will join in. He'll discuss technicals with us. Stay tuned.
On the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself. As India's long
Welcome back. You're watching us here on Halftime Report. Perfect time to actually, get you the FNO setup at midday itself. And this at a time when the Nifty Bank is at a fresh record high as well, has crossed the earlier high, still holding, around that 54,200 mark, seeing some profit booking from the highs, but no real worries. The market is at record high. The Nifty closing in on that 26,100 mark as well. This at a time when the mid-cap index is underperforming. All through today's trading session, the mid-cap advanced decline lines come up for you. They've been on a bit of a parallel track with the red line being a little above the green line as well. Not too much to worry, but the second half is something that we'll most definitely keep an eye out on, largely because the Nifty September series expiry will play out. And that's extremely crucial. Why is that? Because while the September series expiry plays out, the Nifty is closer to that 26,100 mark. If you look at the Nifty series moves, 1,500 points in the June series, 362 points in July series, August at 750 points, and September so far, including today's move, we've added almost 1,000 points, 920 points as we speak right now. So to that extent, this is the first time that we will see 4 series of consecutive gains in the last many years itself. So that will be a positive. And let's see where it goes from here itself. Why do I say that? Because 26,100 is an important mark for the Nifty. The 26,000 put has seen a fair amount of writing telling you that 26,000 will be a firm support on the way down. Nearly 2 crore shares written out there. But the 26,100 call is extremely active as well. So the 26,100 call in the Nifty comes up, and there we've seen a fair amount of open interest as well. So if the Nifty does sustain above 26,100, 26,150 thereabouts, we could see a sharp melt up in the second half of trade. That is reflected in the kind of punt buying that we've seen at the 26,150 call, which moments ago was about 18 rupees. Now itself, it's surged to about 28 rupees. So a lot of people buying this, hoping for a bit of a melt up in the second half of trade. So whether that melt up comes in or not is the big question. We'll keep an eye out on that. 26,100 to 26,150 is the congestion zone. If we sustain above that till 3 p.m., then maybe the last hour is a bit of a boom.
Okay, let's see if that takes place, Mangalam. Thanks very much for that. We do have a lot of buzzing stocks around. Easy Trip, for example, is up around 5.8%. Sequence Scientific has rallied around 3% Sale is doing well today. It's picked up around 10% on a week-to-date basis. We have Aditya Agarwal joining in to discuss the technicals of the market. Aditya, hi, welcome to the show. If you could just apprise us of all the Nifty calls that you might have, as well as your individual stocks.
Hi, Ekta. Thanks for having the show. Markets are in a bit of a up move, despite the fact that if I take a look at all the indicators on multiple time frame, everything is suggesting markets are sitting at overbought levels, and there could be a correction around the corner. But if you take a look at the price movement, it's not suggesting any correction at all. In fact, every day we are inching to a fresh record high, both on the Nifty and the Bank Nifty. And as Mangalam pointed out, if I just take a look at the options data as well, 26,000 for the day should act as a key support area where we are seeing a fair bit of put writing as well. On the upside, 26,100 is something that we are eyeing as well very closely. If markets manage to close above or trade above that, maybe for half an hour, 26,100, then I think it makes case for a fresh long in the markets with the stop loss just below 26,000. And I think you can see a 200-point rally then. So 26,300 to about 400 is what we are eyeing on the Nifty from current levels if it sustains about 26,100. I think it's time for the banking index to take leadership again and look at some of the private sector banks, including some PSU names as well, which can start chipping in. So a name like Kotak Mahindra Bank, which has now started to outperform, can continue to to go up from current levels. ICICI Bank, which has been languishing for some time, can start to outperform, and same holds true for SBI as well. So Kotak Mahindra, ICICI, SBI, these three look attractive to me for the banking index, and I think above 54,250, Bank Nifty sustains. I think the Bank Nifty 2 can see a sharp bit of a short covering rally going ahead. Keeping all that in mind, I've got a couple of buy recommendations for our viewers. The first has to be from the banking space. Kotak Mahindra Bank, which is looking attractive to me at current levels, can be bought for a target of 1975 on the upside, with the stop loss at 1865 on the downside. A good bit of a short covering rally we are seeing in Kotak Mahindra Bank, and a fresh long build-up as well. Second is from the Bajaj twins. Bajaj Finance is looking very interesting to me on the chart setup. Both these stocks, I think, if somebody wants to hold on to it at least for 6 months to about a year's time frame, will see excellent returns being made here. So Bajaj Finance for a short-term trade can also be bought at current levels for a target of 78.50 on the upside, with a stop loss at 75.50 on the downside.
Okay, all right, Aditya. Thanks very much for that. Well, we need to take a short break, but before that, here is some good news for you viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates just at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store.
On startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
The valuations are berserk over there. I mean, again, great companies, but and again, I usually don't talk about stocks, but just to put some sense. And again, don't get me wrong, I'm not disputing valuations or anything, but just to give the Infosys example. Let's say our favorite stock this year was, say, Zomato. It's a $30 billion market cap. Let's say we expect the market normally to give you a 15% CAGR for 10 years, which is 4 times. So it should be a $120 billion market cap in 10 years. Let's say it's a 30p by then, because it'll be a fairly large company. So it needs a $4 billion PAT, profit after tax.
So when we say melt up, I just want to sort of finish that point. It usually we are talking about like a frenzied move in the very short term, but that's not what you mean. You think
I mean it makes a major long-term top, which is not a great thing. So I mean, it's great that we are going up on a wall of worries in a way that every time we meet, we are worried about, is this the end? Is this market going to fall? Will the investor flow stop?
Correct.
Will people run away? Markets don't climax at periods like that. And this seems to be more like the 90s bull market, where small caps were doing phenomenally well. And what tipped it eventually, of course, one was the Asian crisis, which happened outside our control. And B, it just got overwhelmed with supply. And that's really what capitalism should do, that prevent what I call that melt up, where the entire market goes up 10x in a decade. And then you don't see that prices for maybe next 10 or 20 years. So I'm hoping we don't get a melt up, and supply response takes care of it. And supply is coming, but it's still what I call a quadrant 3 or quadrant 4 level supply. The big guys haven't yet come. And in the bigger ones, if I take the top 10 companies, no one is supplied. Having said that, the owners of those companies, whether it's BAT selling down ITC or Singtel.
Welcome back. Well, let's focus on an exclusive interview then. I had the chance to catch up with Dr. Kumar Nair, who's the Group CEO at IHH Healthcare, and began by asking him about the Fortis acquisition, the long pending open offer that IHH has for Fortis. Listen in to a very interesting conversation.
I think this matter has wound its way through the courts, Supreme Court, right, and now it's with the Delhi High Court. I would say a lot of the issues have been resolved, right? And this is probably the last final matter, the forensic by Delhi High Court, which is ongoing now, all right? I won't comment on it, right, because it is going through the courts at the moment. And we anticipate that once it is resolved, we'll let the court process, go through its, usual route. We will, and then we'll have to decide what to do next. The open offer was at $170. Fortis today is at 600 plus, all right? So we will have to make a decision on how we move forward. There are many ways in which we can increase our stake, as you know, all right? But one thing's for sure, we will be staying in India and we will be staying with Fortis.
So there's no chance of selling out that 31% stake?
Absolutely not, all right? We have got Fortis, we've got Gleneagles, we've got twin engines of growth in India, and given the attractiveness of the Indian private healthcare market, we intend to stay and grow in India.
But what do you think about this long journey of litigations, which is still not over at this point in time? Was there a time where IHH rethought its decision of acquiring Fortis?
Well, to be very honest, I think there were times when we were wondering what we got into, right? But over the years, most of the matters have progressed and resolved, one by one. There were several matters going on at the same time, right? So most of them have been resolved, right? And I think we feel, right? I don't want to judge what's going to happen, but we feel that we are at the tail end of this matter, all right? And we really will have a chance to go ahead, all right? Both with Fortis and with Gleneagles, all right? And increase our presence in India.
So when do you expect to hear back on the open offer?
No, can't predict that for the moment.
Probably by the end of this year
Hopefully
or next year?
6 months to a year, hopefully. Yeah.
Okay. Well, this is a hypothetical situation, but if in case the open offer does get approved,
yes,
like you mentioned, the price was 170 rupees. Today, it's over 550 or 600 odd rupees for Fortis in terms of a price. What will IHH do? Will there be a revision of an open offer price on the higher side? What is the decision?
Okay, given that we would like to increase our stake, I think we would have to revise, right, our offer to the other shareholders. So that's probably what it will take for us to do it.
Okay, so you will probably revise the price higher for the open offer if in case you do get that permission to go through. On the other hand, if in case the open offer does face hurdles again, what will IHH do? Will it go through any other route in order to increase its stake? Because currently you do have minority stake.
Yes. Well, first of all, I must say we are happy with what we have at the moment. As I said, we control Fortis, right? Fortis is improving year by year, operational metrics, financial metrics. There's no restriction to their growth. As you can see, they bought a hospital in Manesar, they disposed of 2 hospitals in the south, right? And they're looking at more acquisitions. They've got a plan to expand by 2,000 beds from their current 5,000 beds purely by brownfield expansion.
Correct.
Right? So that's their same store growth, essentially. Right? So Fortis can continue to grow, all right? And we hope there will come a day when we have, few years down the road, when we have between the 2 entities about 10,000 beds, all right? That will bring us maybe into the top 3, right, hospital groups in the country. That's our aspiration, right? So I think Fortis can, even with the stake we have now and the current growth trajectory of Fortis, it will continue to grow, right? But of course, we would like to increase our stake, either increase the open offer, we can do a creep, all right?
Creeping acquisition, 5% every year.
We can do that, 5% every year, we can do that. Down the road, maybe we can look at folding Gleneagles into Fortis, that's another option. Not envisaged at the moment because both of them are growing very nicely.
Okay.
Right? And we can talk a little bit about Gleneagles as well because that's another growth story.
Okay, so a buyback, creeping acquisition, all of these are probably on the cards if in case the open offer does not go through as planned.
Yeah.
Okay, and possible merger of Gleneagles as well as Fortis could be something that you could consider later.
Yeah.
Okay, how is Gleneagles doing? Because we have the numbers for Fortis, Gleneagles is not listed.
Well, yeah, so Gleneagles is not listed, but Gleneagles is our international brand. So that's the first thing I must say. It's a very well-known brand, started 65 years ago in Singapore. We have Gleneagles in Hong Kong, we have Gleneagles in Malaysia, we have Gleneagles in East Malaysia, even in Brunei. It's a joint venture with the Brunei government. So Gleneagles is a well-known brand. So we decided when we had to, after we bought the promoter's stake last year, exactly 1 year ago, we renamed it from Global to Gleneagles.
Okay.
Right? So firstly, it's a very well-known brand. Secondly, if you look at the operating and financial metrics of Gleneagles, right? They were, when we went in, EBITDA was, in the single digits. Today it's in the mid-teens, all right? It's improving. We have revamped all the hospitals. If you now walk into the lobby of Gleneagles Hospital, you see the consistent Gleneagles look, right?
Correct.
We have brought in a lot of equipment, CAPEX, right? MRI, CT scans, PET CTs. All these are equipment that you will find in a Gleneagles Hospital today. And they do some really cutting-edge work. Gleneagles does one of the highest transplants in the country.
Okay.
And not just liver transplant. In Mumbai here, they do limb transplants, people who have got severe limbs. So very, very high quality work is going on in Gleneagles Hospital as well.
So just on, the branding part of it, because we do understand that there's a litigation with regards to the Fortis brand as well. You had that problem with the diagnostics arm and then you rebranded it to Agilus. But your Fortis brand, what is the current pending litigation? And is there a plan to rebrand the Fortis hospital chain in India?
We would like to keep the Fortis name, right? It's a well-known name, right? But you're right, there is also litigation involving the Fortis. There was also SRL, and that's why we rebranded it to Agilus.
Yes.
So that's also winding its way through the courts, all right? And we will see the outcome, all right? The Fortis name may be up for sale, all right? And if possible, we will acquire it.
And by when would we hear on this particular litigation?
I think that's also within the next 1 year.
Okay. And what about the forensic audit? What kind of audit is going on when it comes to this forensic audit case?
That's with the Delhi High Court at the moment, so just leave it there.
Okay, all right. Well, we spoke about the entire rebranding exercise, and that's what took place with Agilus, your diagnostic arm, and now we have Fortis, which is buying the remaining stake of around, I think, 31% of private equity. What do you feel about that, considering that the private equities did not get any kind of exit since 2012?
Okay, so my personal view on the diagnostic business is that it is integral to a healthcare delivery organization, to large healthcare organizations. And so in all our countries, Singapore, Malaysia, and Turkey, our 3 big countries, the labs are the biggest, all right? And they support the hospitals. They have considerable outreach as well. And likewise in India, we need to have a big lab for our 2 entities, all right? So Agilus is what it is, and we like to keep it. And hence, when the IPO did not materialize, we encourage Fortis to take it, right? Agilus, and that's what's happening now. Agilus is probably the second or the third biggest lab in the country, by my reckoning. And we again certainly would like to build it up. And the lab business today is just not consumer business, which is very big in India, not necessarily so in other countries. It's very big in supporting hospitals, right, for the high-end work they do. But there's an element of the laboratory business that is very exciting. And this is what I call the high-tech lab business. Molecular genetics, genomics, precision medicine, and all of these are required to support oncology primarily.
Correct.
And oncology, as you know, if you look at the specialty mix of private hospitals in India, all right, used to be heavily weighted towards cardiology and neurology, neurosurgery. Today it's shifting to oncology. And oncology requires accurate diagnosis, all right, before treatment can commence. And that's where molecular genetics, precision medicine comes in. So we would like to bring up our laboratories to that level And for that reason, we have also created IHH laboratories, all right, which is at the group level, all right, and will support the in-country laboratories, all right, to move up the technology ladder.
That's happened. But it's not like the Reliances or the Tatas or
They've
someone
tapped
has
for
come
the new businesses
with massive issuances, which I think is around the corner. It should come.
I mean, bankers we speak to tell that over the next 12 to 18 months, about $25 billion worth of IPOs should happen. But that is, I'm not sure how much of the...
So, Prashant, 25 also, I'm saying, is a small number now. It's a $5 trillion market cap. So if you don't do 50 billion, is 1%. So issuance is, the government ought to be doing 25 billion. The larger groups easily can take 25 to 50 billion. And this is combination of primary and, of course, QIPs and so on. We've seen promoter selling, we've seen PE selling, we've seen MNC strategic selling, and it's gone from across the world, right? If GE of US has sold, Whirlpool has sold, BAT has sold, Sumitomo from Japan has sold, Singtel has sold, and now Hyundai is approaching the market. So all these chaps are getting it right. But we still haven't come and raised the money.
And that will happen according to you?
I think it's inevitable. I mean, that's what capitalism is, right? That demand for paper will create the supply.
And we are a long way off from that climax. Or
I hope I'm not proven wrong next week, but I think this has legs to go.
This has legs to go. PSUs, capital goods, real estate, infrastructure, that's essentially been the leader of the bull market. But people, defense, etc., right? That part, it looks like we're starting to rotate, people are starting to rotate out of that.
Which is inevitable.
Inevitable. You think that's done, or is just like a pause and refresh case here?
Again, in terms of market cycles, when you see the leaders of every cycle, then they go to sleep for a decade. So the leadership of 2000 to 2007, which you were earlier alluding to, was indeed commodities and infrastructure, power, real estate. And then the excesses which happened in that period made them complete pariahs. So if 4 years ago, we were on a show and Ramesh and I remember we would talk about PSUs and everyone was like sniggering, like what's wrong with these chaps. But because the correction had been so steep that it's eventually an investor's job is about valuation. Like I said, the greatest Infosys may not give you the return, and the what so-called poorest PSU may give you the best return. So it was a mean reversion trade which happened, and of course all the right policy things happened for infrastructure and defense and railways and so on. So you go from being what I call terrible to bad is a rate of change, but you went from terrible to being good. So that rate of change is so dramatic that's what the markets have discounted.
And now maybe to great.
And now you're imagining it to be great. Some of them may make it, but most of them won't. So I would be very, very cautious in those kinds of places. And typically these are not high return areas. By definition, if you make 25% IRR in an infrastructure business, the cost to the consumer, which is the average public, is going to be too high. So your money made is really on leverage, and therefore the return on equity comes in that business. So, and people are shy of doing leverage after again the last cycle.
Welcome back. 100 points on the Nifty. The Nifty is up around that 26,100 mark. That's the headline of the day. It set a record high, conquered the 26,100 mark. And what's literally driving the Nifty higher is Maruti, pun unintended out there. 4.5% gains that we've seen on that stock itself. Crossed past that 13,350 mark as well, just about 2% away from a fresh record high on that stock as well. In fact, the entire auto pack is abuzz this afternoon. Tata Motors at the high point of trade as well. We're seeing a couple of these two-wheelers do extremely well too. So we have Eicher Motors, which ahead of the festive season has seen a bit of attraction. So Bajaj Auto is the other one in terms of the two-wheelers which are doing well. The only one which actually is underperforming by staying at the low point of today's trading session is M&M. Actually, that too has spiked up. That was sitting with a gain of about 1%. Now, M&M has moved to the high point of trade as well. That too has recovered about 3% from low. So that was underperforming for most part of the day and now has moved higher as well. So it's gains coming in from the auto sector, which are driving gains for the frontline index. The mid caps, not so much. The Nifty Bank sitting with a gain of almost 0.2%, which again is a bit of an underperformance if you look at the other frontline pack as well. So metals and autos, both of them leading gains for the market. Take a short break. Come back on the other side. We get you more stock-specific action. Stay with us.
To just complete. The leadership of the last cycle was all the high quality businesses in the last decade, which were all getting re-rated. Asian Paints, Page Industries, Kotak Bank,
consumers,
HDFC,
retail.
even, and including banks, because banks became 30% of the index. And you're seeing that getting corrected, that Kotak, HDFC haven't performed for the last 5 years. Again, great companies, but it's the excess of that which is now getting reverted back. And now they've become so hated that when will HDFC move? And there are memes on HDFC doing the round the way it was for ITC. And then you saw the way when ITC moved, it just doubled before anyone realized it.
You think...
so things like that tend to happen. I can't forecast what will happen in...
But you're very bullish on the financialization theme.
I am very much.
The magic one that everybody is talking about at this point in time is AI and what AI can do, and specifically generative AI. How do you see that linking back to the efforts on the healthcare side, the innovations that you're working on? I mean, how transformative is AI likely to be, or are we on the cusp of seeing that kind of transformation?
Usually when you get new technology, it's applied in the rich world for those who are well off. And what we'd like to do this time with AI is make sure, both in terms of discovering new interventions for nutrition or vaccines or drugs, and helping give people health advice.
Welcome back. Well, building on gains currently for the Nifty, so 26,100 is currently where the Nifty is at. We have the mid-cap index, which is under pressure, so that's the only sore point in today's trading session. But we need to wrap up on the show. Let's get you some market opinion as we do that. Market veteran Ramesh Damani says the Indian market is now transitioning from mid-caps to large caps. He also shares his thoughts on the retail participation in the F&O market. Listen in.
जो सेबी की जो रिपोर्ट आई थी अभी 1-2 दिन पहले, वो बोल रहे थे कि retail public who has gone primarily into futures and option trading have lost money. उनके हिसाब से 90% have lost money, which is about 1 crore of people. 50,000 crore रुपया नुकसान किया उन्होंने, 50,000 crore रुपया उसने किया. 50,000 crore रुपए में could buy the complete Tata Elxsi or companies like Biocon. That is the amount of money they lost. So it is bittersweet. मुझे बहुत अच्छा लगता है कि Indian prosperity में Indians participate कर रहे हैं. I feel a bit sad that people are playing in the F&O market without understanding the market. Market is, bull markets have length. Bull market कोई permanently चलता नहीं है. कहीं न कहीं जाके रुकी जाता है. We are very lucky, we're very blessed. Unlike China, Thailand, Japan, who haven't had new highs in almost a generation, investors, Indians have constantly seen new highs in the market out there. So very blessed. Having said that, it just seems to me that the market is now transitioning from mid caps to large caps. Leadership has shifted in the market. And typically, if you have a very ferocious rally from this point, that would signal some sort of, ending of the bull market. मेरे को जो लगता है ये जो K-pop के जो shares आने हैं, Hyundai, Samsung, they'll all start coming with IPO soon in India because they're getting such valuations in India. So why won't they encash it out there? That will suck up a lot of market liquidity from the secondary market, and that would be kind of a warning sign of trouble ahead.
In voice and their native language, that we actually bring these AI advances to those most in need. I mean, after all, where's the greatest shortage of doctors? It's in developing countries. And so the foundation is leading the way by giving grants to various people and pushing this forward, even for a topic as complex as nutrition. The AIs are going to help us understand things faster than we would without it.
If you could do a startup all over again and focus on AI, what would the niche be that you would like to address?
Well, if you could go back to my school days even, and then I was saying, hey, how do we make software as smart as human beings? And I was constantly thinking about it. I underestimated how long it would take, but here we are on the cusp of that. And so now the lens I apply is the lens of the foundation. If I was somebody young, sure, I'd compete with, OpenAI and all these people. But, now I'm in the stage of saying, how do I help other people work in AI apply it to those most in need?
As far as India is concerned, the role and relevance and the significance of India, especially as far as the foundation is concerned, and what you're hoping to do on the innovation side.
So India's the country the foundation does the most in. Other than the US, that's our largest group. We have a great team there. We work a lot with the national government and many of the state governments. And not only do we see in areas like nutrition or using ultrasound to detect a difficult pregnancy, we're doing a lot of studies with our partners there, which will have a benefit for India. But also, because the digital infrastructure in India is so strong, we can try things out there and take them to other countries. The digital infrastructure itself is a great example where the leadership has laid that foundation, and now both India and Gates Foundation are going to Africa and other places and saying, hey, you should do the same thing.
Was there a specific learning from this trip to India for you?
Well, it was pretty amazing in Odisha to see how the digital approach was connecting with farmers, that they had categorized which farmers were in which location, what were they growing. And so when they would see crop disease outbreak, they could...
Index heavyweights continue their gradual climb, but mid-caps come under pressure again. Consumer durables and utilities are the big drags, even as IT, metals and auto stocks eke out some gains.
Tata Motors arm JLR has announced a £500 million investment to transition to parallel production of ICE, EV and hybrid vehicles at its Halewood unit. The move is a part of JLR's plan to electrify all its brands by 2030. The Tata Motors stock gains.
The Karnataka government is considering a new 5-year policy to promote electric vehicles and strong hybrid vehicles with road tax exemptions, incentives for consumers and capital subsidies to draw automakers. Maruti shares are at the highest point of the day.
China may be considering an infusion of 1 billion yuan or $142 billion into the biggest state banks to increase support to its ailing economy. The move, a part of the economic stimulus package, given a fillip to the commodities.
Good afternoon. You're watching Business Lunch here on CNBC-TV18. I'm Hormas Fatakia. With me is Vinny Motiwala as always. It's a good day again for the Nifty, Vinny. Good afternoon to you. And it's the Nifty expiry today, so it's a big day to watch for the index.
Big day to watch. Let's see how the volatility moves, but not a bad day, right? 26,000 is what the Nifty is holding on to. Broader markets, that's continuing to see that bit of a red, and that selling that we're seeing yesterday seems like that's continuing today as well, Hormas, because that's underperforming.
Yeah, it is underperforming, but the Nifty is the one to watch out for, right? 26,100 is where the index currently is, nearing the highest point of the day. It's the monthly expiry, and it is going to be the 4th straight positive FNO series for the Nifty, and now almost 900 points higher for the index in this September series. So it's been a good one, one that has had many records for the index. But yes, just as Vinny was highlighting, the broader markets are under a bit of pressure. But what's doing well though are auto stocks, and Maruti, and both Maruti and Tata Motors are doing well in the session. Maruti is at the highest point of the day, now 4.5% higher on the stock, now almost at 13,400 is Maruti, and Tata Motors too surging at the highest point of the day here as well, with gains of around 2.5%. What is also doing well along with auto are the metal names, and that is also courtesy these hopes of more stimulus coming in from China, and most of these metal index constituents are trading with gains, be it the likes of Hindalco, Vedanta, Nalco. All of them are seeing healthy gains in today's trading session. But yes, the broader markets, Vinny, are in some sort of pressure.
Broader markets in some sort of pressure. Only name in auto that is not doing well today is Hero MotoCorp. But let's move on and let's get you an exclusive. Sources are telling CNBC-TV18 that the government could mull including core inflation figures in the upcoming CPI release. Sapna is here to tell us more details on that. Sapna, what are you picking up on this front?
Well, as of now, this is not even probably at a discussion stage, but we are given to broadly understand that, at some point in time, the future CPI releases could have more options in terms of the inflation estimates. Now, we should be aware of the fact that the Ministry of Statistics has already got some recommendations in the open house that was conducted just 2 days back in Bombay, wherein, a number of forecasters and economists have told the ministry that they should start compiling core inflation number. Now, we are aware about the fact that the current CPI release carries two options. One is, of course, the overall CPI general number, which is a number that everybody watches out for, and the food inflation number. What we are now talking probably about is having a core inflation number as well into the release, and probably even having one more data point in terms of numbers excluding food inflation. So we are talking about 4 options actually, 2 plus the 2 that I have spoken about. Now, some kind of a discussion, debate will have to unfold in the government on this. And what is the timeline for this to really happen? This is something we have to wait and watch and see. There's already a lot of background discussion going on in terms of finalization of the change in the base year of CPI, so that also needs to be kept in mind. But broadly, we have been clearly indicated that these are some of the discussion points that may come up within the government, internally as well as externally, and we have to keep a watch on that. If this happens, 2 more options into the CPI print, that will be very, very important for policy making and other areas as well.
Thank you so much for that, Sapna. But the Nifty indices rejig, that will be coming into effect from tomorrow. Which are the stocks there? What are the inflows that we're expecting? Surabhi is joining in with us. Surabhi, good afternoon.
Hi, good afternoon. Well, a couple of changes coming into the NSE indices tomorrow. This would be for the Nifty 50, the Nifty Next 50, the Bank Nifty and the PSU index as well, the PSE index. So let's go over some of the key changes, starting with the Nifty 50. Just a reminder, Trent and BEL will make their entry into the Nifty 50, and Divi's and LTIMindtree are on their way out. And on the back of these changes, Nuvama estimates that Trent is going to see inflows of about 702 million. Remember, these are inflows because of the passive funds that are, investing in stocks based on the indices. Similarly, BEL will see an expected inflow of about 430 million. Divi's and LTIMindtree, they both go out, and the outflow from both of these stocks individually would be around 235 to about 290 million each. Let's talk about the weight increases. Cipla and HDFC Life will see a minor increase in weight, because of which Cipla might see an inflow of about 12 million. Coming to the Nifty Bank, good to remember here that Canara Bank makes its way into the Nifty Bank, and Bandhan Bank would be out. And of course, all of this is effective Monday. Tomorrow, end of trade, is when the changes will actually be put in motion. And because of this, Canara Bank would be receiving inflows of about $90 million. There are lots of inclusions in the Nifty Next 50 as well, and then of course exclusions as well. The inclusions, just to put that on your radar, would be Divi's, LTIMindtree, JSW Energy, Macrotech Developers, BHEL, NHPC and Union Bank. Now, I thought I'll pick out just, 6 or 7 stocks where the inflows would be the most because of index changes and the passive money that's coming in the stocks. So the one to top that list actually is, of course, Trent. $495 million worth of inflows expected. The next one is BEL, 336. Canara Bank, which comes into the Nifty Bank, is the number 3 stock here on the list, $92 million. And then you have JSW Energy, Lodha, NHPC, BHEL. All of them are receiving flows as well, anywhere between 25 million going up to about 50 to 55 odd million. So those are the key changes for the Nifty 50, the Nifty Bank and several other indices as well.
Well, it's raining in Mumbai, it's raining on Dalal Street as well, but that are the dollars that are raining on the stock. Surabhi, thanks a lot for that. And staying with the changes to the index, Trent will be entering the Nifty from tomorrow. The stock has been a phenomenal wealth creator, doubling in the last 6 months itself. Mangalam is here to give us more on this Tata Group giant.
If you ask a technical analyst, they will say Trent has always been in an uptrend.
But is it going to be styling again? And it's been in style for a few years, and it's going to continue, I seem
so long as the stores have stuff which is trendy, this Trent stock will remain trendy as well. But why it is called Trent? Because it's a portmanteau of Tata Retail Enterprise. Club all of that together and you get Trent. It will make its way into the Nifty tomorrow. And what a wealth creator it has been. If you look at, the recent time series data of the stock itself, in the last 6 months, it's 101% gain. 2024 so far, 160%. Last 12 months, 265%. And if you extend that timeline to 3 and 5 years, it's a 9-bagger or a 16-bagger over the last, couple of years or so, a big wealth creator. And as a result of which, it will enter the Nifty. And this entry into Nifty will bring it about $0.7 billion of passive inflows as well. But speaking about the Nifty and Trent, one can't ignore the massive presence of the Tata Group itself in the Nifty. Trent will be the 6th Tata Group to be included in the Nifty. So if you look at, the Nifty stocks and the Tata Group stocks out there, you have TCS, Tata Motors and Tata Steel, who've been around in the Nifty for a while. The last 3 or 4 changes on the Nifty, you had at least one of the Tata Group stocks as well. So if you look at names like, Titan and Tata Consumer, were all new entrants in the recent few years itself. So that makes Trent the 6th in terms of Nifty. But not only is it the 6th Tata Group stock in the Nifty, it's also the 4th largest Tata Group stock in terms of market cap, behind only TCS, Tata Motors and Titan. TCS is 15 lakh crore, Tata Motors around 3.6, Titan about 3.3, and this with the kind of wealth creation that it has done, it's done 2.78 lakh crore in market cap itself. Speaking of Trent's market cap, it's extremely interesting to look at the market cap of all other retailers and the stark divergence between Trent and the others as well. So you have Trent at 2.78 lakh crores, V2, Canterbury, Credo, Spencer's, Aditya Birla Fashion, all of them are much lower. So what I did was I took that list and I clubbed all of them together. Look at Trent, that is 2.78 lakh crores. Add all of them together, is just 71,000 crores. So that's the stark difference. But if you add Trent and all the others, you actually get Avenue Supermarts, DMart's market cap at 3.38 lakh crores. And what's even more interesting, if you add Trent, others, and Avenue Supermarts, you get very close to Reliance Retail's latest valuation of $100 billion. But for all its wealth creation, Trent has actually reported massive growth in its numbers as well, thanks to Zudio. Even the most recent LFL has outdone the industry peers. So if you look at, the Q1 FY25 like-for-like growth, it is 22%, and this on a high base of 63% and 31% already. And if you look at the store footprint as well, Zudio, it has now two times more Zudio stores than Westside, and the company is also seeding more formats. So the obvious question is, where to from here? Citi believes there is room for even more. They've initiated buy on the stock today itself with a target price of 92.50, including Trent in the Pan-Asia high conviction focus list. In fact, transforming the company from a single format to a multi-format and multi-category player has led to this higher revenue CAGR, which they expect to be anywhere between 40 to 41%, leading to profit growth of 56% over the next 3 years on a compounded basis. So in Trent, and a lot of wealth created.
Indeed, and as you mentioned, right? It's ask a technical analyst. Trent always in an uptrend. Thanks a lot, Mangalam, for that update on Trent. Time for a short break. Up next, we get you the latest as of the state of Karnataka eyes an electric vehicle policy to attract more investments. Stay tuned. Back on the other side.
The valuations are berserk over there. I mean, again, great companies, but and again, I usually don't talk about stocks, but just to put some sense. And again, don't get me wrong, I'm not disputing valuations or anything, but just to give the Infosys example. Let's say our favorite stock this year was, say, Zomato. It's a $30 billion market cap. Let's say we expect the market normally to give you a 15% CAGR for 10 years, which is 4 times. So it should be a $120 billion market cap in 10 years. Let's say it's a 30p by then, because it'll be a fairly large company. So it needs a $4 billion PAT, profit after tax.
So when we say melt up, I just want to sort of finish that point. It usually we are talking about like a frenzied move in the very short term, but that's not what you mean. You think
I mean it makes a major long-term top, which is not a great thing. So I mean, it's great that we are going up on a wall of worries in a way, that every time we meet, we are worried about, is this the end? Is this market going to fall? Will the investor flow stop?
Correct.
Will people run away? Markets don't climax at periods like that. And this seems to be more like the 90s bull market, where small caps were doing phenomenally well. And what tipped it eventually, of course, one was the Asian crisis, which happened outside our control. And B, it just got overwhelmed with supply. And that's really what capitalism should do, that prevent what I call that melt up, where the entire market goes up 10x in a decade. And then you don't see that prices for maybe next 10 or 20 years. So I'm hoping we don't get a melt up, and supply response takes care of it. And supply is coming, but it's still what I call a quadrant 3 or quadrant 4 level supply. The big guys haven't yet come. And in the bigger ones, if I take the top 10 companies, no one is supplied. Having said that, the owners of those companies, whether it's BAT selling down ITC or Singtel selling down Bharti, that's happened. But it's not like the Reliances or the Tatas or someone has come with massive issuances, which I think is around the corner. It should come.
I mean, bankers we speak to tell that over the next 12 to 18 months, about $25 billion worth of IPOs should happen. But that is, I'm not sure how much of the...
So, Prashant, 25 also, I'm saying, is a small number now. It's a $5 trillion market cap. So if you don't do 50 billion, is 1%. So issuance is, the government ought to be doing 25 billion. The larger groups easily can take 25 to 50 billion. And this is combination of primary and, of course, QIPs and so on. We've seen promoter selling, we've seen PE selling, we've seen MNC strategic selling, and it's gone from across the world, right? If GE of US has sold, Whirlpool has sold, BAT has sold, Sumitomo from Japan has sold, Singtel has sold, and now Hyundai is approaching the market. So all these chaps are getting it right. But we still haven't come and raised the money.
And that will happen according to you?
I think it's inevitable. I mean, that's what capitalism is, right? That demand for paper will create the supply.
And we are a long way off from that climax or whatever.
I hope I'm not proven wrong next week, but I think this has legs to go.
This has legs to go.
Welcome back. You're watching Business Lunch on CNBC-TV18. And let's move on. And the Karnataka government, that's considering a new electric vehicle policy. And this is with the demand to lead measures likely as the state is eyeing a 50,000 crore rupees worth investment by 2029. Let's go across to Parikshit, who's here joining in with us to give us more details on that.
Well, the Karnataka government has been holding discussions on a very ambitious 2024 to 2029 electric vehicle mobility policy. And we believe that this policy is now in the final stages, and possibly by October, we could see the final contours being announced. Now, what does this really say? Well, the state government is considering exempting all electric and strong hybrid vehicles under rupees 25 lakhs from road tax. Now, as we know, apart from GST, which is a central tax, you have a road tax that is imposed by every state government, and this is in the range of 10 to 13% or even 15% in some cases. And if the state decides to waive this off, the cost of the vehicle comes down considerably. So this is one, exempting road tax for all hybrid and electric vehicles under 25 lakh rupees. At the same time, incentives will also be given to consumers who are buying electric and hybrid vehicles. Thirdly, the Karnataka government is hoping to attract investments of 50,000 crore in clean mobility value chain. This would be done by granting incentives to the extent of 50% of the value of fixed assets. Now, this is a maximum limit. New projects or expansion of projects can get a PLI of 1% of the turnover for a period of 5 years. Companies may get 15 to 25% capital investment subsidy and stamp duty exemptions as well.
Parikshit, thanks a lot for that. Some exclusive details coming in there from Parikshit. But let's also listen in to what the Karnataka Minister M.B. Patil had to say in a conversation with Ritu.
The EV policy was a latest one, but still we went to modify it to clean mobility now. And this one is with the Honorable Chief Minister, so it will be shortly clear. So EV policy has been changed to clean mobility, very strong hybrid systems, and all these have been included. Green hydrogen and all this,
Okay, on that note, we're going to slip into a very short break, but don't go anywhere. After the break, we'll bring you more news and updates, so stay tuned in.
PSUs, capital goods, real estate, infrastructure, that's essentially been the leader of the bull market. But people, defense, etc., right? That part, it looks like we're starting to rotate, people are starting to rotate out of that.
Which is inevitable.
Inevitable. You think that's done, or is just like a pause and refresh case here?
Again, in terms of market cycles, when you see the leaders of every cycle, then they go to sleep for a decade. So the leadership of 2000 to 2007, which you were earlier alluding to, was indeed commodities and infrastructure, power, real estate. And then the excesses which happened in that period made them complete pariahs. So if 4 years ago, we were on a show and Ramesh and I remember we would talk about PSUs and everyone was like sniggering, like what's wrong with these chaps? But because the correction had been so steep that it's eventually an investor's job is about valuation. Like I said, the greatest Infosys may not give you the return, and the what so-called poorest PSU may give you the best return. So it was a mean reversion trade which happened, and of course all the right policy things happened for infrastructure and defense and railways and so on. So you go from being what I call terrible to bad is a rate of change, but you went from terrible to being good. So that rate of change is so dramatic that's what the markets have discounted.
And now maybe to great.
And now you're imagining it to be great. Some of them may make it, but most of them won't. So I would be very, very cautious in those kinds of places. And typically these are not high return areas. By definition, if you make 25% IRR in an infrastructure business, the cost to the consumer, which is the average public, is going to be too high. So your money made is really on leverage, and therefore the return on equity comes in that business. So and people are shy of doing leverage after again the last cycle.
Even
and the flip of it, sorry to just complete, the leadership of the last cycle was all the high quality businesses in the last decade. Which were all getting re-rated, Asian Paints, Page Industries, Kotak Bank,
consumers,
HDFC,
retail.
even, and including banks, because banks became 30% of the index. And you're seeing that getting corrected, that Kotak, HDFC haven't performed for the last 5 years. Again, great companies, but it's the excess of that which is now getting reverted back. And now they've become so hated that when will HDFC move? And there are memes on HDFC doing the round the way it was for ITC. And then you saw the way when ITC moved, it just doubled before anyone realized it.
You think...
so things like that tend to happen. I can't forecast what will happen in...
But you're very bullish on the financialization theme.
I am very much.
Welcome back onto the one of the many big voices of the day. My colleague Ekta caught up with Prem Kumar Nair, the group CEO at IHH Healthcare, and began by asking him about the Fortis acquisition and the long pending open offer for Fortis Healthcare. Listen to a slice of that conversation.
I think this matter has wound its way through the courts, Supreme Court, right, and now it's with the Delhi High Court. I would say a lot of the issues have been resolved, right, and this is probably the last final matter, the forensic by Delhi High Court, which is ongoing now. All right, I won't comment on it, right, because it is going through the courts at the moment, and we anticipate that once it is resolved, we let the court process, go through its, usual route. We will, and then we'll have to decide what to do next. The open offer was at $170. Fortis today is at 600 plus, right? So we will have to make a decision on how we move forward. There are many ways in which we can increase our stake, as you know, right? But one thing's for sure, we will be staying in India and we will be staying with Fortis.
So there's no chance of selling out that 31% stake?
Absolutely not, all right? We have got Fortis, we've got Gleneagles, we've got twin engines of growth in India. And given the attractiveness of the Indian private healthcare market, we intend to stay and grow in India.
But what do you think about this long journey of litigations, which is still not over at this point in time? Was there a time where IHH rethought its decision of acquiring Fortis?
Well, to be very honest, I think there were times when we were wondering what we got into, right? But over the years, most of the matters have progressed and resolved, one by one. There were several matters going on at the same time, right? So most of them have been resolved, right? And I think we feel, right? I don't want to judge what's going to happen, but we feel that we are at the tail end of this matter, all right? And we really will have a chance to go ahead, all right? Both with Fortis and with Gleneagles, all right? And increase our presence in India.
So when do you expect to hear back on the open offer?
No, can't predict that for the moment.
Probably by the end of this year
Hopefully
or next year?
6 months to a year, hopefully.
Okay. Well, this is a hypothetical situation, but if in case the open offer does get approved, like you mentioned, the price was 170 rupees. Today, it's over 550 or 600 odd rupees for Fortis in terms of a price. What will IHH do? Will there be a revision of an open offer price on the higher side? What is the decision?
Okay, given that we would like to increase our stake, I think we would have to revise, right, our offer to the other shareholders. So that's probably what it will take for us to do it.
Okay, so you will probably revise the price higher for the open offer if in case you do get that permission to go through. On the other hand, if in case the open offer does face hurdles again, what will IHH do? Will it go through any other route in order to increase its stake? Because currently you do have minority stake.
Yes. Well, first of all, I must say we are happy with what we have at the moment. As I said, we control Fortis, right? Fortis is improving year by year, operational metrics, financial metrics. There's no restriction to their growth. As you can see, they bought a hospital in Manesar, they disposed of 2 hospitals in the south, right? And they're looking at more acquisitions. They've got a plan to expand by 2,000 beds from their current 5,000 beds purely by brownfield expansion.
Correct.
Right? So that's their same store growth, essentially. Right? So Fortis can continue to grow, all right? And we hope there will come a day when we have, years down the road, when we have between the 2 entities about 10,000 beds, all right? That will bring us maybe into the top 3, right, hospital groups in the country. That's our aspiration, right? So I think Fortis can, even with the stake we have now and the current growth trajectory of Fortis, it'll continue to grow, right? But of course, we would like to increase our stake, either increase the open offer, we can do a creep, all right?
Creeping acquisition, 5% every year.
We can do that, 5% every year, we can do that. Down the road, maybe we can look at folding Gleneagles into Fortis, that's another option.
And you can catch that entire conversation which Ekta had with Prem Kumar Nair, the Group CEO of IHH Healthcare today at 4:30 p.m. this evening only on CNBC-TV18. That is a wrap on this edition of Business Lunch from Vinny, myself and the team that put this show together. Thank you so much for watching. Midcap Radar takes the action forward.
The magic one that everybody is talking about at this point in time is AI and what AI can do, and specifically generative AI. How do you see that linking back to the efforts on the healthcare side, the innovations that you're working on? I mean, how transformative is AI likely to be, or are we on the cusp of seeing that kind of transformation?
Usually when you get new technology, it's applied in the rich world for those who are well off. And what we'd like to do this time with AI is make sure, both in terms of discovering new interventions for nutrition or vaccines or drugs, and helping give people health advice, in voice, in their native language, that we actually bring these AI advances to those most in need. I mean, after all, where's the greatest shortage of doctors? It's in developing countries. And so the foundation is leading the way by giving grants to various people and pushing this forward. Even for a topic as complex as nutrition, the AIs are going to help us understand things faster than we would without it.
If you could do a startup all over again and focus on AI, what would the niche be that you would like to address?
Well, if you could go back to my school days even, and then I was saying, hey, how do we make software as smart as human beings? And I was constantly thinking about it. I underestimated how long it would take, but here we are on the cusp of that. And so now the lens I apply is the lens of the foundation. If I was somebody young, sure, I'd compete with, OpenAI and all these people. But, now I'm in the stage of saying, how do I help
Good afternoon. Welcome to Mid-Cap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. It's up and away on the Nifty today. Of course, it's the crucial monthly expiry as well. And we've seen a stellar rally in this series already, the third consecutive month where we'll see the month ending on a positive note. The mid-caps have come in some for profit booking, but it looks like a decent set on the benchmarks overall.
Absolutely right. Good afternoon to you too. And it's the broader end of the markets that are seeing a bit of a decline. In the last few trading sessions, despite the fact that the benchmark indices are higher, you're actually seeing market breadth quite negative, and that's been a bit of an issue as far as the portfolios are concerned. But quite a lot lined up on the show. Let's start off with the top headlines. Heavyweights continue their gradual climb, but mid-caps come under pressure again. Consumer durables and utilities are the big drags, even as IT, metals and auto eke out gains.
Samvardhan, Motherson and Sona BLW gain in trade on the back of a bullish note from BofA Securities. The brokerage says these companies offer solid structural earnings growth story and anticipate a significant export tailwind.
Crompton corrects post its analyst meet. The stock is down over 5%, even as brokerages MS and Nomura issue equal weight and buy calls, respectively.
Okay, 26,100. That's the mark that we are at right now on the Nifty. The big question was whether we would sustain above the 26,000 mark. We can say yes, that's the comfortable level that we have crossed for now. But of course, it will be important to see whether we sustain it at those levels at the high point of the day right now. The Sensex is up 300 points. We have the Bank Nifty, which is underperforming but still in the green, and a lot of sectoral movers. The metal index has come back again. It's up around 1.5%. We have the autos, which are contributing as well, and the IT space. So these are some heavyweights which are contributing to the gains that we are seeing. The realty space has come in for some profit booking. CPSE as well, seeing some cuts today. But the stocks that really contribute to the Nifty gains are contributing today, and that is exactly what we are seeing in the market moves as well. Mid-caps, though, we'll talk about those names in greater detail with Hormaz as well. But for today, mid-caps and small caps seeing a fall again.
Right. Once again, breadth is negative, despite the fact that the benchmark indices are holding up. In the last half hour or so, you've seen a bit of a bounce as far as the OMCs are concerned. So names like HPCL, BPCL, ISCL, seeing a bit or tinge of green. But this is a special segment, mid-cap movers. Hormaz is standing at the wall to take us to the mid-caps that are moving around in the session.
Pressure continuing in the broader markets, even as the Nifty is continuing to make new highs. So we'll start out with those stocks that are at the losing end of the spectrum this afternoon from the broader market space. PB Fintech is one of them on the back of that news flow. 6.5% lower. Crompton now has fallen to the lowest point of the day. Another 6.5% there as well. Kalyan Jewellers continues to see some profit booking. 4.5% down here, down to the lowest point here as well. As is First Source Solutions, a recent high flyer over the last month and a half, and that too is down 4% in today's session. Plenty of brokerages. Commentary came out this morning and stocks are reacting to that. On the one side, there is Samvardhana Motherson that is up 2.5% at the highest point of the day. But on the flip side, Bharat Forge, after the downgrade, is down 3.5% down to the lowest point of the day. And Trent, after that initiation from Citi, continues to grow from one high to another. Metals are continuing to do well on the hopes of further stimulus coming from China. And Vedanta, after the dividend announcement as well, fourth interim dividend coming pretty soon. 500 rupees now on the stock. SAIL and Nalco too having a good day within the metals pack. Stocks that are doing well on the back of volumes, and Prism Johnson features in the list yet again. Another 9% on the stock today. Elcon Engineering and Blue Star also seeing healthy gains on very strong volumes. And lastly, some stocks within the broader markets that are on the gaining end of things other than the ones we just spoke about. Easy Trip Planners, after the promoter selling stake, they made some announcements today as well. Swan Energy and Sapphire Foods also in the green in today's session. Back to you guys.
Okay, some of these names which are bucking the trend. Thank you so much, Hormaz, for joining in as always and letting us know what the big movers in the broader markets are. We'll do one thing, we'll slip into a short break. Up next, we'll connect with Harish Abhichandani, the CFO at Ola Electric. The company has announced launch of its network partner program. We'll talk about this and a lot more. Stay tuned for that.
People work in AI, apply it to those most in need.
far as India is concerned, the role and relevance and the significance of India, especially as far as the foundation is concerned, and what you're hoping to do on the innovation side?
So India's the country the foundation does the most in. Other than the U.S., that's our largest group. We have a great team there. We work a lot with the national government and many of the state governments. And not only do we see in areas like nutrition or using ultrasound to detect a difficult pregnancy, we're doing a lot of studies with our partners there, which will have a benefit for India. But also, because the digital infrastructure in India is so strong, we can try things out there and take them to other countries. The digital infrastructure itself is a great example where the leadership has laid that foundation, and now both India and Gates Foundation are going to Africa and other places and saying, hey, you should do the same thing.
Was there a specific learning from this trip to India for you?
Well, it was pretty amazing in Odisha to see how the digital approach was connecting with farmers, that they had categorized which farmers were in which location, what were they growing. And so when they would see crop disease outbreak, they could notify them. If they saw weather coming, they could notify those farmers. If the market prices were changing, they could help guide the farmers. And so the digital revolution, bringing that into that agricultural sector, that was the first time I saw that at work. And it's being scaled up in India. Now we'll take it to the rest of the world.
News which just came out, a government-to-government deal between US and India to set up a semiconductor fab unit in the country.
Right.
There are elements of technology transfer, etc. That's the cutting edge, semiconductor, and sort of plans to localize production.
Right.
I just wanted your thoughts.
I think it's great. I would love to, India's quote a non-aligned nation, and I don't think we should be asking to align, but I think it's great that we're reaching out to each other, helping each other, investing in each other, and I would love to see far more of that. And this has two elements. One is the national security part, which of course all countries have an interest in, and the second is just, a better economic relationship.
Over the last 2-3 years, we've seen the rise of the so-called industrial policy across the world. Yeah. National security is being prioritized, as you've said. Do you see this as part of that, in the context of that?
Yeah. So industrial policy, I'm a little cautious about. I think to combat some of these things and to do things in your country's own interest, which are hard to do economically, you're going to need some economic policy, industrial policy, like the United States has.
Investing.
Welcome back to Midcap Radar. Let's now put the focus on Ola Electric. The company has announced the launch of its Network Partner Program. This program is aimed at taking the EV revolution further into Tier 2 and Tier 3 cities. To discuss this, as well as concerns that users have raised regarding service center operations, we have Harish Abichandani, the CFO at Ola Electric, with us. Good afternoon, Harish. First of all, thank you so much for joining us. First up, talk to us about the Network Partner Program that you've just announced. How does it help your internal targets to achieve further sales, and how do you see it help EV penetration into Tier 2, Tier 3 cities?
Good afternoon, Vivek, and thanks for having me on the show. I think our unique, front-end strategy continues to, grow and expand, significantly. We have always had a very unique front-end strategy of direct to the customer channel, and this is just taking it to the next level, very deep penetration across the ecosystem. So this is how we have kind of further enhanced that strength in our strategic roadmap.
Okay. So, Mr. Abichandani, this is the front end of the business that you're taking care of. I just wanted to come back. There's a brokerage note coming in today from HSBC, which talks about how they visited multiple Ola service stations, and most of them were overwhelmed by service requests. So, while you're taking care of the front end, what happens at the back end? How are you planning to sort that issue? Because there have been a lot of service requests issues that the customers have been facing.
No, Sonal, I think the point is on the service, we'll continue to invest. We are continuing to expand our service centers. We have a little under 600 currently, and they are getting ramped up as we speak. And the same HSBC note also talks about how we are doing the right strategy on execution on service centers. So that investment in service centers is very strong investment parameter for us. We are, that paramount interest from a customer perspective. So that's very much on the roadmap, and it's executing as we speak.
Harish, we take that point on board. What we want to understand is what is the kind of investment, number one, you're putting in service staff, number two, in spare parts, and also in expanding your space. Also, the same note also mentions that 6% of your total revenues was actually a warranty cost. Now, FY25, FY26, FY27, how do you see that particular component play out as part of your total sales?
So 2 points you made, Vivek. One is on warranty cost, and the other is how are you looking to invest in multiple segments of our service ecosystem. So see, if you look at historically how our warranty costs have always improved quarter on quarter as we have moved from Gen 1 to the Gen 2 platform. And that is behind us. The second is, as obviously I cannot share forward-looking numbers for FY25, 26, and 27, but it's the best-in-class benchmark from our investment perspective. And of course, we use a lot of technology in our service ecosystem because our scooters are extremely high on tech. A lot of the issues around software, etc., are handled remotely from our tech network centers.
Okay, so now that you're looking at expanding this network, right, in tier 2, tier 3 cities so that EVs see more penetration going on there, will you have to increase the investments that you'll see on service centers, Mr. Abhichandani? And the second part of the question is you do have a lot of launches coming up. It is one of the highest that we have in the two-wheeler industry as well. 14 lined up for you versus peers like Honda, they have 6, Bajaj has 6, Hero has 14. So in that case, do you think you need to fix the service issue first before seeing more launches in different segments?
So, the point on products, our focus on the end ICE age part of our strategy is very, very strong. And in that direction, we have kind of led the scooter, the EV space in the scooter segment. We will drive the leadership again in the motorcycle segment. You have seen, and you rightly pointed out, there are a slew of launches coming up across the motorcycle ecosystem. And that will continue. On the service, for us, it's a continuous process. We are ramping up service, as I said. There will be investment in that space across the country. We have right now almost 800 of our own stores. We are launching up with this new partner network. 625 partners have already signed up. They'll ramp up to around 1,000 by the festival season and up to 10,000 by next year. And many of these will also have co-located service centers across. So we are significantly ramping up our service network across the nation.
What kind of investments will you have to make, Mr. Abhichandani, on this and the network expansion that you're looking at? Any number that is, yeah, please go ahead.
Yeah, no, sorry. See, the way we have functioned both across the front end and you see our D2C model and even the network partner expansion, which we have announced today, they are very efficient on CapEx. And a lot of our service centers, we follow a very different model on a hub and spoke across the cities. We have a very strong kind of tech backup to enable a lot of this service remotely. So our investments are absolutely efficient. Honestly, I won't be able to share any CapEx numbers on this call, but it's extremely efficient, but expanding very rapidly.
Mr. Harish, the other thing that a couple of analysts have pointed out is while you have the strongest pipeline as far as the electric two-wheeler market is concerned, even the incumbents have actually launched quite a few launches and they have come in at more attractive price points. In fact, the note also mentions that your market share has actually declined to 27% from 31% that was in August. We're talking about the month of September. So are you a little worried about market share erosion that you're seeing on the back of incumbents also upping their game in the electric space?
See, we welcome the expansion of the EV ecosystem, and our thought on the end ICE aspect has always been consistent throughout our journey. Incumbents coming in with EV launches, it only expands the EV ecosystem. It creates more customer awareness, etc. And as far as you mentioned about the margins, etc., if you look at the latest Bernstein report, which was out, and you'll see the differences in the margin design we operate in and the margin structure of some of our competitors. And that is consequent to the way we have led our investment strategy and technology across the last 3 years.
Okay. So, when we talk about newer products, we are talking about how you're spending on the service side and the product side as well. Ultimately, what investors want to know is what happens with free cash flows and profitability or the break-even point. A Goldman Sachs report says you'll be able to achieve that by 2030. A few of the reasons, of course, is operating leverage. The second would be the battery costs are coming down. Is this a fair assumption by Goldman Sachs? By 2030, you'll be able to do that? Because that's also far away. Or do you think it'll be before that you will be free cash positive and earnings will be positive as well?
See, no comment on the Goldman Sachs projections. It's their own model, so I would refrain from commenting on that. You see my Q1 numbers, and we have reported segment numbers for both auto and cell, and the Q1 numbers of segment clearly shows the segment is almost at a break-even level. It's -2% EBITDA at a segment level. So our numbers continue to demonstrate the strength of investment we have done in the past on technology and the scale, and that scale operating leverage is kicking in even as we speak.
Okay, so yes, so do you have any target 3 to 4 years down the line, maybe it'll be free cash positive, or will it be more than that? If it's a ballpark idea that I'm trying to understand here.
I mean, honestly, I won't be able to give a comment on future cash flow numbers.
Your internal, internal targets that you have set in place?
We always have very strong internal targets, so I won't really comment on the targets numbers.
Harish, just one more question. Quite a lot of the projections have been made taking into account that there will be some incentive schemes that will continue as far as government is concerned. But in the last couple of months, we do understand that these incentive schemes are tapering out. So will that further delay your path to profitability?
See, we have always built our financial design and business design in a world where incentives may or may not be there. I think the government has done incredible, kind of job in terms of promoting the industry. They have had FAME 1, FAME 2, and now with the upcoming PM E-Drive, I think the government has done incredible investment in this space. And it is incumbent on the industry to actually build on that and deliver, the strong business design. And while the PLIs are there, the FAME is a consumer subsidy. We are entitled for both the PLIs, the auto PLI and the cell PLI. So we are very uniquely positioned that way. But I think the government has done enough from an investment perspective. It's for the business to have its own design to sustain beyond the world of incentives and subsidies. And that's what we always are focused on.
Okay, all right. So we take that point, Mr. Abhichandani. Thank you so much for joining in today with all those details and answering all those questions. That's the word coming in from Ola Electric about the new network service or the expansion that they're looking at in Tier 2, Tier 3 cities, and also about the service issues of some of their products. We'll slip into a short break. Up next, we'll connect with Manas Agrawal, the research analyst at Sanford C. Bernstein. Sources suggest PB Fintech plans to enter the healthcare sector with own hospital chains. We'll understand the impact on the other side.
For rare earths and things like that, and lithium. Every country is different, so the national security needs of India are going to be more around energy. I think for everybody it's going to be semiconductor chips. So I do think that's industrial policy. I would caution industrial policy when it's used for regulations, bureaucracy, politics, votes, social, and it doesn't have, the twin of permitting. It's not going to work. So you got to be a little cautious when you use it. But yeah, we're going to have some. And like I said, I think it's very important that America and India have a great economic relationship.
Would you agree, though, that in the former part of what you described, industrial policy is kind of taking the lead? Businesses and who you align with, who you want to do business with, building supply chains. A lot of that is now, it seemingly is led by that. I mean, what governments really want to do.
Well, no, it's two different. Governments have always negotiated economic arrangements, stuff like that. If you look at the United States, the industrial policy is a very teeny part of the economy. So it isn't like it's taking over the economy. Right. I think in other parts of the world, it's obviously a much bigger part of the economy. So. But yeah, nations, because of national security and because of what some people might consider unfair competition, there will be forms of industrial policy. If I was a government, I'd be very, very careful. It should be very targeted, very specific. It shouldn't be to protect local industry. It shouldn't be to just create jobs. It should be for a very specific reason. But you're going to see it, and hopefully it's well done.
Let's talk about the big event from last week, which is interest rates coming down, the Fed cutting by 50 basis points. Do you think it was a bit excessive, given the fact that GDP is expected to grow at 3%, stock markets are at all-time highs, I mean, there's no issue with credit spreads, etc. Indicators are all pretty good, and you get a 50 basis point cut. What do you make of it?
I think it's a lot more ink than it deserves. I think they raised rates to 5 very quickly. They were a little late, which they acknowledged. They raised it to 5. The economy is slowing down, inflation is coming down, and relative to inflation, even if inflation is 3%, the 5 is maybe a little bit too high. So they made a big step to get it close to what they think it might be. They've got plenty of room to go down, and hopefully we'll continue to exhibit growth with inflation coming down. I'm a little more skeptical than other people about that, but it is happening, and they're just reflecting reality. Yeah.
You've been cautious in the past about prospects and said, well, one has to be prepared for things going wrong. Are you a little more positive now? I mean, this is not a cut when you're facing a recession or things are looking weak. It's like a happy cut. So, I mean, are you a little more...
So my caution is all geopolitics, which may determine the state of the economy. But it's really the geopolitics that these things, they're getting worse, they're not getting better. There's chance for accidents in energy supply. God knows other countries get involved. You have a lot of war taking place right now. You have American warships being attacked almost every day in the Red Seas. That's my biggest caution. The economy...
Welcome back. Let's talk about another stock which is on our radar, has been in focus for last 2-3 trading sessions, PB Fintech. The stock is under pressure. Sources are suggesting that PB Fintech plans to enter healthcare sector with own hospital chain. To discuss this and more, we have Manas Agrawal, who's joining in now. He's the research analyst at Sanford C. Bernstein. Manas, good afternoon. Thank you so much for joining in. Well, the company has not really gone and denied this story that has come by. They're saying that they keep exploring options. What, according to you, would be the impact? Do you think this is the right move if they go ahead and actually diversify?
Sure. Thank you for having me first up. Essentially, very little clarity from the company. They've not denied the story that was broken last night. Because we don't have a lot of details, difficult to pencil in how much impact in terms of capital expenditure or revenue. But from a strategy perspective, if you really think what they're trying to achieve, it's good for the customer, it's probably good for the hospital, it's good for the insurer. And end of the day, then Policybazaar should be able to get better commissions on the policies that they sell. But the question is, at what cost is all this going to come up? Is Policybazaar going to become a more capital-intensive business model, which is not what people want to hear? And the stock price is reflecting that, down about 15+% over the last 3 days. More clarity on the business plan around this whole piece will, I think, be helpful in terms of what the plan is, what is the timeline, how much money do they intend to allocate. I think all those questions are weighing on the stock at this point in time. The company has not denied it. They've not shared much detail as well. And that's where we are from a fundamental perspective.
Manas, very good points you put forth. Number one, you've said in your note that, investors bought the stock for the high growth, strong business model and cash generation. And you say that the backward integration is a meaningful shift, from the company's capital light business model. Could you give us a scenario analysis? Of course, you don't have the numbers, because it's still not out. But what kind of scenario analysis do you think in terms of what kind of return ratios and how it will be impacted given if the company uses the cash that it has on its book to go ahead and set up these hospitals?
Sure. So return ratios, I think, are a very way off in estimating simply because we don't have enough details. But if I was to paint some scenarios, if Policybazaar was to build hospitals, as your report suggests, that would take a lot of cash. That is a real estate heavy business. And then there is very little right to win in that business. I think what is probably the plan and more likely to be the plan is they're partnering with hospitals to tie up inventory for beds. And when customers from the Policybazaar insurance distribution business come in, they get access to that better treatment in that sense. And that will kickstart a better customer experience, leading to better commissions for Policybazaar is the probable plan by the looks of it. If they go down the path of building hospitals, I think that will be more negative. If it is a capital light way of achieving this through partnerships, that will be probably something better. Very difficult to comment on return ratios and how that all flows in. What I can say is a large part of their profit today comes in from interest income on balance sheet cash. if cash gets deployed somewhere, you will see some reduction in that, which will flow into your lower profitability. But I think if investors are convinced that this is the right plan, then people may be willing to look beyond, because there are no details at this point in time. Very difficult for people to understand and comprehend what the upside could be and what the cost of it is.
Manas, I'm going to put you on the spot. Number one, I want a short-term, medium-term and long-term view on the stock in case this particular development fructifies, and we should assume that it does, given the fact that the management has alluded to it both in Q1 and also yesterday hasn't denied it. And do you also feel, would you change your stance if the management does a rethink on this particular foray, given the fact that, the investment community hasn't really liked it?
Sure. Easy question, difficult answer. I would wait for more details to really think about how I think of the plan and what the impact is in terms of EPS or valuations. Essentially, my broad view is if it's capital light, if the communication to investors is good, I think it could work well for the stock. If not, then short term there'll be pain. Barring this development, like the business model, we'll see how this pans out and await more clarity on this particular piece.
Completely take that on point. Manas, thank you so much for joining us. We'll wait and watch by what exactly PB Fintech does as far as backward integration is concerned. But with that, you've run out of time on this edition of Mid Cap Radar Mutual Fund Corner when we return.
I don't worry that much about the fluctuation of the economy, and obviously the Federal Reserve will try to do its job to moderate the vicissitudes of the economy. But we are spending a lot of money, and in my view, that spending the money causes growth. It also causes inflation, and whether it all moderates, I think it's true for countries around the world. We got to really think through how much debt countries can put on before it causes a real problem. So I'm long-term optimist. Short run, I'm a little more skeptical than other people that everything's going to be great. Markets are pricing things like they're going to be great. I'm put me on the cautious side of that one.
US has been trying to reduce its dependence on China. India has been and is expected to be a big beneficiary of it. Do you think we are sort of using that full potential right now, or there's a long distance to go?
Well, look, going to China, okay, national security, America was overly reliant. That's not being angry at them. You should ask why we didn't do it before, but in terms of rare earths, semiconductors, penicillin, ingredients for pharmaceuticals, obviously every nation look at it and say, we can't rely on someone who might one day be an adversary, that doesn't make them an adversary today, for supply. Just like JP Morgan's always have multiple diverse supply chains, we don't rely on anything. The second one is around disagreements around policy, like if countries are aiding and abetting industries to dominate global industry and beggar thy neighbor, well, that's not going to work either. So you're going to have people, they're going to be hard fought. It's not going to cause deglobalization, but it's important that countries do that. And so, and it's just starting. It would take years. There's semiconductor, you're talking about 5, 10, 15 years. So even if it's going to take place, it's going to take a long time. But companies are doing it on things like iPhone. I know iPhone production. So some things can move quick. Some will take years. Huge opportunity for China. I mean, for India. A huge opportunity for India. People call it the China plus one strategy now, that companies that relied solely on China are going to look at India, Vietnam, Malaysia, Indonesia, etc.
We've got US elections, and I think one thing which both Democrats and Republicans agree on is China. You'd agree with that. I mean, in that sense, what's happening is in a way irreversible. The break in relations, sort of a Cold War.
I think you have to be very specific in this one. I think national security, everyone's going to do. Unfair trade, everyone's going to do. I think because of the Ukraine, the terrorism in Israel, Russia, Iran aiding and abetting, China's kind of on the other side of America in that one. So that's causing a lot of the tension. I think the better thing to do is get fully engaged, which they've done, our government, to try to protect ourselves in national security, unfair trade. And yeah, I think if the war goes on, yeah, there will be contentious issues between far more contentious because of that. So both sides, I think, will be fully engaged. Both sides are going to be tough, but I don't think either side is talking about disconnecting.
and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio, and today we are going to talk about bank deposits moving to mutual funds. At a time when banks are scrambling to get deposits, people are parking money in mutual funds. Equity AUM has surged from 26 lakh crore rupees to 41 lakh crore rupees. We've seen bank deposits or mutual fund AUM as a percentage of bank deposits also grow to around 31% in August 2024. What explains the inflows? Is it the new investors or is it largely the move from bank deposits? To talk more in detail, we have with us Nilesh Shah, Managing Director at Kotak Mahindra Asset Management, joining in now. And a little later, we'll discuss duration funds with Devang Shah, the head of fixed income at Axis Mutual Funds. Nilesh, good afternoon. Thank you so much for joining in today. And this has been a long-going debate and discussion as well, because we've been talking about bank deposits moving to mutual funds. Is this largely money moving, or is it new investors also coming in and contributing to fund flows? Because even bank deposit number is growing. What explains the phenomenon, and how do you see this panning out going forward?
So Sonal, thank you for giving me an opportunity to explain mutual fund industry viewpoint. Number one, mutual fund don't accept cash as subscription, neither pay cash as redemption. If you, Sonal, give me check, let's say it came from a State Bank of India, you invest in Kotak Mutual Fund, I will deposit it in Kotak Mahindra Bank. And if I purchase equity on your behalf in my fund, I'll give the check for some other bank. Effectively, money remains within the banking system. It doesn't go out. So bank deposit can never move to mutual fund because mutual funds are also part of the bank deposits. Are we getting flows from new investors? Undoubtedly, yes. We should be crossing 5 crore unique investors very soon. So undoubtedly, new investors are coming. But as they allocate money, it's not impacting bank deposits. Our money remains within the banking system only.
Explaining that, because largely the idea is that most of it is moving. People are not going with savings bank account right now. They think going and getting an SIP is a better way, of course, for returns. So while we talk about that big SIP flow, Nilesh, at record high again in August, data also indicates that 57% of this SIP got discontinued as a percentage of registered SIP. What explains that? Is it worrisome, or we should just look at the headline numbers?
So Sonal, as our size keeps on growing, we expect people to redeem. There will be people who would have invested for travel. There would be people who would have invested for their daughter's education. There will be people who would have invested for their son's wedding. And there are people who are retiring also. Now, mutual fund AUM, as you know, in equity market has gone up to about 41 lakh crore. Collectively, it is about 66 lakh crore. It's fair to assume that some money will be redeemed. That redemption on a base of 66 lakh crore is reducing SIP number. It's a miracle that SIP numbers still remain positive despite people redeeming on such a large base of 66 lakh crore.
Okay, you know, I just to follow up on that. So because people worried, or investors worried, that maybe this is happening because markets are at a high that we are seeing right now. So according to you, this redemption is quite normal and this is nothing to worry about.
As my base goes up, redemption number will keep on going up, and there's nothing to worry about it. In fact, we have been advocating investors, if you're overweight in equity at this point of time, if you are leveraged into mutual fund investments, if you are overweight in small and mid cap stocks, which have really run up, this is time to do profit booking and go to neutral allocation to equity as an asset class. So the tactical asset allocation we also recommend to our investors, and which is why if some redemption comes, it's perfectly normal.
Okay, all right, take that point. Now the next part is how equity AUM has grown. It has grown from 26 lakh crore to 41 lakh crore. That's a 55% growth that we have seen. While fixed income has seen a growth of 18% to 17.8 lakh crore. This is over a year that I'm talking about. Why do you think debt is still not considered as the attractive investment option to diversify?
So one, in the mutual fund debt side, now there is no taxation advantage like it is there in NPS or insurance. We are at par with any other, bonds, debentures, deposits kind of instrument. Second, investors' allocation towards fixed income has been high by virtue of investment in other assets like deposits, bonds, debentures, company deposits, and so on and so forth. So to mutual fund, they are looking at, oh, what gives me better return? And hence they are probably investing in equity far more than they are investing in debt. I hope and pray that investors are doing appropriate balancing of their portfolio and they are following the dharma of asset allocation. We'll be very happy to welcome you in our debt funds. But if not, please ensure that there is suitable allocation to debt in your portfolio, especially for meeting your short-term needs.
And talking about asset allocation, I'll discuss that with you towards the later part of this conversation as well, because that continues to remain the thumb rule, right? You know, the other phenomenon that we've seen in the industry now, and this also has been spoken about a lot, Nilesh, is a lot of money is coming via NFOs and thematic funds in the last few months. While we talk about the frenzy in IPO markets, should similar caution not be advised for more NFOs coming up?
So undoubtedly, there are newer players emerging and they will have to launch NFOs. I can't launch a large cap fund because I've already filled that category 25 years back. But a new AMC will have to launch a large cap fund. So there are new NFOs coming from newer AMCs as they fill their product basket. In our case, we are launching thematic funds, sectoral funds. Again, there are certain times where you want to launch a thematic fund. For example, we are in the process of launching MNC fund because we think at this point of time, it makes sense from a valuation point of view and from growth point of view. All of us are trying to fill the product basket. But the fact is that if I am launching NFO, it does not mean that you should invest into it because it's available at 10 rupee or it's an NFO with certain closure date. All these funds will be available to you at a later date also, as these are open-ended funds. Please consult your financial advisor and then take a call. You don't rush into NFO unless it meets your investment goal.
That's a sane advice. While it does give a lot of options or product diversification to asset management companies, it does give a lot of options to investors as well. And sometimes that can get confusing, right? And that's why at this point in time, if we get an advice like this, that you have to do it according to your allocation, your risk, and if it suits your goals, only go for NFOs. Because even sectoral funds, some of them at high valuations saw NFOs come by, right? So, Nilesh, we come down to the same point. At this point in time, if someone has to start their mutual fund investments with Nifty at 26,000, market at record highs, gold at record highs, how do you suggest they go about it? Pure equity funds, multi-assets, what should the ideal mix be? Because you said now is the time to maybe redeem as well.
So if you are investing with 5-year plus horizon, then only invest in equity fund. If you are investing with the expectation that the return which you get in last 1 year, your last 4.5 years is going to be repeated in next 1 year, your next 4.5 years, please don't invest in equity. You will have to invest with longer term time horizon and you will have to invest with moderate return expectation. As Sonal mentioned, Nifty is at all-time high. The base has been re-rated significantly and hence from here onwards, earnings growth will deliver return, not the PE re-rating. Second, for your physical health, you go to a doctor. You don't go to a chemist and ask for medicine. You consult a doctor and then demand medicine from the chemist. Same way, for your financial health, please take services of a recognized advisor or distributor who can tailor-make portfolio to meet your risk profile and investment objective. And thereafter, you choose what is appropriate for you. We remain bullish on equity, but on a longer term basis and with moderated return expectation. We remain bullish on duration. This is time to go and buy the longest possible maturity in fixed income. And we remain bullish on gold also because central banks all over the world are becoming like Indian housewives. So today you have opportunity to invest in all the three asset classes, but please follow the dharma of asset allocation.
That totally makes sense. The issue with this market is everyone is a chemist and everyone's a doctor themselves, Nilesh. And that's the reason why so many questions come up when Nifty hits those record high levels, right? And that's why we have questions for you on this. Nilesh, I have to ask you about the share of passive AUM that we are seeing. That has also doubled from 8% to around 16% in August now. Passive AUM is at an all-time high in August 2024. Investors are still warming up to passive style of investing. Is it very straightforward or requires more evaluation? Because usually it's considered the easy way out, and that's why more focus is on active funds.
So Sonal, in the passive space, there is fair amount of commodity space which is not there in active, like gold fund, silver fund, and so on and so forth. Then there are certain overseas fund like Nasdaq ETF, S&P 500 ETF, and so on and so forth. Again, very few of us have the capability to manage overseas exposure, and we generally launch index or ETF fund around the same. Third, a very large portion running into few lakhs of crore is coming from employees' provident fund organization. They rightfully have taken a call that with our kind of long-term horizon, it makes sense to go into passive fund with lower expenses rather than active funds. Now they are losing the opportunity to generate alpha through investment in active fund, but the kind of situation they are in and being a provident fund, pension fund organization, I think their strategy is appropriate one. There are also certain registered investment advisors which are recommending passive funds to their clients, looking at the themes and the sectors and the factors which these passive funds are doing. My recommendation to investors, you should invest in active fund only when we deliver better return than benchmark index, else low cost passive fund is more appropriate for you.
Okay, take that point. Always a pleasure speaking with you, Nilesh, and thank you so much for joining us today. Specifically on MF Corner, we do hear your market insights otherwise, but it's a pleasure to have you specifically on MF Corner today with all those expert comments. Thank you so much for joining us. Okay, all right. On that note, we'll take a quick break. On the other side, we discuss duration funds with Devang Shah of Axis Mutual Fund. All that and a lot more. Stay tuned for that. Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that make CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media.
Welcome back. You're still tuned into MF Corner, and it's time to talk about duration funds. Let's welcome Devang Shah, Head of Fixed Income at Axis Mutual Fund, to talk all about that. Devang, thank you so much for joining in today. It's a pleasure speaking with you. And while we have spoken a lot about the Fed rate cut that has come by and how it would impact the debt markets or fixed income markets in general, let's talk about its impact on duration mutual funds. But first up, just to try and understand what these funds are, what are the types of duration mutual funds, and what are the kinds where one should look at in investing right now?
So thanks, Sonal. So see, I'm sure we all understand that SEBI has done a very good job of classifying all the open-ended debt funds into various categories. And they have done it on the basis of duration as well as credit. And we have today a category from overnight fund where you can invest for 1 day to a long duration fund where probably if you have a larger investment horizon or very long investment horizon of 5, 10, 15, 20 years, you can invest in such categories. Specifically, when you spoke about duration categories, we have short-term duration categories, medium-term duration categories, and long duration categories. All of these, according to the mandate of the fund, invest in shorter duration funds are generally up to 1 to 3 year duration. Medium-term to long-term duration categories are into 3 to 7 year duration buckets. And long duration categories are actually funds where are investing more than 7 years duration categories. In the current macro environment, I think the long duration funds make a lot of sense for investors, and I'll try and give you some more color why at this point of time long duration funds makes a lot of sense.
Okay, so exactly that was going to be my next question, Devang. How can duration funds be a strategic bet for investors now? How does it connect with the rate cycle we are in?
Yeah, so you started the topic with Fed rate cuts, and I'm sure Fed started with the 50 basis cut. Now there's a lot of chatter about whether RBI will follow the suit and we start seeing RBI easing. It's not only Fed. You actually look across at the last quarter, you have had multiple central banks cutting rates. You look at Bank of England, you look at ECB, the Swiss Central Bank, Bank of Indonesia, Chinese Central Bank. So you've seen a lot of central bank cutting rates. So that gives a lot of breathing space to RBI to focus on what's happening on the local macros. If you look at the local macros today, I think we are at the pink of the hill where you and specifically from a bond market perspective, I think the local macros are very, very positive. The first thing which central banks focus on is the inflation trajectory. The inflation trajectory in India continues to remain on the downward trend. We believe that the next 6 to 12 month inflation will be between 4.25 to 4.5%. and which is significantly positive from a bond market perspective. Secondly, I think despite INR trading at all-time lows, you are seeing a lot of positivity from an external sector perspective. Flows continue to remain good in India. This is the year where probably year to date, Jan to now, we must have got more than 1 lakh crore in debt market, FPI investments. Current account deficit remains muted thanks to commodity pressures being very, I think commodity prices being very weak. China continues to remain in pain. So our perspective is if I look at both inflation and external sector, which are generally the worry for central bank, they are very positive in the near term from a rate cycle perspective. And hence, with global central banks starting to ease, I think RBI will look at rate cuts in the second half of the year. We believe December onwards, every policy is live for both stance change and rate cuts. And hence, this, I think, duration cycle, once a rate cut starts, duration funds generally are a far much better advice to clients because they are good vehicles to ride the rate cut cycle, and probably they can offer you good returns from the next 6 to 12 month perspective.
Okay, so it's a good time to look at duration funds. Give us more details on this, Devang. What type of bonds are included in the fund? What is the composition?
So generally duration funds, I'm sure if you look at the issuance pattern in India, both from government side as well as on the corporate bond side, a larger part of the issuance on government bonds specifically is on the long bonds. Most of the duration funds, and we are talking about duration funds which are managing duration 7 years and above, a larger proportion of allocation would be in government bonds and some part of it would be in long corporate bonds. These are typically of the maturity of 10 to 30 year maturity bonds and generally typically holding 7 to 10 year duration. So a construct of a duration fund is largely into sovereigns and AAA corporate bonds, which are having a minimum duration of 7+.
Okay, all right. So in that case, Devang, how do these funds handle duration risk? This is one of the risks that would come by with this category, right?
Surely. So I think, see, a couple of points here to manage the duration risk. Obviously, SEBI has also allowed us using interest rate swaps to hedge our duration portfolios as well as our duration risk. But from a perspective, I think overall, these assets are very, very liquid. So once the perspective of view on the interest rate gets played out, or we start believing that the macro fundamentals are changing, the entire portfolio is quite liquid and we can maneuver and change the positions quite fast. We all know that bond market in India is very, very liquid and a large portfolio can be churned out. So along with mechanisms being inbuilt and allowed by SEBI, which are interest rate swaps, I think the overall, once the macro view changes, because of the liquidity, strong liquidity in such papers, the portfolio can be churned out and we can significantly reduce the duration and reduce the volatility as well as duration risk for the investors.
Are there any other risks or cons just for an investor's understanding that they should be aware of while investing in this particular category?
So as I told you, in bond markets, there are two categories of risk. Basically, one is the credit risk. As I explained, large part of duration funds, I would say a majority of all of them invest in sovereigns and AAA quality papers. So we don't expect any kind of significant credit risk into the fund. The duration risk, as I told you, is highlighted through a PRC matrix, which is also a part of mutual fund fact sheets, which disclose that what duration the funds are holding. The duration mandate is specified there. So fact sheet disclosure just offers you all the entire risk elements associated with the funds. But as explained, the portfolio is very, very liquid and we have mechanisms to hedge our duration. So those all can be taken across while looking across at investing in duration funds.
Okay, all right. Thank you so much, Devang, for explaining this category to us. Definitely in focus after the central bank action across the globe, as you mentioned. It's just not Fed. We're seeing it overall. Thank you so much for joining in with your insights today.
Thanks, Sonal.
Okay, all right. That's all we have on the show today. But stay tuned for Closing Bell to take you through the last hour of trade.
On 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
It'll be a good time for stock market, it'll be a good time for investors, and it'll be a good time for entrepreneurship in India. I think democracy almost demands that. As the best example is that whether you look in the America S&P 500 or look in the Sensex 30, look at where they were in 1980 and look at where they're 2040, 50 years later, 60 years later. Most of the components have left. They're new companies, new blood, new ideas.
So like in life, in stock market, best is yet to come.
I would think so, Anuj. I would definitely think so. I'm hopeful. So I may not live to see another 10, 20 years of what's happened in the stock market. But if you ask me, I feel that the investing for the next 30 years is as much fun as it was the last 30 years. And as Warren Buffett said, that if you could have a pill to live longer, he'd give up a large part of his money, but he would retain his wisdom and his health. So he could continue to invest and see the great Indian experiment, what happens. Market is, bull markets have length. Bull market कोई permanently चलता नहीं है. कहीं न कहीं जाके रुक ही जाता है. We are very lucky, we're very blessed, unlike China, Thailand, Japan, who haven't had new highs in almost a generation investors. Indians have constantly seen new highs in the market out there. So very blessed. Having said that, it just seems to me that the market is now transitioning from mid caps to large caps. Leadership has shifted in the market. And typically, if you have a very ferocious rally from this point, that would signal some sort of, ending of the bull market. मेरे को जो लगता है ये जो K-pop के जो shares आने हैं, Hyundai, Samsung, they'll all start coming with IPO soon in India because they're getting such valuations in India. So why won't they encash it out there? That will suck up a lot of market liquidity from the secondary market, and that would be kind of a warning sign of trouble ahead. जो सेबी की जो रिपोर्ट आई थी अभी 1-2 दिन पहले वो बोल रहे थे कि retail public who has gone primarily into futures and option trading have lost money. उनके हिसाब से 90% have lost money, which is about a crore of people. 50,000 crore रुपया नुकसान किया उन्होंने. 50,000 crore रुपया उसने किया. 50,000 crore रुपये में could buy the complete Tata Elxsi or companies like Biocon. That is the amount of money they lost. So it is bittersweet. मुझे बहुत अच्छा लगता है कि Indian prosperity में Indians participate कर रहे हैं. I feel a bit sad that people are playing in the F&O market without understanding the market.
The valuations are berserk over there. I mean, again, great.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Good afternoon and welcome to the last hour. This is Closing Bell. We are coming to you, of course, as always, from the CNBC-TV18 Motilal Oswal Studios. I'm Surabhi Upadhyay. With me, as usual, is my co-host and colleague Nigel D'Souza. And what we've got on the screen is a market that's been sort of building along gains. And it's been a slow and steady day, which has finally taken us to 26,100. But yes, I mean, there will be a complaint that the broader market, that's kind of sitting out of the move today.
Well, in the next 60 minutes, the monthly expiry for the Nifty will play out as well. So brace yourself for some volatility. My guess is that if we can get up to the 26,150 odd, we'll brace ourselves for a short covering bounce. So just for the next 60 minutes, the level you're looking at on the upside is 26,150. On the downside, the 26,000 seems like the level that the bulls will want to defend. But Surabhi, it's that sort of a day. When you're looking at the index, you'll say, well, the markets are up 100 points. The Nifty Bank as well is in the green. And you'll say, but my portfolio is not doing well because the breadth of the market is negative in today's trading session. And you have way more stocks that are declining than the number of stocks that are advancing. Powerful, of course.
Yeah, absolutely. I mean, that trend of slight profit taking on the mid-cap market, that has been on. And we've seen several instances of that this week. today included. So yes, it is a fairly negative advance decline ratio, no taking away from that. But let's just focus on the large cap move and see what's driving it. Speaking of driving, quite a cliche, right? Because it's actually the auto space. Auto stocks are revved up completely this afternoon, and most of them are having a good session. Maruti included. Don't remember the last time I saw Maruti up 4.5%. It's in leadership position on the Nifty with that kind of gain. Mahindra and Mahindra is keeping it close company. It's coming in second position as the second best performing stock on the index, up about 3%. There's Tata Motors as well, and even something like a Bajaj Auto is fairly revved up. Hero Moto is the one that's actually not joined the auto party. And we'll talk about this as we go forward, because there's some brokerage notes that are raising some questions on the possibility of growth, loss of market share. That brokerage note has not worked well for Hero today. But aside of the auto space, the steel boys are back. Nigel's been telling us about the sort of move in metals ever since we got the China policy announcement. So they started off negative, these stocks. That's the opening at 9.15. Then the buyers have come in. So it's very, very clear. Look at Vedanta. Of course, it has the added impetus in the form of, another dividend that they'll be considering. But anyway, so metals good, auto is good. And you have life insurance counters that are looking quite fine as well. So HDFC Life, SBI Life, these are stocks on the upside. Mind you, LTI Mindtree is going to be one of the stocks that's leaving the Nifty tomorrow. For what it's worth, last 2 trading days remaining, there's some green on this one today.
Well, that's right. And a couple of other notable movers. You have Mahindra & Mahindra Financial Services. That's up close to 2.5%. Majority of the move coming in the last few minutes. While on the flip side, Berger Paints had seen a bit of a bounce back. It's given back some part of that good work that it's put on in this month itself. I think even after slipping closer around 1.5%, it's still up roughly around 7.5% for this month itself. How do you position yourself, though, for the final hour? Mitesh Thakkar joins us. Mitesh, a mildly positive day. What's the view on the index? And then fill us in with your trades.
Yeah. So, Nigel, as you rightly highlighted, I think it's a day when the market has slowly inched up. And I think maybe a bigger move will happen towards the last 30-45 minutes, which is another 20 minutes away from here, as we kind of move towards the monthly expiry. The overall setup is positive. The next 1 hour, of course, will be volatile. So the idea is that in case you get a dip, you look at levels where you would want to buy, which is now would be closer to about 26,000 in this spot, or otherwise keep holding. On the stock side, I have a buy on SBI Life. That's a buy. Sorry, just a minute. Yeah. SBI Life is a buy side recommendation. I would recommend buying here with a stop below levels of 1850 and a target of around 1930-35, which is the all-time highs for the stock. That could be tested. The other stock is Steel Authority or SAIL, which I would recommend buying with a stop below levels of 135 for targets of 146.
Okay, so going in for a couple of those names, including SAIL, like we've been pointing out, good day for metals today. Thanks, Mitesh, for that. We'll come back to you and get some more stock calls going in just a bit. Now, talking about that Nifty index rejig that comes into effect, actually tomorrow's the last day. It comes into effect from Monday. So Monday, you'll see a new Nifty with the Trent joining the index. The stock, of course, has seen a phenomenal creation of wealth. It has just gone one way, and that is up in the last several years, doubling in the last 6 months. We've got Manglam joining in to map Trent's absolutely stellar trajectory. Manglam.
Well, whether it's Fashion Street or it's High Street or even Dalal Street, Trent has always been in trend, and it enters Nifty as well. You're wondering why is it called Trent, right? Because the name itself is a portmanteau of Tata Retail Enterprise. Club that together becomes Trent, will be making its way to the Nifty tomorrow. And what a wealth creator it has been. If you look at the recent time series data of the stock itself, last 6 months, it's doubled 101%. Last, few months, 2024 itself, 160%. Last 12 months, 265%. 36 months or 3 years and 5 years, it's a 9x and a 15x sort of mover in the last 5 years itself. Its entry into Nifty will bring in nearly $0.7 billion of passive inflows as well. But speaking about the Nifty and Trent, one can't ignore the massive presence of the Tata Group in the Nifty itself. Trent is the 6th Tata Group to enter Nifty. While you have, players like TCS, Tata Motors and Tata Steel who've been around in the Nifty for a while, the last few rejigs have gotten Titan and Tata Consumer into the Nifty, and you will now have Trent as well. But not only is it the 6th Tata Group in the Nifty, by market cap, it is also the 4th largest in the company. If you look at Tata TCS, 15.5 lakh crore market cap, Tata Motors, Titan, Trent is the 4th largest in the group itself. And now we're talking about Trent's market cap at 2.78 lakh crores. It's extremely interesting because if you look at Trent, the market cap is 2.78 lakh crores. Add ABFRL, Shoppers Stop, V-Mart, Go Fashion, V2 Retail, Canterbury, Credo, Spencer's, all of that gives you 71,000 crore itself. So, you know, Trent is head, shoulders, and the entire body above everyone else put together. But guess who's bigger than Trent? You add Trent and all the others, you get D-Mart. So if you look at, you know, the entire space here, Trent plus others is equal to D-Mart at around 3.38 lakh crores. Who's bigger than all of them? You add Trent, the others, and D-Mart, it is still less than Reliance's market cap. Reliance Retail's last valuation of close to $100 billion. So 8.3 lakh crore thereabout would be Reliance Retail. So that's the market cap game itself. But if you look at, you know, Trent's performance as well, it's not just been a big wealth creator, it's also reflected in the financial performance. So you have Trent, others, D-Mart, put together is Reliance Retail. If you look at, you know, the Trent business, you have the revenue of the company, which has seen a massive rise. Every 2 or 3 years, the revenue of the company turns into the profit of the next few years as well. So that data point should come up for you. You have, you know, FY21, FY22, FY23, FY24. Revenues have jumped nearly 6x, and from a loss of close to 200 crores, it's gone into a profit of 1,500 crores. The last few quarters also have been very strong when it came to, you know, same-store sales growth. They now have 2x the number of Zudio stores versus what they had in terms of West Side. So the growth has come by, and the street believes even more is on the cards. Why do I say that? Because Citi has now, you know, initiated coverage on the stock, and they believe that because it's a multi-retail, multi-category format, it's a massive wealth creation opportunity. They've initiated coverage with a buy target of 92.50 and potential upside of 21%, believing that revenues and profits can compound anywhere between 40 to 56% over the next few years.
That's an astounding call coming in at a time. Just looking at the start of the wealth creation journey, it was early February of 23. Trent at that point in time used to be about a 1,250 to 1,300 rupees stock. Today we're talking 7,850, and you're getting calls like the one that Citi has made that it's going to 9,000 plus. I mean, it's been dramatic, it's been stellar. It's been a phenomenal wealth creator.
Well,
really.
I think I'll tell you what's been phenomenal. You know, as Mangalam took us through that beautiful journey of Trent, just take a look at the markets. Just a few minutes ago, I was telling Surbhi that the markets, they are bracing that this 26,150 mark doesn't get taken out. Take a look at what's happened. We have a quick 50 points that's jumped up on the Nifty. And I think a lot of these NBFCs have moved up. So maybe just pull up the Nifty Financial Services Index, because I can see a few of them done quite well. Shriram Finance has spiked up. You have Bajaj Finserv as well that's moved up. Yes, these are part of the Nifty Financial Services Index. Titan as well has popped up in trade, and Ultratech Cement as well. So Surbhi, it seems the bulls want to end this September series with a big flourish. Yes, metals were doing well all through the trading session, but now the bigger boys, they are rising up, they're getting counted. And the other level I pointed out earlier today was the 54,250 mark, which was the recent high on the Nifty Bank. That as well has got taken out. So the bulls in the mood for a good end to this particular series. But let's get in, Devin.
Yeah, absolutely. And by the way, I mean, in this whole move that we're talking about, also one thing that's very, very evident in the month of September, that whole shift to large caps that a lot of fund managers have been talking about, a lot of market experts have been talking about, that the time for large caps has come and maybe it's time to take some profit off mid caps. That is also evident because in the month of September, which is now about to wind down, the Nifty has put on about 3.5%, but the mid-cap index is up, well, just about 1.5% thereabouts. And there's, of course, this week has been underperformance on the mid-cap side. So large caps on the move. All right. Well, let's welcome in Devin Choksi, MD at DR Choksi Finserv. Devin, great to have you on. We're actually, just before you joined, we were discussing a mid-cap that has beautifully gone on to become a large cap, right? These are the stories that wealth creation is really made of. Trent was the stock that we were just discussing with Mangalam a while back. Your thoughts on whether one can still get in, or is it just too late now?
Yeah, good afternoon, Surbhi. Well, I think most of the good news are always in price, I think in this kind of a market, and that's what I think we are experiencing in this company as well. Always promising one, I think, in the retail story Trent is. However, I think the recent up move in the stock price is also backed by, I think, significantly large amount of success that they have had with the new verticals that they have brought in. And that's where probably I think the market is excited about. Currently, I think at a current valuation, if one has to look at this company, probably I think one would argue that I think unless they keep growing this business at 50-60% rate of growth on a year-over-year basis for next 2 to 3 years, I think this current valuations probably are pricing in everything, whatever has been underlying story is all about. Fantastic business, but at the same time, I think market is factoring complete pricing. Getting into the Nifty, one will have to see how exactly I think the additional money gets into the counter. But to me, I think it appears that Nifty is also a leveler. I think in the sense that you will also have the, I think, opportunity to rationalize the valuations. And that's where probably I think one will remain a little bit more watchful about the possibility of stock price going up. As of now, to me, I think the stock is pricing everything which has been talked about as far as the prospects are concerned for the company.
Okay, all right. Well, hi Deven, good afternoon and good to see you. When a couple of these other stocks are seeing a good move up in the last few minutes. Manappuram Finance as well was trading in the red. There was a disappointment that they've not come out with the IPO of their microfinance business, but it's recovered all of its losses. The stock is up 5% from the day's low. Deven, what's your preference from gold financiers, Muthoot or Manappuram? Muthoot has been a big outperformer. I think if we pull up a one-year chart, we'll see that play out. But valuations are in favor of Manappuram right now. Your take?
Hi, Nigel. Good afternoon. Well, I believe that I think instead of focusing a pure focus company like Gold Finance and NBFC, I think we remained distinctly comfortable going with the retail financing business proposition with likes of Bajaj Finance or Poonawalla for that matter. I believe that I think these companies probably would have a relatively better amount of sustainable growth model. And that's where probably our comfort level lies higher. At the same time, I think the housing finance business, where probably we see higher amount of growth continuing in the vicinity of around 20% on a CAGR basis, we believe that I think it is more safer business to play with. Maybe the gold finance business currently is in favor, but at the same time, I think the valuation-wise, everything seems to be priced in at this point of time. Maybe I think comparative valuation from Manappuram may be slightly lower, but I think we still prefer with the overall retail franchises in Bajaj Finance and Poonawalla kind of.
Okay, so not particularly looking out for the gold financiers now. Got it, Deven. Stay on, we'll have some more questions for you in just a bit. Another stock that's in focus today is L&T, and that's on the back of a brokerage note. The stock's down about 1.5%. I think it was HSBC that's come out with a view on it, and the view is not exactly very positive. Vivek, fill us in.
Well, that's right. So HSBC has come out with a very interesting note on Larsen & Toubro. What they're saying is that, number one, they've downgraded the stock to a hold rating from a buy stance that they have earlier, and they've cut the target price quite sharply to 3,500 rupees a share from 3,900 earlier. What they do say is that the near-term order inflows are likely to be under pressure, and they see downside risk to L&T's FY25 order inflow guidance. They are saying that the peaking of the energy market, slowing state capex growth and trend level profitability drive valuation multiple reset. They are also going ahead and attributing the near-term order inflow weakness. Number one, very high base of order inflows, particularly in the international segment. There has been loss of some large orders in the hydrocarbon segment in the recent months, and also they are actually seeing a weak overall order prospect pipeline, particularly as far as the domestic infrastructure segment is concerned. Now remember, L&T is actually has a 30% year-on-year order inflow growth, so it's a high base that they're working on. But what is HSBC saying? They're saying expect L&T to post moderate 2% order inflow growth in FY25. And if you look at the management guidance was an order inflow growth of 10%. They see a top line growth of close to 15%. Core margin guidance in the range of 8.25%. So if L&T goes ahead and disappoints the street as far as the order inflow is concerned for FY25, HSBC believes that at these levels, there could be a downgrade coming in.
Okay, all right. Thanks a lot for that, Vivek. Well, explains why that one's a little under the weather. Deven, your view on L&T?
Well, again, I think the business condition-wise, I would think that I think they will continue to grow the order size, even though it may not completely match on a quarter-to-quarter basis, but on a year-over-year basis, I think they should be fetching higher amount of order. Both the territories, the India territory and the UAE territory, in which I think this company is predominantly positioned, I believe that I think in both these territories, I think they have fairly good amount of business to talk about because of the favorable economic conditions, and at the same time, I think government's initiatives, particularly in India. So in my viewpoint, I think the order book will not be a challenge for this company if one is taking a little longer term view. Maybe I think the bigger challenge here would be how to overcome the pressures on execution, because this is where probably I think the majority of the challenges are where I think that affects the margin. If they relatively show better performance on execution path, then probably I think the stock price will sustain. But like many other stocks, here also I think everything seems to be in price. So I don't think too much of upside at this point of time in the company, despite of all the positives.
All right, fair enough. Deven, stay on. Let's focus on Alkem Laboratories, and this is a CNBC-TV18 exclusive. Sources are telling us that Alkem is perhaps evaluating a new acquisition. We'll have Rachna join in with the details on this in just a bit. I think, yeah. Rachna, you ready? All right, tell us more. What are you picking up on Alkem?
Right, sources have told us that Alkem Labs, which is the fifth largest pharma company here in India, is now in discussions to buy Novartis India, which is the Indian arm of the Swiss company Novartis AG, and this deal is expected to be around 2,000 crore rupees. Now, when we speak of a deal anytime, of course, there are many rounds that are involved, and what we've learned from our sources is that the first round of submitting non-binding bids has already happened, and one of the bids has been submitted by Alkem Labs along with Dr. Reddy's Laboratory, which was the name that had come in earlier, along with Zydus Pharma. Now, Novartis AG had announced earlier this year in February their intention to sell the India stake, and which is when this ball sort of set off rolling. And now we're hearing that Alkem Labs is going to be a participant. Now, speaking of Alkem Labs, they reported around 3,500 crore rupees cash on their books, and considering the value of this deal, which is about 2,000 crore rupees, it should be happening soon if they happen to win the bid. Other members in the fray are Dr. Reddy's and Zydus, as I said earlier. Now, Novartis AG owns about 70.6% stake in India, and this sale is for the entirety of that stake that they own in Novartis India.
Okay, so this looks like a big one. Let's see if it goes Alkem's way. Thank you very much for giving us a heads up on that, likely big pharma deal. Deven, any thoughts around Alkem, or I mean, even the listed business for Novartis over here, the pharma business?
Well, should this kind of a transaction go through, it will have its own challenges, but at the same time, I think more opportunities at the same time. Because the portfolio of Novartis India definitely, I think, works well for a company like Alkem. Fortunately, I think this company is not so expensively traded. On a trailing 12-month basis, I think the stock is still comfortably trading at around 35 times. So from that perspective, I think the downside seems to be limited. However, I think whenever such kind of transaction takes place, one will have to look at the holistic picture of how exactly it will have impact on either the operations or as well as the capital structure. So would wait for that to come out. But on its own, I think Alkem looks, I think, decent at this point.
Okay. All right, Deven, thanks a lot for joining in today and filling us in with all of those views. Well, by the way, the markets, we try to make a bit of a dash towards the 26,200 odd mark. Expiry play is definitely at work. We need to hold above this 26,150. We could be in for a flourish towards the end. Well, time to slip into a short break. Come back. We'll have Rupen Rajguru of Julius Baer will be joining us on the other side. Stay with us.
And again, I usually don't talk about stocks, but just to put some sense. And again, don't get me wrong, I'm not disputing valuations or anything, but just to give the Infosys example. Let's say our favorite stock this year was, say, Zomato. It's a $30 billion market cap. Let's say we expect the market normally to give you a 15% CAGR for 10 years, which is 4 times. So it should be a $120 billion market cap in 10 years. Let's say it's a 30p by then, because it will be a fairly large company. So it needs a $4 billion PAT, profit after tax.
So when we say melt up, I just want to sort of finish that point. It usually we are talking about like a frenzied move in the very short term, but that's not what you mean. You think
no, I mean it makes a major long-term top, which is not a great thing. So I mean, it's great that we are going up on a wall of worries in a way that every time we meet, we are worried about, is this the end? Is this market going to fall? Will the investor flow stop?
Correct.
Will people run away? Markets don't climax at periods like that. And this seems to be more like the 90s bull market, where small caps were doing phenomenally well. And what tipped it eventually, of course, one was the Asian crisis, which happened outside our control. And B, it just got overwhelmed with supply. And that's really what capitalism should do, that prevent what I call that melt up, where the entire market goes up 10x in a decade. And then you don't see that prices for, maybe next 10 or 20 years. So I'm hoping we don't get a melt up, and supply response takes care of it. And supply is coming, but it's still what I call a quadrant 3 or quadrant 4 level supply. The big guys haven't yet come. And in the bigger ones, if I take the top 10 companies, no one is supplied. Having said that, the owners of those companies, whether it's BAT selling down ITC or Singtel selling down Bharti, that's happened. But it's not like the Reliances or the Tatas or someone has come with massive issuances, which I think is around the corner. It should come.
I mean, bankers we speak to tell that over the next 12 to 18 months, about $25 billion worth of IPOs should happen. But that is, I'm not sure how much of the...
So, Prashant, 25 also, I'm saying, is a small number now. It's a $5 trillion market cap. So if you don't do 50 billion, is 1%. So issuance is, the government ought to be doing 25 billion. The larger groups easily can take 25 to 50 billion. And this is combination of primary and, of course, QIPs and so on. We've seen promoter selling, we've seen PE selling, we've seen investing.
Welcome back. Well, metals are shining in today's trading session, and there are two global tailwinds. One is that the US Fed have started cutting rates, which is normally positive because the dollar index gets weaker, which is in turn positive for base metal prices. And the second factor, so that takes care of the pricing aspect. Now, demand is a problem. But if China is going to pump themselves up, then the hope is that demand also comes back. So you have global tailwinds, both on pricing as well as on demand. Now, Vedanta, that's the one that's leading the way in today's trading session. And in 2024 so far, the stock has seen a big run. It's nearly have doubled. Not just that, if you look at the dividend, dividend yield is at around 13% in FY25, and we're only 6 months into it, because the effective price was around 270 rupees approximately at the start of this fiscal, and they've already paid out dividend of close to around 35 rupees. In fact, the stock is quite excited today is because they have said that in October they want to give out another dividend. That's on October 8th, they're going to be meeting for that. And that chart should come up where they've already declared the 35 rupees per share as dividend. Who benefits the most? The promoter entity. They have nearly around 56% stake in the company. It's come down a little bit, but as of the July reported shareholding pattern, the promoter has around 56%. And everyone's worried why they pay out so much dividend. But it's very good news from a Vedanta Limited perspective, because the street is always cautious about the promoter entity, Vedanta Resources, not being able to make their payments. Now it seems they're in far better shape because they're getting the branded fees. That's via Vedanta as well as via Hindustan Zinc. They're getting a good amount of dividend, and they've sold some stake as well. So the promoter entity being in far better shape is actually a trigger to re-rate the stock from here on. What are the triggers going ahead though from here on? One is demerger of the business, which they've already announced, and Mr. Agarwal told me by the end of this fiscal that should be done. The second factor is the divestment of the steel assets. That's another trigger that they're looking at. How much can they get for that? That's going to be important. And finally, Vedanta Resources, since they're in better shape, can they refinance some of their high-cost loans? That's going to be important. And also, can they make their debt obligations good? So, all those are the factors. Vedanta leading the way. As I always say, Surbhi, it's not the stock for the faint-hearted, but it's been a big outperformer. I remember putting out a piece when they raised that QIP. I said that this is the final trigger, right? Because if they can come up with this money, then it puts them in a far better shape. I think they raised money at around 440 rupees. Post that, they have paid 24 rupees of dividend. So effectively, the stock price is currently at around 525 rupees per share.
Yeah, it's really done well despite all the uncertainties and what next at the promoter level. For what it's worth, I mean, the stock's really been a fantastic performer with a gain of almost 100%, I mean, over the last 1 year. By the way, speaking of fantastic performance, just take your eye back on the screen, because this rally is really sizzling now. The Nifty closing in on 26,200. It's been a phenomenal move, and in the last couple of minutes, more names getting added on the financial side. So Shriram Finance, Bajaj Finserv, a couple of names like Ultratech and Grasim, they're putting on more weight and momentum. So all of these stocks quickly racing to the highs of the day. Some of the Tata Group names that we were earlier discussing with Mangalam, they're also having a pretty good afternoon. Tata Consumer and Titan, all of these stocks are up and about. So it's turning out to be a big flourish and a big green move across the screen. Actually, barring Cipla, ONGC and L&T, no other Nifty stock is down even more than 0.5%. So it's a solid day of trade as we look at the screen right now. Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer, is with us. Rupen, good to have you on. Thanks so much for joining in. What's the sense? The market is moving from strength to strength, and that much talked about move, the shift from mid caps to large caps, maybe we're seeing some hint of that take shape now. What's your overall call on the market at this point?
Yeah, hi, afternoon, Surbi. In last 1 month, the US Fed 50 bips rate cut has re-triggered the risk-on trade globally. And if I were to quote Warren Buffett, who's famously said that you always pay a high price for cherry consensus, and India seems to be a cherry consensus. So hence we are seeing this huge amount of interest in India. And while domestics have been big buyers in India of late, and particularly if I were to say after the rate cut, almost $4 to $5 billion of FPI money has also entered India. So it's now combination of both domestic as well as the FPI money. And as you rightly said, the FPI money essentially is getting into large caps and some bit of rotations. What I think two consensus trade amongst the investor community. One is large cap versus mid cap and financials vis-a-vis others. I think finally in last few weeks, at least we have seen some glimpse of that working through. So to sum it up, at this current moment, from the news flow perspective as well as liquidity perspective, market is in a good zone. But when again, as I said, sounded a little bit cautious last time around when I was here, one has to be cognizant of valuations, and now valuations clearly are at 20 to 25% higher than the long period average. But in a market which is driven by liquidity, the valuations can go higher. So to answer your question, in the near term, probably there are no specific negative triggers that are there which can lead to a sharp fall in the market, but we should always be prepared for some corrections.
Okay, all right. Rupen, just hold on to that thought. Surbi, at the start of the show, just a short while back, we mentioned that point, right? That if the markets can get past this 26,150, we'll be set for a flourish. It's a flourish indeed. Just take a look at that. We're up. We were at around 26,100 when we started the show. We have put on 120 points odd. And this is the expiry-related move that's playing out. And that's why we have select large cap names that are moving up. And the Nifty Bank as well is now up a good 300 points after it got past that 54,250 odd mark. Well, Rupen, always good to hear your thoughts. Let's talk about a couple of themes. Discretionary spends are likely to come back as India's per capita income itself starts moving up. And there are various ways to play it, right? One of the themes I'm looking at is, I think, luggage, QSR and movie exhibition. Tell us more about this. And from the luggage space itself, would you go for the one that's been outperforming, or do you believe that still the leader, even despite of losing market share, which is VIP, still has potential from here on?
Okay, yeah, hi, Nigel. So, I would just break it up into two parts. One is what I would call low ticket consumer discretionary items. So what you mentioned are all low ticket consumer discretionary item. And that segment for last, say, 1.5 years have been significantly underperforming because the revenue growth has been tapered. A couple of reasons attributed to that. One, the rural India was not doing that well. The inflation was high. And now at this juncture, probably both of these factors are reversing. And to add to it, we are getting into a state election mode in which many states are going to go for election. And if I'm not mistaken, roughly the state governments have earmarked almost 100,000 crore towards welfare schemes and other stuff. So net-net, the point here is that more money will be available in the hands, and that low-ticket discretionary items which have struggled will come back. So all those factors which you mentioned will do well, be it the QSRs, be it also the movie exhibition, or for that matter even luggage. And to answer your question, probably usually what happens if there is one catalyst and some earnings which are not coming through, if that starts coming through, the leader which has underperformed can really have a decent comeback, because usually market also waits for these kind of opportunities wherein there is temporary problem which happens in a company which has over a long period of time demonstrated a decent track record. If one or two catalysts works through, I think that is in for some decent market performance.
Okay. By the way, just want to point out that aside of the technical factors here, local factors, which is expiry, the global setup is also looking very, very promising right now. Most of the markets in Europe are rallying anyway. Metal stocks and mining stocks are up and away. And another development that we should take note of is the fall in oil prices. Intraday, oil has dipped 2%. There are some reports out there, agencies are suggesting that Saudi Arabia is going to let go of its price target framework for oil. They were looking at $100. They could actually start looking at boosting output. And that obviously spells far more many barrels in the market, which is not great news for prices. And you're seeing that impact now. Look at that, 2.5% almost slide on some of the oil contracts out there. In addition, US futures, particularly NASDAQ futures, are up as much as 1.5% as we speak right now. 0.7% I think on the Dow and the NASDAQ, and the Dow and the S&P 500. NASDAQ is up 1.5%. One of the reasons behind that is Micron. Micron shares are surging almost 13-14% in the pre-open or the after-hours trading because of strong guidance that company has put up. So the whole semiconductor lot is very excited once again, which is why the NASDAQ futures are up about 1.5%. So again, we're looking at a very solid global backdrop as well. Rupen, speaking of semiconductor and new technology, obviously that's a area of very high interest here as well. It's renewables, then there is semiconductor. There's EV, but it depends on how you would want to play it and whether you're finding the right companies at the right price. How have you been looking at these new sunrise, no longer new, but obviously growth areas, sunrise areas, and how would you look at playing them?
In some of these sunrise sectors, unfortunately, there aren't many direct listed plays available, and majority of these plays are through the unlisted market. One of the themes which you mentioned, renewables, clearly, the focus, be it on the wind side, some of the players which we have liked, but unfortunately, the market always is, in the current zone, it is discounting next 3, 4, 5 years earnings. So at these junctures, some of the listed players who are a direct play on that theme are not available at a valuation which would, induce us to do a buy call out there. So we are tracking all of these, some of the direct plays which are there, but valuations currently are not palatable for us to pull the trigger. But at an overall big picture level, from a direct listed plays in some of these big themes which you mentioned, unfortunately not many plays are available in the listed space.
All right, Rupen, I wanted to ask you about the capital market plays. The street is getting ready. Maybe we could have another exchange that will be listing on the other exchange. There's NSE getting listed on BSE. But there is some word of caution. Where Zerodha, they reported very good numbers. But Mr. Kamath says that don't expect these sort of numbers going ahead. And he's expecting some kind of a dip because of the regulations that have got tweaked, or there has been a bit of tightening out there. What's your view on the capital marketplace?
In fact, it's a pretty interesting question, Nigel. And here, amongst the capital market intermediaries, I will break up into two parts. One, companies in which majority of the earnings comes from transactional incomes, so which would be the brokerage firms, the exchanges, essentially in that. And the other in which, while transaction income is there, but a lot of income also comes from annuity. So some of the asset management companies, wealth managers will get into that. And, there are R&D players and all which will have a combination of the both. So in the current juncture, and I think very rightly, as Mr. Kamath of Zerodha said yesterday, we have to be cognizant of the fact that it is a cyclical industry. And in last 4 years, we have always seen a one cycle up. And I think their numbers also were quite mind-boggling. Almost 5,000 odd crores of profit is what they reported. So here, considering, I think very rightly said, regulatory challenges which we are seeing, there can be impact on the overall volume. So some of the companies which have a direct correlation with the volume plays, definitely it makes sense to take some profit off the table, because what happens in market usually gives high valuation probably to peak earnings. I'm not saying these are peak earnings. That definitely there's a huge growth runway for growth, but in the intermediate period there can always be drawdowns. So at this juncture, probably preference would be more towards companies which have higher annuity business vis-a-vis companies which have high transactional income, because that can easily go down 30-40%.
Okay, all right, got it. Rupen, good talking to you today. Thank you very much for taking up the time and joining us. And we look forward to the next conversation as well. Okay, that's a view from Julius Baer coming in, and the market continues to move on steroids. Literally 228 points, just like that, 1 hour, and the screen is looking so very different. We have, yeah, look at that. I mean, this rally is just continuing, and we still have over 20 minutes to go. On that note, let's go across to Nimesh to talk about the standout brokerage report of the day. Nimesh.
Hi, sir. I highlighted a report from BofA Securities on auto ancillaries. A couple of changes they've done to the auto ancillary stocks. The first was Sona Comstar, a double upgrade technically on that particular name from BofA Securities. They tried to upgrade the stock to a buy from underperform, and they've raised the target price to 485 versus the earlier target price of 670. The other stock was Samudra Motherson. Even that's buzzing in trade up 3%. They've raised the target price in Samudra now to 240. And on Bharat Forge, there is a small downgrade to neutral from buy, and there they have a target price of 1800. Now, BofA believes that the entire OEM basket offers a structural growth story in terms of earnings with foray into newer segments, electric and premiumization, which will add to the volumes as well as upside to the margins as well. That's the first B trigger. The second trigger is they see a lot of inorganic opportunities opening up, especially in Europe, and that's when a lot of Indian companies could be interested in looking out for those acquisitions. So that could be another leg of a big upside in terms of growth potential for the Indian OEMs going forward. And third and most important, they also believe that most of the OEMs are now diversifying to de-risk their cyclicality in the auto names, so foraying into non-auto segments as well. So these are the key reasons why they believe that OEMs give up is a structural growth story, and that's how today they have upgraded Sona Comstar to buy. They've raised a target price on Motherson Sumi as well, and they've done a notch downgrade to Bharat Forge to neutral from buy earlier.
Okay, all right, Nimesh, thanks a lot for that. Well, I'll tell you what, we'll slip into a short break. On the other side, we'll come back. Nimesh will be joining us for D-Street Chatter. We'll also give you some BTSC buy or sell calls.
And it's gone from across the world, right? If GE of US has sold, Whirlpool has sold, BAT has sold, Sumitomo from Japan has sold, Singtel has sold, and now Hyundai is approaching the market. So all these chaps are getting it right.
Yeah.
But we still haven't come and raised the money.
And that will happen according to you.
I think it's inevitable. I mean, that's what capitalism is, right? That demand for paper will create the supply.
And we're a long way off from that climax. Or whatever.
I hope I'm not proven wrong next week, but I think this has legs to go.
This has legs to go. PSUs, capital goods, real estate, infrastructure, that's essentially been the leader of the bull market. But people, defense, etc., right? That part, it looks like we're starting to rotate. People are starting to rotate out of that.
Which is inevitable.
Inevitable. You think that's done, or is just like a pause and refresh case
again, in terms of market cycles, when you see the leaders of every cycle, then they go to sleep for a decade. So the leadership of 2000 to 2007, which you were earlier alluding to, was indeed commodities and infrastructure, power, real estate.
Right.
And then the excesses which happened in that period made them complete pariahs. So if 4 years ago we were on a show and Ramesh and I remember we would talk about PSUs and everyone was like sniggering like what's wrong with these chaps. But because the correction had been so steep that it's eventually an investor's job is about valuation. Like I said, the greatest Infosys may not give you the return and the what so-called poorest PSU may give you the best return. So it was a mean reversion trade which happened, and of course all the right policy things happened for infrastructure and defense and railways and so on. So you go from being what I call terrible to bad is a rate of change. But you went from terrible to being good.
Yeah.
So that rate of change is so dramatic that's what the markets have discounted.
And now maybe to great.
And now you're imagining it to be great. Some of them may make it, but most of them won't. So I would be very, very cautious in those kinds of places. And typically these are not high return areas. By definition, if you make 25% IRR in an infrastructure business, the cost to the consumer, which is the average public, is going to be too high. So your money made is really on leverage, and therefore the return on equity comes in that business. So, and people are shy of doing leverage after again the last cycle.
Even
and the flip of it, sorry to just complete, the leadership of the last cycle was all the high quality businesses in the last decade, which were all getting re-rated. Asian Paints, Page Industries, Kotak Bank,
consumers,
HDFC,
retail,
even, and including banks.
Welcome back. Well, while we have been only addressing the headline index, I'll tell you what, your portfolios may be feeling much better. Now the breadth of the market as well has improved. The mid-cap index has moved into the green, and that was the sore point. That was the one that wasn't really participating. So there's been a big recovery out there. Both those two crisscross lines getting a little bit closer together. And also the mid-cap index, the intraday chart comes up for you, moved into the green. All of this in the last 50 minutes. But as promised, let's get an insight into D-Street chatter. Nimesh is still with us. Nimesh, tell us, what are you picking up?
And actually, another day of big outperformance of large caps versus the mid and small cap, and that seems to be the trend of the entire series, right? The Nifty, Bank Nifty is relatively and massively outperformed both the mid cap and the small cap indices in this particular series. Again, this is backed by very strong FI buying. Today, the number may not be quite relevant because of the expiry, but throughout the series, we've seen big buying by FIs and domestic funds into the large cap names. So that's been the trend of this particular series. For today, metals have done well, autos have done well as well. So a lot of large cap sector stocks have done well in today's market as well. I guess all eyes will be on the Nifty and the Bank Nifty rebalancing, which will be effective tomorrow. Some individual names will be impacted. We highlighted Trent, but watch out for BEL as well. That's get added to the Nifty, as well as Divis gets out of the Nifty. So those few stocks will get impacted because of the rebalancing. But for the next series, again, the feedback looks like the momentum will be clearly with the large cap names. So that's something to track. But in terms of triggers, geopolitical risk, earnings, as well as the central bank action, these are the few important triggers as far as the October series is concerned. But clearly, the September series was with the large caps, and looks like that momentum is likely to continue.
Yeah, absolutely. That large cap move has actually become real in this month. Take that point, Nimesh. What about individual stocks? What's catching your attention today?
Well, the first name is Pratap Snacks. Out of the blue, that stock is buzzing in trade. Big volumes as well. Stock is up 14%, large volumes. I understand some HNI investors are quite active. And also for a long time, there has been a chatter of a corporate development in Pratap Snacks. So something maybe on those lines, and hence a big move in that name. The second stock is Gulf Oil. There was a large block in the afternoon trade. Nearly 4% equity got changed hands. I understand the promoter entry was a seller. Some large HNIs and few domestic mutual funds were buyers. So again, disclosures will be quite interesting in Gulf Oil. The third name is Kalyan Jewellers. After a big move in that name, some bit of profit booking is clearly visible now. Again, there are block bids, is what I understand. Block offers is what I understand in Kalyan, and that's the reason why that stock is under pressure today. And the last is Oracle Finance. Within the IT name, this is one stock for the last many days because the stock was in F&O ban. There was delivery-based buying. That seems to be the trend today as well. And also today evening, we'll see the Accenture numbers. So maybe IT could be big to watch out for in tomorrow's trade. And Oracle stands out on back of FI buying.
Okay, got it. Absolutely. I was also looking at Pratap Snacks. Glad you brought this one up because Pratap is seeing a massive move, and actually it's got some company because Gopal Snacks is also running, I think, in tandem. 16 on Pratap, and Gopal, last time I checked, was up almost 5-6%. So very interesting moves in some of these mid-cap names. Let's go back to Mitesh for some final trading calls. Mitesh, I don't know if you look at any of these snacks and papad and bhujia and namkeen makers or not, but any new trading ideas?
No, I think metals are still, I think after some pullback in the morning hours, metals have come back roaring, and you could see the price action today. Tata Steel is a BTST with a stop at 164 for targets of 170. And the other one which I like is National Aluminum. Nalco is a BTST with a stop at 201 for targets of 208.
Okay, all right. Thanks a lot for that, Mitesh. By the way, a few stocks have gone up. I think Z Media was talking about raising some money. The stock is locked up. It's up close to 20% as we speak. So massive move is what we're seeing out there. Another one from the broader markets is SCPC. The stock has slipped. It's been one of those stocks where, you know, people were banking on that it could do well. It did nothing for quite a long while, and then it quickly moved, I think, in the last 1 month from 20 to around 30. Some order wins and all as well have come about. So SCPC is another stock that has slipped in the last few minutes, now at the low point of the day. And Prism Johnson, the street has been a buzz that something or the other is going to come about. We had put out a fundamental piece that valuation-wise it looked pretty much full. Now from the high of the day, the stock has corrected close to around 10%. Well, the independent market expert, we have Amrish Paliga joins us. Hi Amrish, good afternoon and good to see you in. Well Amrish, I want to ask you about Prism Johnson, but before that, just give us that one stock that you normally, help our viewers out with.
My stock is Bayer Crop Science. And this is a subsidiary of the global agri giant Bayer. Range of products and services which include crop protection solutions, seeds, and digital farming technologies. Drone services are also being provided to farmers. Approximately 44% of the company's domestic sales comes from their top 5 products. And the focus is clearly on research and development plus collaborations with the local farmers. And they are big in corn seeds. In fact, they're the leaders there. And corn is currently being used for ethanol, which is another booster. And India's, in fact, average farm yield is much lower than the global average. And globally, I think going ahead over the next 2 decades, we'll see the main issue is going to be food security. So the yield per acre is going to be, extremely important. And this is the focus area for Bayer. If you look at the balance sheet, it's quite strong, a robust balance sheet with, extremely low debt and strong dividend payouts. If I'm not wrong, is about 88%. Expected revenue CAGR over the next 3 years is about 15%. PAT CAGR, we're talking of about 30%. So expected EPS of 275 for FY26. And with this, my target is 8,250, which is around 2,000 rupees higher than where we are right now.
Okay. All right. So that's the stock pick that you have for us today. Got it, Amrish. Stay on. We'll have more questions for you. We do also have to take a quick break. But as we take the break, we'll leave you with some very interesting views that Anuj got while speaking with market veteran Ramesh Damani, who says that the market is finally transitioning from mid caps to large caps. He also shares his thoughts on retail participation in the F&O space. Take a look. We'll take that break and come right back.
जो सेबी की जो रिपोर्ट आई थी अभी 1-2 दिन पहले, वो बोल रहे थे कि retail public who has gone primarily into futures and option trading have lost money. उनके हिसाब से 90% have lost money, which is about 1 crore of people. 50,000 crore रुपया नुकसान किया उन्होंने. 50,000 crore रुपया उसने किया. 50,000 crore रुपये में could buy the complete Tata Elxsi or companies like Biocon. That is the amount of money they lost. So it is bittersweet. मुझे बहुत अच्छा लगता है कि Indian prosperity में Indians participate कर रहे हैं. I feel a bit sad that people are playing in the F&O market without understanding the market. Market is, bull markets have length. Bull market कोई permanently चलता नहीं है. कहीं ना कहीं जाके रुकी जाता है. We are very lucky, we're very blessed. Unlike China, Thailand, Japan, who haven't had new highs in almost a generation, investors, Indians have constantly seen new highs in the market out there. So very blessed. Having said that, it just seems to me that the market is now transitioning from mid caps to large caps. Leadership has shifted in the market. And typically, if you have a very ferocious rally from this point, that would signal some sort of, ending of the bull market. मेरे को जो लगता है ये जो K-pop के जो shares आने हैं, Hyundai, Samsung, they'll all start coming with IPO soon in India. Because they're getting such valuations in India, so why won't they encash it out there? That will suck up a lot of market liquidity from the secondary market, and that would be kind of a warning sign of trouble ahead. But what a great run they've had. I mean, 30 गुना बढ़ गए, उसके बाद 20% घट गए, तो घट गए. I mean, there are a lot of other stocks in the PSU sectors, in the oil and gas sector, for example, in the engineering, in construction, that still looks good. I mean, no sure goes up all the time. Everything corrects. So it's just, it's a fallacy thinking. Everyone says, oh, I told you so, but you didn't tell me when the price was 200 and I could make 30 times the money. Bull market का जो leadership अभी भी PSU में, but the roles are transitioning. So I feel somewhere in the oil and gas sector, some in the engineering, some in construction, will continue to do well. Power sector will continue to do well. It'll be a good time for stock market, it'll be a good time for investors, and it'll be a good time for entrepreneurship in India. I think democracy almost demands that. As the best example is that whether you look in the America S&P 500 or look in the Sensex 30, look at where they were in 1980 and look at where they're 2040, 50 years later, 60 years later. Most of the components have left. They're new companies, new blood, new ideas.
So like in life, in stock market, best is yet to come.
I would think so, Anuj. I would definitely think so. I'm hopeful. So I may not live to see another 10, 20 years of what's happened in the stock market. But if you ask me, I feel that the investing for the next 30 years is as much fun as it was the last 30 years. And as Warren Buffett said, that if you could have a pill to live longer, he'd give up a large part of his money, but he would retain his wisdom and his health. So he could continue to invest and see the great Indian experiment, what happens.
Of the index. And you're seeing that getting corrected. That Kotak, HDFC haven't performed for the last 5 years. Again, great companies. But it's the excess of that which is now getting reverted back. And now they've become so hated that when will HDFC move? And there are memes on HDFC doing the round the way it was for ITC. And then you saw the way when ITC moved, it just doubled before anyone realized it.
You think...
so things like that tend to happen. I can't forecast what will happen in...
But you're very bullish on the financialization theme.
I am very bullish.
The magic one that everybody is talking about at this point in time is AI and what AI can do, and specifically generative AI. How do you see that linking back to the efforts on the healthcare side, the innovations that you're working on? I mean, how...
Investing.
Welcome back. Well, a few stocks actually have taken off in the last few minutes. We've just got around 6 minutes to the end of today's trading session. Gujarat Urja Vikas Nigam has bought close to 7.2% stake in Torrent Palm. Explains why that stock has moved up. Big spike up is what we're seeing out there. And from the tire space, we have Apollo Tires. That one has moved up. It's moved up in style. Vodafone Idea as well is trying to make a bit of a comeback after the sharp correction we have seen all the way from around 18 rupees to around 10 rupees. But my sense is that because they raised money at around 11, 12 rupees odd, till the stock can get decisively past the 12 rupees odd, those that got in at around 11 rupees, now they're a little bit jittery. So I think it'll find it a little bit difficult to get past the 11.5 to around 12 rupees odd. Let's get Amrish's view. Amrish, any view on Vodafone Idea? Everyone, there was so much of excitement. They did that fundraise. In hindsight, people who got in at 11 would have been happy to get out at 18. But at 18, they were thinking of 28. What's your view?
Absolutely. Yeah, in fact, in this market, it's natural to be greedy. And that's what, had happened when the stock went from 11, which was the issue price for the OFS, till 18 levels. But then now I think clearly people are jittery because the question is whether Vodafone will survive or not. But then here I would possibly have a different view. I mean, even earlier when the stock was, I think, jittery at about 6-7 levels, I used to maintain that Vodafone will survive because the government would not like to have a duopoly. So I would have the same view even as of now. That the government will not have a duopoly. So I think there will be some adjustments made to ensure that Vodafone survives. So from a stock perspective, I really don't see the stock going very much below where it is right now. In the sense, it can go to levels of 9.5. As percentage-wise, it's decently large. But I don't see the stock going to 2.5, 3 rupees, which I think one of the research reports was mentioning. So say around 9.5 could be the bottom. So those who are stuck at higher levels and can take further risk, I would suggest that one can buy at 9.5 and possibly hold on for the next year and a half. I think there'll be clarity by then.
Okay, got it. So that's Vodafone Idea. Let's pull up PB Fintech. The stock has had a really interesting day today. Started down almost 4-5%, went down to almost 8% at one point in time, and then a full recovery from those lows. It's now actually back at the flat line. Let's pull up a Policy Bazaar, PB Fintech. And as we do that, Amrish, I want to toss the question to you really, because I think the company issued some small clarification to the exchange. It's an exploratory idea about them getting into healthcare and maybe looking at hospitals. Their sort of rationale being that we want to offer seamless services to patients. But I don't know. Does it make sense to you? And what's the call on the stock, irrespective?
Well, I'll just take you back. I think last week or the week before that, I think it was Easy Trip, where they were talking of getting into EV buses. Which is completely, there's no connection as such, except for the fact that both are into travel. I think it's something similar as far as this is concerned. I don't know why they diverge from their core competence and want to get into something else. So I think that would be a bit negative, and because of which I think we will see a further correction as far as PB Fintech is concerned. But I just hope, like Easy Trip, the promoters don't sell after this sort of an announcement.
Right, Surbi was getting her appetite set, and she was quite excited to look at some of these snack companies and just talking with them, buzzing around. Pratap Snacks, you have a view out there?
In fact, that was one of those sort of contract calls which I had bought for my clients because that was, I think, one of the worst performing FMCG stocks in the recent past. We had picked it up at closer to about 850 levels. And I was quite surprised that it didn't react positively when the GST announcement had come. But now I believe, at least there are rumors about some corporate action because of which this has moved up. But then when you get a 20% sort of a return in about 8-10 days, I think one should utilize it, and that's exactly what we have done. In fact, we have booked out 50% of our holdings at these higher levels.
Okay, all right. So that's Pratap Snacks. What about Trent? Really, it's been the stock of the quarter, years. I don't know what to call it. Entering the Nifty in style. But the question is, typically when we have these Nifty inclusions happen, that's when the story starts to fizzle out. But is that going to be the case for Trent, you think?
It's possible because, if you look at the valuation, the way it has shot up in the last 4 to 6 months, and I think at these levels to really recommend a fresh buy. From a trading point of view, momentum is there, that's fine. But from a fundamental angle, even to give a buy for the next 12 to 18 months, I think it's going to be very difficult. So, I would suggest buying at this point of time. Those who have been holding for a while, I think it's a good opportunity to book profits.
Thanks a lot, Amrish, for joining us on Closing Bell. Stay with us, though. Let's do a quick wrap then of the market action. We had a good flourish towards the end of trade. The bulls came to life. We ended closer to around 26,200 odd. And the stocks that did very well in today's trading session, a few of them should come up for you on the screen. Maruti Suzuki revving up the engine. Hyundai is, waiting by to come and list out here. Some would say rather go with Maruti Suzuki itself, going by the valuations, going by the headroom that they have to increase SUV as a percentage of their total mix. Grassim has seen some bit of correction from the recent peak. It's back at around 2,700 rupees. Shriram Finance, what a dream run it's had. It's come into the Nifty and from there it's gone boom, boom, boom. The stock is up close to around 2.5%. Tata Motors as well is up close to around 3% in today's trading sessions. A lot of winners, Surbhi. The lone loser, I think the heavyweight one that was underperforming today was L&T. And Vivek explained to us with regard to that brokerage note that was a little bit cautious.
Absolutely, but otherwise it's a big move on the large cap screen, though. I guess the close might not be above 26,200. Let's see what the final adjustments are like. Let's look at the mid-cap space. That part of the market, while it was underperforming, still there were gainers by the end of it. It recovered quite a bit. Reliance Power continues its upward march, 5% up on that one stock. Easy Trip Planners, 7% as some sort of repair happens after a lot of damage to the stock. The snack makers we've discussed, Gopal Snacks and Pratap Snacks, are really flying high, 9% to 15, 16%. Oh, 20% on Pratap Snacks by the time we're closing out. So big moves coming in over there. There's Moti Sons Jewelers, which has had a good day, 6% up. But speaking of jewelers, Kalyan didn't have such a great day. In fact, Kalyan has seen some profit taking, 5% down. Crompton, First Source, these are some of the other names that were cooling off in today's mid-cap market action. But overall, a very good day for the large cap screen. Well, with that, it's curtains on this edition of Closing Bell. Many thanks for watching, but don't go anywhere because Nigel and I come right after this break to take the action ahead. Markets forward coming right up.
Is AI likely to be, or are we on the cusp of seeing that kind of transformation?
Usually when you get new technology, it's applied in the rich world for those who are well off. And what we'd like to do this time with AI is make sure both in terms of discovering new interventions for nutrition or vaccines or drugs and helping give people health advice, in voice in their native language, that we actually bring these AI advances to those most in need. I mean, after all, where's the greatest shortage of doctors? It's in developing countries. And so the foundation is leading the way by giving grants to various people and pushing this forward, even for a topic as complex as nutrition. The AIs are going to help us understand things faster than we would without it.
If you could do a startup all over again and focus on AI, what would the niche be that you would like to address?
Well, if you could go back to my school days even, and then I was saying, hey, how do we make software as smart as human beings? And I was constantly thinking about it. I underestimated how long it would take, but here we are on the cusp of that. And so now the lens I apply is the lens of the foundation. If I was somebody young, sure, I'd compete with, OpenAI and all these people. But, now I'm in the stage of saying, how do I help other people work in AI apply it to those most in need?
As far as India is concerned, the role and relevance and the significance of India, especially as far as the foundation is concerned, and what you're hoping to do on the innovation side.
So India's the country the foundation does the most in. Other than the US, that's our largest group. We have a great team there. We work a lot with the national government and many of the state governments. And not only do we see in areas like nutrition or using ultrasound to detect a difficult pregnancy, we're doing a lot of studies with our partners there, which will have a benefit for India. But also, because the digital infrastructure in India is so strong, we can try things out there and take them to other countries. The digital infrastructure itself is a great example where the leadership has laid that foundation, and now both India and Gates Foundation are going to Africa and other places and saying, hey, you should do the same thing.
Was there a specific learning from this trip to India for you?
Well, it was
The Lal Street posts a record close in a range-bound session on expiry day. Nifty hits an intraday high of 26,250. The cap index recovers in the last hour. For the series, market posts gains for the fourth straight one, while Nifty Bank outperforms.
Metal stocks get a fillip. The index surges 2%, led by US Federal Reserve's rate cuts and also hopes of Chinese stimulus measures. Vedanta is the biggest gainer, says it will consider a fourth interim dividend for FY25. The stock has nearly doubled in this calendar year itself.
Crompton falls over 6% post its analyst meet. PB Fintech also corrects after its plans to foray into healthcare failed to excite investors. Sources say that Alkem Labs is in talks to buy Novartis India. That's an exclusive.
Hello and welcome to Markets Forward, your go-to show where we get you all the key data points with regard to today's session and get you up to speed to set you up for tomorrow's session. I'm Rashmi D'Souza, joining me as always, Surbhi Upadhyay. Will Surbhi, a good trading session?
Oh, absolutely. Plenty of green and an exciting last hour with the bulls charging ahead. So we have plenty to cover over the next 20 minutes, all the major developments on the street, all the top corporate voices, and of course, all the events to watch tomorrow. But let's put the rally in context because it had a lot of local triggers, some global triggers, and the net result was a strong move in that last hour.
Well, that's right. It was an expiry-related factor for the Nifty, and the Nifty bulls ended the series with a flourish. The Nifty ended with a solid 200-point gain in today's trade, and expiry element is what we saw. The broader markets, though, they were relative underperformers because though the mid-cap index managed to sneak its way into the green, but otherwise, the breadth of the market was in favor of the number of stocks declining. So we ended up with more number of stocks declining than advancing in today's trade. Metals, they were glittering. There's a couple of booster shots that are coming in there because you have the Federal Reserve that's cutting interest rates. China is pepping up the demand. So that's why, in fact, metals have been looking up. And Vedanta, not the one for the faint-hearted, but if metals are going to see a melt up, that one's giving you exposure to oil, to aluminium, to zinc, to silver. It's got the entire, spectrum of metals out there. So that outperformed, but we'll tell you about that in just a bit, Surbhi.
Oh, absolutely. I mean, if you talk about it, it was quite a well-rounded move, at least for the large cap screen. So no complaints over there. Because while metals were shining bright, banks and financials weren't doing too bad. I mean, the bank Nifty was up about 0.5% as well. And autos were really revved up. And you'll see that when we start showing you the individual stock performance as well. The expiry was the local factor. The global factor was the fact that markets around the world were actually in a very, very good mood. European markets were tracking solid gains, 1.5% over there. And even the US futures, while we were trading, were up anywhere between 0.7% to as much as 1.5% on the NASDAQ. NASDAQ in particular, and we'll see this tomorrow morning, Micron has put out a very strong guidance. So expect some action and some fireworks on the tech stocks over there. But all in all, a very good day. Yes, mid-cap underperformance has been a hallmark of not just this week, September itself. We'll talk more about that as we go forward. So here's the lineup on the show today. We'll start with the key movers and shakers. Hormaz will bring us all the action. The stocks on our radar include PB Fintech. It is looking at a possible healthcare foray. We'll discuss more details around it in just a bit. Crompton was in focus, declining today after the analyst meet. In contrast, Trent was gaining ground as it prepares for its grand entry into the Nifty 50. So we track all of these stocks and then we get to the events to watch tomorrow. But it's time to kick off the action today with Hormaz getting us all the individual stocks that were flying around. Hormaz.
Another day that belonged to the large caps and another day where the Nifty made a record high. So it's almost even, as you can say, par for the course, I guess. What was revving up, as you just mentioned, were auto stocks, and almost every component of the Nifty Auto Index ended in the green in today's session. Maruti, Samvardhana, Motherson, after that brokerage commentary, positive brokerage note that came in. Tata Motors too ending at the highest point of the day, and as did M&M and Eicher Motors. Hopes for more Chinese stimulus has revived metal stocks, and Vedanta, of course, it had its own news flow as well, closing above the mark of 500 now. Nalco, NMDC, CNBC, every other component of the metal index too ending higher in today's session. The falling oil prices have had divergent impacts. Good for the oil marketing companies, not so good for ONGC and Oil India, although both of them did see some recovery towards the close of trade but still ending in the red. Among stocks that moved on volumes, Easy Trip seeing some bit of revival after yesterday's smashing. It got 7% higher today on very strong volumes. Swan Energy, Blue Star also having a good day. And lastly, Trent, of course, you just highlighted that one record high after another. Has been a massive wealth creator as well. Citi now expecting targets of 90 to 50. And lastly, a very sharp recovery from the lows seen in PB Fintech. At one point was down 9%, but see the last hour chart and you would see the stock ending just 2% lower. A very sharp recovery from the lows of the day. Back to you guys.
Okay. All right, Harmas, thanks a lot for dropping by and giving us that neat list out there. But let's get in our guest. We have Amrish Paliga, who's going to help us out with the fundamentals, and we have Shilpa Rao, who's going to help us with the technicals. Thanks so much, ladies and gentlemen, for joining in. Well, Shilpa, you go first. We've ended a series, the September series, on a high. The markers you're looking at on the Nifty, and particularly the Nifty Bank, because that's clearly found its form in the last 45 days or so.
Yes, rightly said, Nigel, and we have been speaking about this, that this euphoria to continue and, land where we are today. Nifty, again, heading towards new highs of 26,500, I believe. Now, the fresh support zones are very strong at 26,000 to 25,950 odd zones. So anybody holding those longs should trail to those levels. And if anybody wants to go fresh longs here for targets of 26,500 to 26,800, maybe 27,000 as well. So that is, again, your 200 to 300 rupees of stop loss. Talking about Bank Nifty is again heading towards, it is in the all-time high zones and it is still continuing its mark towards 55,000 to 55,500. So there's nothing much, to say rather than just keep trading your stop loss and, you just enjoy the ride.
Okay. All right. Got that, Shilpa. Let's, quickly move to some of the individual stocks that we're focusing on the show today. One of them, as we told you, is PB Fintech. And this, of course, was a CNBC-TV18 news break. Now, the stock was extremely volatile. It, it fell quite a bit, down almost 8% in the early part of the morning, but it had a very sharp late recovery come through as well and finally ended fairly flat. This after the company confirmed exploring opportunities to enter the healthcare space, including perhaps even setting up hospitals. Vinny Motiwala is here with more details. Lots of drama around the stock in the last, actually yesterday and today. Vinny, tell us more.
Absolutely, lots of drama that we saw coming in for PB Fintech. Last couple of days, we've seen some pressure coming in. But in the last half an hour of trade, look at it, we've seen a sharp recovery today, yes. And managing to just move up from the day's lowest point. So, yes, what we understood is that maybe, they will be looking to enter more into the healthcare space, or they want to focus in terms of opening up their own hospital chains. We'll have to wait out for more details on this, because in the short term, if they do open their own hospitals, that would be capex heavy and that would be capex intensive, causing some bit of a pressure for them. But in the long run, yes, there's a lot of value creation that comes in here. Now, the company also came out with a clarification saying that, they've not made any decision on this point as of now, and they want to only focus on making the customer's experience much better in terms of making claims. So, yes, they want to get the whole process together. That's the aim and that's the focus area. We will wait out for more details, but Bernstein also came out with a note on PB Fintech where they gave a target price of 1,720 rupees per share. They said that the company is talking about backward integrations with hospitals, and they've aimed at revamping the healthcare market, improving customer affordability. That's the focus area, and this is something that we're watching out for.
Okay, all right. Thanks a lot for that, Vinny. Well, let's get Amrish's view on this one. Amrish, in a bull market, sometimes these diversification, etc., you get away with it. But sometimes the market, punishes you badly. And that's what's happened to PB Fintech. But from the lows, it did get bought into. What's your view?
No, see, it has bounced back because there was some clarification from the management. But then, the thinking in terms of, this sort of a forward integration doesn't really make sense. Because, like I was saying, they need to stick to their core competence, which is a platform, and possibly improve, the service quality of the platform itself, then try and get into healthcare, which is a completely different ballgame altogether. So, in case they go ahead with this, I think we could see lower levels as far as PB Fintech is concerned.
Okay, all right, got it. Let's move on and talk about Crompton Consumer. That stock was also down quite sharply, actually, almost 5-6% after the company's analyst meeting, even though we had a couple of positive brokerage notes on the stock. Upasna is here with more details. Upasna, what was the issue here?
Well, that's correct. Crompton remains in focus as company recently held its analyst meet, and brokerages have highlighted some of the key important takeaways. Now, Morgan Stanley has given an equal weight with a target price of 323 per share. It says that the company has given a long-term revenue growth guidance of mid-teens, out of which it expects 10 to 12% from its base business and 2 to 3% from its new business. The company also expects EBITDA margin to improve by 200 basis points on the back of product mix and operating leverage kicking in. On consumer demand, company says that the near-term weakness remains owing to inflationary pressure, and festive demand in South, particularly during Onam, was lower on a Y-on-Y basis. Now, Nomura has given a buy rating with a target price of 498 per share. It says that the company has highlighted its premiumization focus remains on track across segments. And on Butterfly, management has stated that the restructuring is largely over and revenue growth will be visible H2 FY25 onwards. Hence, Crompton remains in focus today.
Thanks, Upasna, for that. Well, let's hop across to Mangalam's here. He's here to tell us about Trent, which was up 3% today, and it will be entering the Nifty index starting tomorrow. In fact, the stock has seen a phenomenal run. Mangalam, take us through the entire journey.
Well, if you look at Trend itself, the Nifty 50 entry itself, it's had a phenomenal run across a lot of time series. So if you look at, the gains on the stock over the last 6 months, last 12 months and 36 months and 5 years itself, it's doubled in the last 6 months. But if you look at it, over the last 12 months, it's tripled. Over the last 3 years, it's actually gone 9x, and over the last 5 years, it's grown 16x as well. So been a massive wealth creator, and also, its entry into Nifty will bring it $0.7 billion in terms of passive inflows as well. Talking about the Nifty, it is the 6th Tata Group company to be included in the Nifty after TCS, Tata Motors, Tata Steel. You have Titan as well as Tata Consumer too, and it's also the 4th largest Tata Group company now as we speak. But talking about the market cap of Trent, there is a stark divergence between Trent's market cap and all the other retail companies as well. So if you add Trent to all the other retail companies, it's just about 71,000 crore versus Trent at 2.78 lakh crores. But that's not a rarity, because in the retail space itself, you add Trent and the others, you get DMart, and you add all of them, you get the latest valuation of Reliance as well, which is still slightly lower than that at around $100 billion, which was the last fundraise. But Trent's rally on the stock price has also coincided with its growth in the financials as well. So revenues of 2,500 crore turning into 12,000 crores in 4 years, along with the net profit of 1,500 crores, is something that the street likes. Street is betting more on the way Zudio expands from here on. And this morning we also had a Citi note which expects profits to compound at 56%, and as a result of which they have a target of 9250 on the stock, which has already seen a phenomenal run.
Oh, yes, absolutely. Phenomenal is probably an understatement or understated word for Trent. Mangalam, thank you so much for that. Shilpa, what do you think? The calls, the fundamental calls are still coming at higher levels, 9,000 plus, we just had Mangalam point out. But technically, Trent, doesn't make any sense buying now?
Yes, I guess, the kind of momentum it is happening, you can still, look for targets of 8,000 to 8,200 on immediate basis. I believe any dips towards 7,750 is also a buying opportunity. Keep a stop loss just below 7,700. And I guess you can still look for targets of 8,100 to 8,200.
Okay, all right, got that. Thanks very much. Let's quickly move on and focus on another set of stocks. And actually, this one is a CNBC-TV18 exclusive once again. We're learning from sources that Alkem Laboratories is evaluating a new acquisition. Rachna is here with more details. Rachna, what are you picking up?
Right, sources have told CNBC-TV18 that Alkem, which is the 5th largest pharmaceuticals company in India, is in talks to acquire Novartis India, which is the India arm of Swiss pharmaceuticals company, the Novartis AG. This deal is expected to be around 2,000 crore rupees. Now, it was in February earlier this year that Novartis AG had told CNBC-TV18 and clarified the intention to sell the India arm, where they own about 70.6%. And now joining the race to buy the India arm is Alkem Labs. Along with Alkem Labs. The companies that are in this race to acquire Novartis India are Dr. Reddy's and Zydus. Now, what we've also understood that as of the first quarter, Alkem Labs has about 3,500 crore rupees as cash reserves on their books, and this deal is expected to be around 2,000 crore rupees. So it would be interesting to watch out for how this acquisition unfolds. The first round of submitting the non-binding bids has already happened, and now the second round, which is the advanced stage of talks, is going on.
Okay, all right, Rachna, thanks a lot for that. We'll keep an eye out on that big exclusive. Amrish, I wanted your view. Suddenly there's this buzz about consolidation in the pharma space. We know that JB Chemicals as well as on the block. Now Rachna is picking up that Novartis as well could be gobbled up by Alkem. What's your view?
No, I mean, see, this is not a huge deal because if you look at the market cap of Alkem, it's about 73,000 crores, and Novartis India, which is a listed entity, is about 2,800 crores or so. So for Alkem, it's not a very large deal as such, although it's a big name, no doubt. But then we should remember that most of the businesses of Novartis in India happens through Novartis Healthcare Private Limited, which is a direct subsidiary of the parent. So, I mean, I'll not really pay too much of a weightage to this, although it's good for the Novartis India shareholders. Possibly they should get better levels than where it is right now.
Okay, all right. Thanks for that. Now, let's quickly move on. We have to actually take a quick break on that note. So, Shilpa and Amrish, we'll let you go. Thank you very much for joining us on the show today. And we'll connect again soon. Let's take that break, come back on the other side, and all the top corporate voices we picked up today, along with the key events to watch tomorrow.
In Odisha to see how the digital approach was connecting with farmers, that they had categorized which farmers were in which location, what were they growing. And so when they would see crop disease outbreak, they could notify them. If they saw weather coming, they could notify those farmers. If the market prices were changing, they could help guide the farmers. And so the digital revolution, bringing that into that agricultural sector, that was the first time I saw that at work. And you know, it's being scaled up in India. Now we'll take it to the rest of the world.
News which just came out, a government-to-government deal between US and India to set up a semiconductor fab unit in the country.
Right.
There are elements of technology transfer, etc. That's the cutting edge semiconductor and sort of plans to localize production. Right. I just wanted your thoughts.
I think it's great. I would love to, you know, India's quote a non-aligned nation, and I don't think we should be asking to align, but I think it's great that we're reaching out to each other, helping each other, investing in each other, and I would love to see far more of that. And this has...
Welcome back. Well, as promised, let's focus on some management commentary that we got during the course of the day. Zaggle prepaid, well, the stock was higher in today's trading session after the firm announced that it would be buying stake in two firms. Zaggle will buy close to around 98% stake in Span across IT solutions and around 26% in mobile wear technologies. Now, speaking to CNBC-TV18, the MD and CEO and co-promoter, Mr. Avinash explained that these acquisitions will be able to leverage their expertise and infrastructure to make solutions and embedded payment experiences best in class. This especially for millennials who find filing taxes a complex process. For their FY25 guidance, the company is on track to meet the 45 to 50% revenue growth guidance that they had given earlier today.
Okay, so that was Zaggle. Let's now move on to another exclusive interview of the day. Malaysia-based global major IHH Healthcare, the largest stakeholder in Fortis Healthcare, wants to increase its shareholding to acquire controlling stake. In a conversation with the CNBC-TV18's Ekta Batra, the firm's group CEO Prem Kumar Nair hinted at sweetening the open offer price. He said that most issues with the open offer have now been resolved and hopes for court proceedings wrapping up in the next 6 to 12 months are also, on the horizon. So let's take a look at the highlights from that conversation.
I think this
matter has wound its way through the courts, Supreme Court, right, and now it's with the Delhi High Court. I would say a lot of the issues have been resolved, right, and this is probably the last final matter, the forensic by Delhi High Court, which is ongoing now. All right, I won't comment on it, right, because it is going through the courts at the moment, and we anticipate that once it is resolved, we let the court process, go through its, usual route. We will, and then we'll have to decide what to do next. The open offer was at $170. Fortis today is at 600 plus, all right? So we will have to make a decision on how we move forward. There are many ways in which we can increase our stake, as you know, all right? But one thing's for sure, we will be staying in India and we will be staying with Fortis. We are happy with what we have at the moment. As I said, we control Fortis, right? Fortis is improving year by year. Operational metrics, financial metrics, there's no restriction to their growth. As you can see, they bought a hospital in Manesar, they disposed of 2 hospitals in the south, right? And they're looking at more acquisitions. They've got a plan to expand by 2,000 beds from their current 5,000 beds purely by brownfield expansion. Correct. Right? So that's their same store growth, essentially. Right? So Fortis can continue to grow. India is a fantastic market for growth in healthcare, all right? Even the government, I noticed, I was looking at some of the budget statements and all that, they're also pumping more money into healthcare. So I think there's a general lifting of the whole healthcare industry. But India, private healthcare will always be very big, right? And supported by payers as well, right? So we see India, right, as probably our biggest growth market. India's got all the secular trends, right, that favor this, right? And we know that increasingly affluent population, middle income, maybe the largest middle income population in the world, 400 million people, all right? Chronic diseases, unfortunately, genetically, there are lots of chronic diseases in India as well. Payers, all right, increasing payer market. And here you have got everything from civil service insurance to government insurance schemes to local private to international insurance. More and more expatriates come into the Bupas, the AXA PPPs, they're all here. So we see all of them in India.
Interesting, post that commentary that we got from IHH, actually Fortis held it pretty well in today's trading session. Throughout the day, we did see it build on to gains, ended with a gain of close to around 2.5% or thereabouts. The intraday chart will tell you a better story. Well, before we wrap up on the show, let's bring you all the key market events you need to track for tomorrow's session. Manglam's here to help us out with that list. Manglam.
Well, more macro than micro, but important macros as well. First things first, it was the September series expiry today. 4th consecutive series of gains. The Nifty has gained almost 3,700 points in the last 4 series. So let's see what October brings. It's the October series that starts tomorrow as well. A lot of cues for that entire series. And then it is also the start of all the online festive sales that come by. So you have Amazon Great Indian Festival, Flipkart Big Billion Day, Meesho Shopping Festival. How is the retail sentiment and the consumer sentiment is something that we will gauge from how these sales perform. So we'll keep an eye out on data trickling in from there itself. The other thing we'll be watching out for, a smaller stock that we rarely speak about, is Z Media. They will consider raising of funds on September 27. So tomorrow is the board meeting for that. And then a lot of global economic data coming in. In Japan, you'll have the Tokyo CPI, which is coming in. China, you'll have the industrial profit data that will come by. You'll also watch out for the core PCE data from the US and the consumer sentiment data from the US. Both of them extremely important. And then we have the ECB Consumer Expectations Survey. The outcome of that will be very crucial as well. So more macro than micro, but very important macros to watch out for tomorrow.
Okay, all right, got it. Thank you, Manglam, so much for getting us all of those sort of important events to watch. And with that, we are out of time on this edition of Markets Forward. Many thanks for watching. All the news, updates and the action continues on CNBC-TV18 after this break.
National security part, which of course all countries have an interest in. The second is just, better economic relationship.
Over the last 2-3 years, we've seen the rise of the so-called industrial policy across the world. National security is being prioritized, as you said. Do you see this as part of that, in the context of that?
Yeah. So industrial policy, I'm a little cautious about. I think to combat some of these things and to do things in your country's own interest, which are hard to do economically, you're going to need some economic policy, industrial policy, like the United States has, for rare earths and things like that, and lithium. Every country is different, so the national security needs of India are going to be more around energy. I think for everybody, it's going to be semiconductor chips. So I do think that's industrial policy. I would caution industrial policy when it's used for regulations, bureaucracy, politics, votes, social, and it doesn't have the twin of permitting. It's not going to work. So you got to be a little cautious when you use it. But yeah, we're going to have some. And like I said, I think it's very important that America and India have a great economic relationship.
Would you agree, though, that in the former part of what you described, industrial policy is kind of taking the lead? Businesses and who you align with, who you want to do business with, building supply chains. A lot of that is now, it seemingly is led by that. I mean, what governments really want to do. Well,
no, it's two different. Governments have always negotiated economic arrangements, stuff like that. If you look at the United States, the industrial policy is a very teeny part of the economy. So it isn't like it's taking over the economy. Right. I think in other parts of the world, it's obviously a much bigger part of the economy. So, but yeah, nations, because of national security and because of what some people might consider unfair competition, there will be forms of industrial policy. If I was a government, I'd be very, very careful. It should be very targeted, very specific. It shouldn't be to protect local industry. It shouldn't be to just create jobs. It should be for a very specific reason. But you're going to see it, and hopefully it's well done.
Let's talk about the big event from last week, which is interest rates coming down. The Fed cutting by 50 basis points. Do you think it was a bit excessive, given the fact that GDP is expected to grow at 3%? Stock markets are at all-time highs. I mean, there's no issue with credit spreads, etc. Indicators are all pretty good, and you get a 50 basis point cut. What do you make of it?
I think it's a lot more ink than it deserves. I think they raised rates to 5 very quickly. They were a little late, which they acknowledged. They raised it to 5. The economy is slowing down. Inflation is coming down. And relative to inflation, even if inflation is 3%, the 5 is maybe a little bit too high. So they made a big step to get it close to what they think it might be. They've got plenty of room to go down, and hopefully we'll continue to exhibit growth with inflation coming down. I'm a little more skeptical than other people about that, but it is happening, and they're just reflecting reality.
Yeah. You've been cautious in the past about prospects and said, well, one has to be prepared for things going wrong. Are you a little more positive now?
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking this evening. A late surge helps Indian equities close in the green for the 6th trading day in a row. The Nifty and the Sensex end at record closing highs. The Nifty already outpaced the 20% gains it made in 2023. Israeli Prime Minister Netanyahu rules out any American and French proposal for a 21-day ceasefire with Hezbollah, instructed Israeli forces to continue operations with full force, even as the death toll in Lebanon crosses 600 this week. Israel's top army general says they are preparing for a possible ground operation into Lebanon. A 3-rate GST structure and exemption of health and life insurance premiums make it to the agenda of the group of ministers on GST rate rationalization, but no decisions are taken yet. Sources say the modalities of merging the 12 and 18% slabs were discussed. Officers have been asked to study the revenue implications of all proposals before the next meeting. The Supreme Court reserves the judgment on petitions filed by Baiju's US-based lenders challenging the resolution professionals' decisions to keep them out of the lenders' meet. Directs that no further lenders' meet should be held till the judgment is pronounced. Certain batches of common fever drug, paracetamol, acid reflux drug, Pan-D and diabetes drug, metformin are on the list of over 50 generic drugs flagged as substandard by the Indian drug regulator, but manufacturers say the batches in question are spurious and were not manufactured by them. Malaysia's IHH Healthcare looks to increase its stake in Fortis Healthcare. Group CEO Prem Kumar Nair hints at hiking the open offer price, adding that he hopes court proceedings will wrap in under a year as most issues with the open offer have been resolved. That's an exclusive. Russia signals a shift in its nuclear policy. President Putin warns that Russia will consider retaliating with nuclear weapons even if it is attacked by a non-nuclear state that's backed by one with nuclear arsenal. Ukrainian Air Force says it shot down 28 of 32 Russian drones and 4 out of 8 missiles during an overnight attack. Amazon's chief technology officer Werner Vogel says the company will not be baited into entering what he called the media race over generative AI, calls large language models like ChatGPT inefficient, bats for more targeted AI spending. That's a CNBC-TV18 exclusive. Well, let's start with the market action of the day. The bulls continue to maintain the winning momentum as the Lal Street entered deep into uncharted territory. The Sensex and the Nifty hitting record highs yet again. This in intraday trade, the Sensex ending with gains of over 650 points, the Nifty 200 points higher. The mid-cap index just about flat but in positive territory, and the Nifty Bank added about 0.5% or so. In fact, the Nifty has gained more than 20% so far this year, and this is higher than the annual gains the Nifty clocked in 2023. All sectoral markets closed with the gains today, but as I just pointed out, mid-caps did underperform. That index barely managing to close in the green. Surabhi joins us now to break down the market action for us. Surabhi, looks like the bulls woke up just in time.
Well, a big last hour flourish for the Nifty, taking the index now close to 26,200. Couple of factors that led to it. One, of course, was that it was monthly expiry for the Nifty, so we had a wave of buying in a lot of large cap names. The second factor was global. Global markets were very strong while we were trading, both Europe as well as futures on Wall Street, where Nasdaq futures were rallying as much as 1.5%, thanks to some very optimistic guidance that Micron has put out. So all of it put together worked out to be the perfect recipe for the bulls. So what worked in the market today? Actually, a lot of different segments. Autos were really revved up because we'll get the September sales numbers soon enough. And then, of course, we're moving to the festive season. So that put together led to a whole wave of buying in autos. We had the financial side of the market continue to look solid and strong. The Bank Nifty managed another about 0.5% move. A lot of the non-banks were up and about as well. Metals, anyway, have been one of the best trades of the week, and that continued today as well. So let's look at the individual stock level action then. The Nifty gainers included names like Maruti, Tata Motors, M&M, even others like Bajaj Auto. Then let's look at some more names. Grasim was up and about, Bajaj Finserv, Shriram Finance. You have SBI Life and HDFC Life. That illustrates the point on the non-banks doing very well in trade today as well. Come down the list, and then you get the shine from the metal majors. So Tata Steel, JSW, Hindalco, all these stocks had a very slow start in the morning, but a great finish with plenty of gains to sort of write home about. Mid-caps have been underperforming. That's a trend that started earlier this month, and it's continuing this week as well. So the mid-cap index, yes, it didn't do as well as the Nifty, but by the end, it recovered a lot from the lows and ended somewhere around the flat line. So the bulls will probably not be too disappointed. The gainers included something like a Vedanta, where the company is considering yet another dividend. 361 had a good day. Easy Trip, which has been slammed hard after promoter selling, that stock came back about 4-5% today. And some of the snack makers were looking very appetizing. Gopal Snacks up and about, Pratap Snacks up 15-16%. And Global Spirits managed to put on 6-7% as well. On the losing side, Kalyan Jewelers, a name that has done extremely well in the last couple of months. Today there was some profit taking. Crompton was down. And PB Fintech, there's a lot of volatility around the stock as the market awaits more clarity on whether this company indeed will get into the hospital space or not. All things put together, a good day specifically for the large cap side of the market.
All right, Surabhi, many thanks for joining us. The big global story, Israeli missiles continue to pound Lebanon amidst US and France jointly pushing for a 21-day ceasefire between Tel Aviv and Hezbollah. The Israel government has said that Prime Minister Netanyahu has ruled out the proposal and instead instructed defense forces to continue the fighting with full force. Israeli military forces claim to have hit 75 Hezbollah targets in Lebanon overnight. According to Lebanese officials, over 620 people have died due to Israeli bombing since the start of the week. Israel's military chief has reportedly told troops that the strikes could pave the way for a possible ground incursion into Lebanon. Iran's foreign minister said that Hezbollah decides for itself and is capable of defending Lebanon.
Lebanon today is victim to an enemy that is using electronic, cyber, sea, and air attacks against us that could turn into a ground attack and set the stage for an all-out regional war. I hope to return to my country armed with your explicit stance, calling for the cessation of this aggression out of respect for the sovereignty and safety of my country.
Hezbollah decides for itself, and it is completely able to defend itself and to defend Lebanon and Lebanese people. Hezbollah has done nothing to violate the resolution. The resolution prevents any manifestation of military presence which has not happened by Israel.
So in terms of a ground incursion or ground invasion, that's really for the Israelis to speak to. We certainly don't want to see any action taken that could lead to further escalation in the region. We still believe that there is time and space for diplomacy. We want to see a diplomatic resolution and a solution to prevent an all-out war. But in terms of, the Israeli operations, I'd have to refer you to them to speak to that.
Meanwhile, Gaza's Hamas-run health ministry has refused to receive a container carrying the bodies of 88 Palestinians sent from Israel. Authorities in Gaza said the bodies were unidentifiable and called Israel's actions inhumane and criminal. Officials have asked Israel to provide details about their identities. Russian President Vladimir Putin has issued a warning to the West, saying that Russia would use its nuclear arsenal if it was struck with conventional missiles by Ukraine. Putin said that Moscow would consider it to be a joint attack if any of the Western nuclear powers supported the missiles that Ukraine used to attack a non-nuclear nation. Putin's comments and threats come on the back of reports that Kyiv was seeking the approval of the US and UK to use long-range Western missiles against Russia. Now, oil prices remain steady after falling in the previous session. This as signs of higher fuel demand and falling inventories in the US offset concerns about demand from China falling. Signs of the return of Libyan oil to the market also weighing on crude prices, so around 72 on crude. The government is considering the inclusion of core inflation number when it releases the monthly inflation data. Sources say economists have urged the Ministry of Statistics to include core inflation in the CPI print. Core inflation is the rate of rise in prices without considering food and fuel prices, which are usually volatile. Sapna is here with more details. Sapna.
Certainly, we are given to understand from sources that the number of options in terms of reading the inflation estimates in a CPI release that may expand in the future. We are given to understand that there could be a debate and discussion within the government circles to basically include a core CPI number, a core inflation number. Now, we are aware of the fact that the Ministry of Statistics has received some suggestions on this front from various economists and forecasters. So there is already pressure from the external world for the government to do the needful. That is one. We are also given to understand that apart from a core inflation number within the CPI release, there could also be one more number without only food inflation. So, vis-a-vis two options which are available right now up front in a CPI release, you may in future have a core inflation number as well as a number without food inflation. So we need to wait and watch and see how this really pans out. Some debate discussion is most likely within the government on this. And there is a lot of background work already on in terms of also the switching of the base year, in the sense the change in the base year for CPI. So, a lot of traction on that front. But these are some suggestions that have come in, and there is some thinking within the government circles on this. We'll have to wait and watch and see at what point in time the future CPI releases will have these additional two options.
All right, Sapna, many thanks. From one exclusive to another, no recommendations have been finalized in the meeting of the group of ministers on the GST rate rationalization. Sources say the group discussed a proposal to merge the 12 and 18% tax slabs, but have asked officers for more details on the possible revenue impact on states. Timsy standing by now with more. Timsy, what are your sources telling you?
Well, that's right. What we are given to understand from sources that the group of ministers panel on GST's rate rationalization has discussed the proposal to move to a three-rate structure. No decision has been finalized as yet. This group has discussed the proposal to merge 12% and 18% slabs, and they've sought detailed revenue analysis on the impact of moving to a three-rate structure. Rather, group of ministers is conscious of protecting the revenue interest of states, and thus, to be precise, opposition-ruled states such as Kerala, Karnataka, West Bengal are currently not in favor of merging the slabs. They rather say that the detailed revenue analysis on this proposal needs to be there in front of the group of ministers for any decision. And to be precise, on food items, the group of ministers in favor of moving the commonly used food items to a one common slab of 5%. Apart from that, group of ministers is keen on GST rate overall framework, where they say that all the current framework of goods and services needs an overhaul, but any changes can come only if the burden on consumers is not enhanced. Rather, they say that they are in favor of hiking rates on goods and services which are rarely used by common man, and they are in favor of hiking rates on goods and services that are of luxury in nature or pose any health hazards. Group of Ministers is also in favor of exempting GST on health insurance and life insurance premium, and this move could cost government about 3,500 crore rupees. So Group of Ministers has now tasked officers to study how to make up this revenue loss of 3,500 crore rupees. The Group of Ministers is now all set to meet on 19th and 20th of October in Delhi. On 19th, the agenda will be to discuss how to exempt GST on life insurance and health insurance, and on 20th on the other issues of further rates and slabs. Let's see what happens when they meet next.
All right, Timsy, many thanks. Now, the Supreme Court has reserved its judgment on petitions filed by Baiju's US-based lenders challenging the resolution professionals' decision to keep them out of the lenders' meeting. The Apex Court has directed that no further lenders' meet should be held till the Supreme Court pronounces its judgment. Ashmit is standing by now to take us through the key observations from the Supreme Court. So where does this now leave the insolvency proceedings, Ashmit?
Well, it's a state of status quo, no moving forward, no moving backwards, status quo to be maintained. That's the long and short of today's interim directions from the Apex Court. The Supreme Court decided it was a fit case for grant of this interim relief after there was a repeated claim made by the lenders, the US lenders, that they comprise the majority of the financial lenders. In fact, not just majority, they add up to over 99% of the financial credit in question, and therefore exclusion by the IRP is in fact something that cannot be permitted, is not sustainable with the provisions of the IBC, and therefore cannot be allowed. So the interim relief that has been granted to the US lenders is that the IRP will not hold any further meetings. Status quo has to be maintained until a final judgment is pronounced. That is, of course, the second aspect, the Apex Court reserving its judgment, and reserving its judgment on twin applications by the lenders. On one front, they are challenging the original NCLAT order, which had allowed for closure of insolvency proceedings by allowing that settlement between BCCI and Baiju's. The other, of course, is the lenders holding steadfast here before the Apex Court, saying that their claims have been even upheld by the Delaware Supreme Court, that they have clear financial dues which are unavoidable, which haven't been discharged, which haven't been paid, and therefore making a case for inclusion back in the COC. The Supreme Court not giving clarity yet as to when this judgment will be pronounced.
All right, Ashmit, appreciate you joining us. Now, cash-strapped airline SpiceJet has cleared pending salaries of employees for the last 3 months. Sources say the salary dispersal of around 80 crore rupees has been pending since June. This comes after the airline raised 3,000 crore rupees through a QIP. Company CEO Ajay Singh had told CNBC-TV18 that the funds raised would be sufficient to support the airline's revival plans. Tata Electronics has signed a deal with Taiwan's Power Chip Semiconductor Manufacturing Corporation to set up India's first chip manufacturing plant in Gujarat. PSMC will provide design and construction expertise for the greenfield fab. It will also provide engineering support for the transfer of technologies. The facility will have a production capacity of up to 50,000 wafers per month. Policybazaar's parent company PB Fintech could start its own chain of hospitals. This as per sources who say that the insurance aggregator is looking to enter the healthcare space. The company clarified that although aligning the interests of insurers and hospitals would help the consumer, it continues to assess options. However, the news weighed on the stock as investors expect the move to push capital expenditure higher in the short term, coming off its intraday lows and finally closing about 1.5% lower. The Indian drug regulator has declared batches of over 50 generic medicines as substandard in its recently released monthly report. The medicines include commonly used medicines like paracetamol, Pan-D, and even drugs used to cure diabetes and erectile dysfunction. Ekta joins us now with more details. Ekta, this is a monthly review. I'm given to understand what have been the concerns raised by the regulator this time around.
The Central Drug Standard Control Organization, or the CDSCO, in its latest survey has flagged more than 50 drugs used for common conditions as not to be of standard quality. These are commonly used drugs for common conditions ranging from high blood pressure to even acid reflux. The CDSCO, which is responsible for approval of new drugs and clinical trials, has said such drugs are being sold freely in the market. The survey indicates certain batches of more than 50 drugs manufactured by various companies were not to be found of standard quality. These included drugs sold by leading companies such as a specific batch of a reflux drug Pantocid or erectile dysfunction drug Pulmosil, both manufactured by Sun Pharma, or one particular batch of a blood pressure drug Telma H manufactured by Glenmark, and antibiotic Clavim by Alkem. All of these were found not to be of standard quality in certain batches only. Companies such as Sun and Glenmark, in response as per reports, have said that these particular batches were spurious and not manufactured by them. Drug regulators, remember, have stepped up vigilance by carrying out random sampling and tests and alerting authorities on any violation of good manufacturing practices. Also, experts point out any specific drug batch of a particular drug does not meet standards, does not mean that all the drugs being sold by the company are substandard.
All right, Ekta, many thanks for joining us. Now, Malaysia-based global healthcare major IHH Healthcare, the largest stakeholder in Fortis Healthcare, has plans to increase its shareholding to acquire a controlling stake. In a conversation with Ekta, Group CEO Prem Kumar Nair hinted at sweetening the open offer price. He said that most issues with the open offer have been resolved, hopes that the court proceedings will wrap in the next 6 to 12 months.
I would say a lot of the issues have been resolved. Right, and this is probably the last final matter, the forensic by Delhi High Court, which is ongoing now. All right, I won't comment on it, right, because it is going through the courts at the moment, and we anticipate that once it is resolved, we let the court process, go through its, usual route. We will, and then we'll have to decide what to do next. The open offer was at $170. Fortis today is at 600 plus, right? So we will have to make a decision on how we move forward. There are many ways in which we can increase our stake, as you know, right? But one thing's for sure, we will be staying in India and we will be staying with Fortis.
So there's no chance of selling out that 31% stake?
Absolutely not, all right? We have got Fortis, we've got Gleneagles, we've got twin engines of growth in India. And given the attractiveness of the Indian private healthcare market, we intend to stay and grow in India.
But what do you think about this long journey of litigations, which is still not over at this point in time? Was there a time where IHH rethought its decision of acquiring Fortis?
Well, to be very honest, I think there were times when we were wondering what we got into, right? But over the years, most of the matters have progressed and resolved, one by one. There were several matters going on at the same time, right? So most of them have been resolved, right? And I think we feel, right? I don't want to judge what's going to happen, but we feel that we are at the tail end of this matter, all right? And we really will have a chance to go ahead, all right? Both with Fortis and with Gleneagles, all right? And increase our presence in India.
So when do you expect to hear back on the open offer?
No, can't predict that for the moment.
Probably by the end of this year
Hopefully
or next year?
6 months to a year, hopefully.
Well, you can catch that conversation on our special show, The Medicine Box, at 4:30 p.m. right here on CNBC-TV18. We will head into a break, but up next, Amazon's Chief Technology Officer Werner Vogel says the company will not be baited into entering the race over generative AI. That and more when we get back.
Cut when you're facing a recession or things are looking weak. It's like a happy cut. So, I mean, are you a little more...
So my question is all geopolitics, which may determine the state of the economy. But it's really the geopolitics that these things, they're getting worse, they're not getting better. There's chance for accidents in energy supply. God knows other countries get involved. You have a lot of war taking place right now. You have American warships being attacked almost every day in the Red Seas. That's my biggest question. The economy fluctuates. I don't worry that much about the fluctuation of the economy, and obviously the Federal Reserve will try to do its job to moderate, the vicissitudes of the economy. But we are spending a lot of money, and in my view, that spending the money causes growth. It also causes inflation, and whether it all moderates, I think it's true for countries around the world. We got to really think through how much debt countries can put on before it causes a real problem. So I'm long-term optimist. Short run, I'm a little more skeptical than other people that everything's going to be great. Markets are pricing things like they're going to be great. I'm put me on the cautious side of that one.
US has been trying to reduce its dependence on China. India has been and is expected to be a big beneficiary of it. Do you think we are sort of using that full potential right now, or there's a long distance to go?
Well, look, going to China, okay, national security, America was overly reliant. That's not being angry at them. You should ask why we didn't do it before, but in terms of rare earths, semiconductors, penicillin, ingredients for pharmaceuticals, obviously every nation look at it and say we can't rely on someone who might one day be an adversary, that doesn't make them an adversary today, for supply. Just like JP Morgan's always have multiple diverse supply chains, we don't rely on anything. The second one is around disagreements around policy, like, you know, if countries are aiding and abetting industries to dominate global industry and beggar thy neighbor, well, that's not going to work either. So you're going to have people, you know, they're going to be hard fought. It's not going to cause deglobalization, but it's important that countries do that. And so, and it's just starting. It would take years. The semiconductor, you're talking about 5, 10, 15 years. So even if it's going to take place, it's going to take a long time. But companies are doing it on things like iPhone. I know iPhone production. So some things can move quick. Some will take years. Huge opportunity for China. I mean, for India. A huge opportunity for India. People call it the China plus one strategy now, that companies that relied solely on China are going to look at India, Vietnam, Malaysia, Indonesia, etc.
We've got U.S. elections, and I think one thing which both Democrats and Republicans agree on is China. You'd agree with that? I mean, in that sense, what's happening is in a way irreversible. The break in relations, sort of a Cold War.
I think you have to be very specific in this one. I think national security, everyone's going to do. Unfair trade, everyone's going to do. I think because of the Ukraine, the terrorism in Israel, Russia, Iran aiding and abetting, China's kind of on the other side of America in that one. So that's causing a lot of the tension. I think the better thing to do is get fully engaged, which they've done, our government, to try to protect ourselves in national security, unfair trade. And yeah, I think if the war goes on, yeah, there will be contentious issues between the countries, far more contentious because of that. So both sides, I think, will be fully engaged. Both sides are going to be tough, but I don't think either side is talking about, you know, disconnecting.
Amazon's Chief Technology Officer Werner Vogel says the company will not be baited into entering what he called the race over generative AI. Speaking to my colleague Ashmit Kumar, Vogel's called large language models like ChatGPT inefficient and argued for more targeted AI spending. He also supported encrypting content online without providing backdoors to the government. He said, and I quote, "Dance like no one is watching and encrypt like everyone is," end of quote. Here's the Amazon Global CTO.
We've been a long-time player in the AI world, but we don't play in the same world as some of these other large companies that you've heard from, because we're a business-to-business company. Yeah? We build technology such that our customers can build these chatbots or these AI interfaces, or use AI for their systems. And as such, we play a very different role in it. We don't play this role open outside in the media with this one model over, that one model over, that one model. We are really concerned much more about security, about safety, about putting guardrails in place such that these models don't generate data that you cannot rely on. I believe backdoors will render encryption unusable or ineffective. Let's put it like that. If one group has access to a backdoor, then others will gain access to that as well. We know that from the past. But I do not think there's anything wrong with asking customers for their keys as the government. Yeah, after all, we have strict legal guidelines in place. It is like, what was it? Dance like nobody is watching, encrypt as if everyone is.
And you can catch that conversation with Werner Vogels, the global CTO at Amazon, at Tech at Work at 5:30 p.m. right here on CNBC-TV18. That is it on this edition of Business 360. The news will continue right here on CNBC-TV18. For now, from all of us here on the team, goodbye and many thanks for watching.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.
Welcome to this special show where we are speaking with the management of IHH Healthcare, one of the largest private healthcare groups globally. The Malaysian-based company operates over 80 hospitals across 10 countries, spanning the entire healthcare spectrum from hospitals to diagnostics. In India, IHH's largest presence is through its acquisition of a 31% stake in Fortis Healthcare, completed in November 2018 for around 4,000 crores. Besides Fortis's 28 healthcare facilities, IHH also operates Gleneagles hospitals in Chennai, Mumbai, Bangalore and Hyderabad. Additionally, they have a pan-India footprint in diagnostics through Fortis's diagnostic arm, Agilis Diagnostics. We have with us Dr. Prem Nair joining in from IHH to discuss their operations in India and to take us through their plans. Dr. Nair, welcome to the show. Let's begin with Fortis. You hold 31% stake in Fortis. You acquired the company, IHH acquired the company in November 2018. Since then, the parameters of Fortis have improved dramatically. For example, the stock price is up around 2.5 times. Revenue has risen, margins have improved. A part of it is also because of the healthcare boom in India. But if you could just give us a sense in terms of IHH's contribution to the Fortis improvement.
Yes, so we came in 2018, we acquired a stake in Fortis, and as you have rightly said, all the operational metrics, the financial metrics have improved tremendously. And I think a large part of the credit must go to the team that we put into Fortis, Dr. Ashutosh and his team. They have done very well. And, you know, other than just operational and financial metrics, you have to look at the clinical quality in Fortis, how that has improved, patient experience. These are all the important things in healthcare today, right? So I think we control Fortis, right? We have got our directors. I'm the vice chairman of Fortis. We provide a lot of support to Fortis in their growth. But Fortis is really today running on its own engine. If you look at all the acquisitions that they have made, Agilus is coming up. It's all through their own internal accruals, right? They've got debt headroom. So I would say Fortis today, and the EBITDA is, you know, in the 20s now. So they've improved a lot, right? And it's a great partnership, IHH and Fortis.
Okay, but obviously the big elephant in the room has been the open offer, which has been pending since December of 2018. The Supreme Court did clear it, and there were some pending litigations which were cleared in, I think, 2022. But there is a particular litigation with regards to a forensic audit, which is pending in the Delhi High Court.
Yeah.
Give us an update on where the open offer stands.
Okay, so I think this matter has wound its way through the courts, Supreme Court, right, and now it's with the Delhi High Court. I would say a lot of the issues have been resolved, right, and this is probably the last final matter, the forensic by Delhi High Court, which is ongoing now, all right. I won't comment on it, right, because it is going through the courts at the moment, and we anticipate that once it is resolved, we let the court process, you know, go through its, you know, usual route. We will, and then we'll have to decide what to do next. The open offer was at $170. Fortis today is at 600 plus, right? So we will have to make a decision on how we move forward. There are many ways in which we can increase our stake, as you know, right? But one thing's for sure, we will be staying in India and we will be staying with Fortis.
So there's no chance of selling out that 31% stake?
Absolutely not, all right? We have got Fortis, we've got Gleneagles, we've got twin engines of growth in India. And given the attractiveness of the Indian private healthcare market, we intend to stay and grow in India.
But what do you think about this long journey of litigations, which is still not over at this point in time? Was there a time where IHH rethought its decision of acquiring Fortis?
Well, you know, to be very honest, I think there were times when we were wondering what we got into, right? But over the years, most of the matters have progressed and resolved, you know, one by one. There were several matters going on at the same time, right? So most of them have been resolved, right? And I think we feel, right? I don't want to judge what's going to happen, but we feel that we are at the tail end of this matter, all right? And we really will have a chance to go ahead, all right? Both with Fortis and with Gleneagles, all right? And increase our presence in India.
So when do you expect to hear back on the open offer?
No, can't predict that for the moment.
Probably by the end of this year
Hopefully
or next year?
6 months to a year, hopefully.
Okay. Well, this is a hypothetical situation, but if in case the open offer does get approved, like you mentioned, the price was 170 rupees. Today, it's over 550 or 600 odd rupees for Fortis in terms of a price. What will IHH do? Will there be a revision of an open offer price on the higher side? What is the decision?
Okay, given that we would like to increase our stake, I think we would have to revise, right, our offer to the other shareholders. So that's probably what it will take for us to do it.
Okay, so you will probably revise the price higher for the open offer if in case you do get that permission to go through. On the other hand, if in case the open offer does face hurdles again, what will IHH do? Will it go through any other route in order to increase its stake? Because currently you do have minority stake.
Yes. Well, first of all, I must say we are happy with what we have at the moment. As I said, we control Fortis, right? Fortis is improving year by year, operational metrics, financial metrics. There's no restriction to their growth. As you can see, they bought a hospital in Manesar, they disposed of 2 hospitals in the south, right? And they're looking at more acquisitions. They've got a plan to expand by 2,000 beds from their current 5,000 beds purely by brownfield expansion.
Correct.
Right? So that's their same store growth, essentially. Right? So Fortis can continue to grow, all right? And we hope there will come a day when we have, years down the road, when we have between the 2 entities about 10,000 beds, right? That will bring us maybe into the top 3, right, hospital groups in the country. That's our aspiration, right? So I think Fortis can, even with the stake we have now and the current growth trajectory of Fortis, it will continue to grow, right? But of course, we would like to increase our stake, either increase the open offer, we can do a creep, all right?
Creeping acquisition, 5% every year.
We can do that, 5% every year, we can do that. Down the road, maybe we can look at folding Gleneagles into Fortis. That's another option. Not envisaged at the moment because both of them are growing very nicely.
Okay.
Right? And we can talk a little bit about Gleneagles as well because that's another growth story.
Okay. So a buyback, creeping acquisition, all of these are probably on the cards if in case the open offer does not go through as planned.
Yeah.
Okay. And possible merger of Gleneagles as well as Fortis could be something that you could consider later.
Yeah.
Okay. How is Gleneagles doing? Because we have the numbers for Fortis. Gleneagles is not listed.
Well, yeah. So Gleneagles is not listed, but Gleneagles is our international brand. So that's the first thing I must say. It's a very well-known brand. Started 65 years ago in Singapore. We have Gleneagles in Hong Kong. We have Gleneagles in Malaysia. We have Gleneagles in East Malaysia. Even in Brunei, it's a joint venture with the Brunei government. So Gleneagles is a well-known brand. So we decided when we had to, after we bought the promoter's stake last year, exactly 1 year ago, we renamed it from Global to Gleneagles.
Okay.
Right? So firstly, it's a very well-known brand. Secondly, if you look at the operating and financial metrics of Gleneagles, right? They were, when we went in, EBITDA was, in the single digits. Today it's in the mid-teens, all right? It's improving. We have revamped all the hospitals. If you now walk into the lobby of Gleneagles Hospital, you see the consistent Gleneagles look, right?
Correct.
We have brought in a lot of equipment, CAPEX, right? MRI, CT scans, PET CTs, all these are equipment that you'll find in a Gleneagles Hospital today. And they do some really cutting-edge work. Gleneagles does one of the highest transplants in the country.
Okay.
And not just liver transplant. In Mumbai here, they do limb transplants, people who have got severe limbs. So very, very high quality work is going on in Gleneagles Hospital as well.
So just on, the branding part of it, because we do understand that there's a litigation with regards to the Fortis brand as well. You had that problem with the diagnostics arm and then you rebranded it to Agilis. But your Fortis brand, what is the current pending litigation? And is there a plan to rebrand the Fortis hospital chain in India?
We would like to keep the Fortis name, right? It's a well-known name, right? But you're right, there is also litigation involving the Fortis. There was also SRL, and that's why we rebranded it to Agilis.
Yes.
So that's also winding its way through the courts, all right? And we will see the outcome, all right? The Fortis name may be up for sale, all right? And if possible, we will acquire it.
And by when would we hear on this particular litigation?
I think that's also within the next 1 year.
Okay. And what about the forensic audit? What kind of audit is going on when it comes to this forensic audit case?
That's with the Delhi High Court at the moment, so just leave it there.
Okay, all right. Well, we spoke about the entire rebranding exercise, and that's what took place with Agilis, your diagnostic arm, and now we have Fortis, which is buying the remaining stake of around, I think, 31% of private equity. What do you feel about that, considering that the private equities did not get any kind of exit since 2012?
Okay, so my personal view on the diagnostic business is that it is integral to a healthcare delivery organization, to large healthcare organizations. And so in all our countries, Singapore, Malaysia, and Turkey, our 3 big countries, the labs are the biggest, all right? And they support the hospitals, They have considerable outreach as well. And likewise in India, we need to have a big lab for our two entities. All right. So Agilus is what it is, and we like to keep it. And hence, when the IPO did not materialize, we encourage Fortis to take it. Right, Agilus, and that's what's happening now. Agilus is probably the second or the third biggest lab in the country by my reckoning, and we again certainly would like to build it up. And the lab business today is just not consumer business, which is very big in India, not necessarily so in other countries. It's very big in supporting hospitals, right, for the high-end work they do. But there's an element of the laboratory business that is very exciting, and this is what I call the high-tech lab business. Molecular genetics, genomics, precision medicine, and all of these are required to support oncology primarily.
Correct.
And oncology, as you know, if you look at the specialty mix of private hospitals in India, right, used to be heavily weighted towards cardiology and neurology, neurosurgery. Today it's shifting to oncology. And oncology requires accurate diagnosis, all right, before treatment can commence. And that's where molecular genetics, precision medicine comes in. So we would like to bring up our laboratories to that level. And for that reason, we have also created IHH laboratories, all right, which is at the group level, all right, and will support the in-country laboratories, all right, to move up the technology ladder.
Okay. You did mention that the IPO for Agilus has been put on the back burner. Any plans to revive it?
No, it's off for the moment. Yeah.
It's off forever or for the moment?
Yeah. Well, I would say I don't see an IPO happening.
Why is that?
Well, because Agilus will now become a fully owned subsidiary of Fortis.
So you would you look to monetize the diagnostic business?
Not really. I think our plan is to have a fully integrated healthcare organization, right? Like in all the other countries. Our laboratories are very well integrated into the business, and I think we would like to do the same.
All of them are wholly owned subsidiaries world over. So you want that similar plan to be executed in India as well.
Yeah, and we want IHH labs to have oversight to help them all grow. We want to set up reference labs in India, in Malaysia, in Turkey, all right, to do some of these things.
But the entire business itself has been underperforming as compared to, say, the other peers in the business.
Yeah.
You know, revenue was up only around 2%. Margins are lower than what the peer set is. What is the plan to improve it?
So, Agilus, if you look at their business compared to the other labs, they were very heavily into consumer laboratory business, all right? They, to a certain extent, I would say they maybe even overextended, right, into the consumer business. So we have now got a business plan. This year is a year of consolidation, and you will find that Agilus, the operating metrics are already improving. We are seeing it now, all right? And then we want to reposition them to support our large hospitals, all our hospitals. We've got Fortis, we've got Gleneagles, and to go for more of the hospital business.
All right, lots of more questions with regards to IHH and their plans in India. We'll take a short break and be back with more.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key news makers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
It'll be a good time for stock market, it'll be a good time for investors, and it'll be a good time for entrepreneurship in India. I think democracy almost demands that. As the best example is that whether you look in the America S&P 500 or look in the Sensex 30, look at where they were in 1980 and look at where they're 2040, 50 years later, 60 years later. Most of the components have left. They're new companies, new blood, new ideas.
So like in life, in stock market, best is yet to come.
I would think so, Anuj. I would definitely think so. I'm hopeful. So I may not live to see another 10, 20 years of what's happened in the stock market. But if you ask me, I feel that the investing for the next 30 years is as much fun as it was the last 30 years. And as Warren Buffett said, that if you could have a pill to live longer, he'd give up a large part of his money, but he would retain his, wisdom and his health. So he could continue to invest and see the great Indian experiment, what happens. Market is, bull markets have length. Bull market कोई permanently चलता नहीं है. कहीं ना कहीं जाके रुकी जाता है. We are very lucky, we're very blessed, unlike China, Thailand, Japan, who haven't had new highs in almost a generation. Investors, Indians have constantly seen new highs in the market out there. So very blessed. Having said that, it just seems to me that the market is now transitioning from mid caps to large caps. Leadership has shifted in the market. And typically, if you have a very ferocious rally from this point, that would signal some sort of ending of the bull market. मेरे को जब लगता है ये जो K-pop के जो shares आने हैं, Hyundai, Samsung, they'll all start coming with IPO soon in India because they're getting such valuations in India. So why won't they encash it out there? That will suck up a lot of market liquidity from the secondary market, and that would be kind of a warning sign of trouble ahead. जो सेबी की जो रिपोर्ट आई थी अभी 1-2 दिन पहले, वो बोल रहे थे कि retail public who has gone primarily into futures and option trading have lost money. उनके हिसाब से 90% have lost money, which is about a crore of people. 50,000 crore रुपया नुकसान किया उन्होंने. 50,000 crore रुपया उसने किया. 50,000 crore रुपये में could buy the complete Tata Elxsi or companies like Biocon. That is the amount of money they lost. So it is bittersweet. मुझे बहुत अच्छा लगता है कि Indian prosperity में Indians participate कर रहे हैं. I feel a bit sad that people are playing in the F&O market without understanding the market.
Welcome back. You're still tuned into the special show. We're in conversation with the management of IHH Healthcare. Now, what I am gathering is that you're extremely bullish on the India story, the India healthcare story when it comes to hospitals as well as diagnostics for IHH. You're not looking to sell out your stake in Fortis either. Give us a sense in terms of the expansion plans that you have in India. You have around over 30 facilities,
34 hospitals between our two assets. Yeah, so I've been on record as saying India is a fantastic market for growth in healthcare. All right. Even the government, I noticed, I was looking at some of the budget statements and all that, they are also pumping more money into healthcare. So I think there's a general lifting of the whole healthcare industry. But India, private healthcare will always be very big, right? And supported by payers as well, right? So we see India, right, as probably our biggest growth market. India's got all the secular trends, right, that favor this, right? And we know that increasingly affluent population, middle income, maybe the largest middle income population in the world, 400 million people, all right? Chronic diseases, unfortunately, genetically, there are lots of chronic diseases in India as well. Payers, all right, increasing payer market. And here you have got everything from civil service insurance to government insurance schemes to local private to international insurance. More and more expatriates come into the Bupas, the EXA PPPs, they're all here. So we see all of them in India, right? So I think payer market. So these are all the factors that I think would be very good for growth. So we intend to ride that growth, right? And we currently are in 12 of the 28 Indian states.
Okay.
That's slightly less than half. So that gives you an indication of how we can expand, right? For example, Gleneagles is predominantly in the south. They can expand further down to Kerala, to Karnataka, to Telangana. They can expand there. Fortis is predominantly a northern hospital group, right? There's some sharing in Mumbai and Bangalore, right? But expansion will take place there. You can still expand within tier 1 cities. That's a question I'm always asked. Would you go down to tier 2, tier 3? Yeah. I say there are still opportunities in tier 1. Manesar recently was a very good example because the tier 1 cities are also expanding.
Correct.
Look at NCR, right? And look at Mumbai, right?
But along with that comes a lot of competition as well. You've seen private equity pump in around $5.5 billion just in 1 year, and record deals which are taking place in the private equity side. With that, there's a lot of competition which is rising in the private healthcare space. How do you think IHH is going to combat that?
So I've always told my team, If there's competition, it's good. You don't want to go into an uncompetitive market, right? Competition is good up to a certain point, right? So, fine, we have got very strong competitors, but we are standing on our own, right? And we are doing well. Fortis today is not just in tier 1 cities. If you look at Punjab, Amritsar, Mohali, Chandigarh, we are very big there as well. So we are already in some significant tier 2 cities. And a tier 2 city in India is like a metropolis in other countries. It's a huge population. We have people who can afford healthcare. So we will look, we are not restricting ourselves just to the tier 1 cities. We will look at the good tier 2 cities. For example, if Gleneagle is going to go south, all right, it can go to Kerala. In Tamil Nadu, we are only in Chennai. We can go to Coimbatore.
Yeah.
These are all hubs as well, industrial hubs, business hubs, right? So I think these are our plans. We think there are lots of opportunities.
Okay, so 4,000 beds is what you have currently. What would you like to increase it to? That's Fortis only.
Fortis will grow by another 2,000 beds in the next 5 years. Brownfield expansion. All right, this is the best form of expansion. Same store growth, Fortis will increase. All right. If we do some acquisitions along the way, we will add another 1,000, 2,000, right? And that's why I said between the two, we'll probably have about 10,000 beds in a few years' time.
Okay.
Yeah.
About acquisitions, what is your plan when it comes to acquisitions in the Indian hospital market? Because it's ripe.
Yeah, it is.
But the valuations are high.
Yeah, but I tell you, Ekta, we are very, very disciplined about acquisitions, right? Because, firstly, we have so much opportunity in all our current hospitals to increase their capacities, and that's the best, right? You get immediate operating leverage. If I put 100 beds in a 200-bed hospital, my utilization of ICUs, my utilization of operating theatres of the machine goes up immediately, all right? Right? Occupancy goes up. So that's the best form, and we are committed to that. That's the first thing. For a strategic acquisition or a big acquisition to take place, we've got several criteria. All right. Firstly, it must be in a market or in an area, of course, there must be significant demand. Right. And of course, we look at the competitive situation. We want to get facilities that are of the highest clinical quality. We put a lot of emphasis on patient outcomes. All right. We've got at the group level, we've got an entire medical group that looks at the quality in all our hospitals group-wide. So that's very important if you look at our acquisitions, right? Thirdly, of course, it must be accretive, right? Within 2 or 3 years, all right? So, and you know, we recently made an acquisition in Penang. You must have read about it, right? It's almost 1 billion.
Yes.
Island Hospital, which adds a lot of value because it's a medical tourism hub. So we would also be looking at similar, right, kind of acquisitions in India.
So is that a space of growth that you're looking at, medical tourism in India, which Fortis is probably going to bank on?
India is a medical tourism hub, right? Okay. Why? Because there's good work done at very cost-effective rates. India is probably one, from a value-based healthcare perspective, India is right up there.
So the valuations don't matter. I mean, is it a deterrent at all, considering that we're around 25, 30 times in terms of some assets as compared to other Asian hospitals, which are anywhere between 10 to 20 times?
Yeah. Well, every deal that we look at is different. All right. It's not just valuations, right? Okay. I mentioned all the criteria, so we will look at it. If it's value accretive to us, or we can in a few years after that, all right, make it value accretive, then we will definitely look at it.
What's the size that you'd be looking at? How much are you looking to shell out for an acquisition?
We shelled out 1 billion recently. IHH has got considerable.
For an Indian asset?
Well, we have got the capability to do significant acquisitions.
Okay, all right. But while you are very bullish on the Indian hospital market, there is also the Supreme Court, which is probably looking at maybe even regulation of pricing.
Yes.
That is a possible deterrent. What's your view on that?
Okay, healthcare is a very regulated industry in all the markets that we operate. Price controls, India has had it for a long time in the drug area, right? Other countries, even Singapore, which is quite laissez-faire kind of an economy, has introduced controls on cancer drugs because the prices are so high, it's becoming difficult for the average person in the street to get decent cancer treatment. So they have started controlling things as well. Malaysia has had it as well. Malaysia controls prices for doctors' fees as we do in Singapore. So what I'm trying to say is we operate in a regulated environment for sure. Now, the Supreme Court matter, I believe, was a petition that went up, is being considered. It will take some time. But I believe that it is not possible, right, to have very tight controls on private healthcare simply because you will deter innovation, you will deter technology. I mean, look at Fortis FMRI. They've just put in the gamma knife, right? They've just put in the MR Linac, for which obviously there will have to be an uplift in the use of the technology, in the trained physicians. Singapore's just bought the first proton therapy machine, Novena. It's about twice the price of a normal radiation, but it benefits patients. So what I'm saying is the price performance really has to be looked at. I'm not sure where this will go, honestly speaking. And again, this is a litigation matter, so we'll see the outcome. But what I'm trying to say is...
But will it change your plans for India if in case there's regulation of pricing?
No, we are used to regulation in all our countries.
All right, Doctor, thank you very much for joining in and speaking with CNBC TV.
Thank you.
Thanks.
The valuations are berserk over there. I mean, again, great companies, but and again, I usually don't talk about stocks, but just to put some sense. And again, don't get me wrong, I'm not disputing valuations or anything, but just to give the Infosys example. Let's say our favorite stock this year was, say, Zomato. It's a $30 billion market cap. Let's say we expect the market normally to give you a 15% CAGR for 10 years, which is 4 times. So it should be a $120 billion market cap in 10 years. Let's say it's a 30p by then because it will be a fairly large company. So it needs a $4 billion PAT, profit after tax.
So when we say melt up, I just want to sort of finish that point. It usually we are talking about like a frenzied move in the very short term, but that's not what you mean. You think
I mean it makes a major long-term top, which is not a great thing. So I mean it's great that we are going up on a wall of worries in a way that every time we meet, we are worried about, is this the end? Is this market going to fall? Will the investor flow stop?
Correct.
Will people run away? Markets don't climax at periods like that. And this seems to be more like the 90s bull market where, small caps were doing phenomenally well. And what tipped it eventually, of course, one was the Asian crisis, which happened outside our control. And B, it just got overwhelmed with supply. And that's really what capitalism should do, that prevent what I call that melt up where the entire market goes up 10x in a decade. And then you don't see that prices for, maybe next 10 or 20 years. So I'm hoping we don't get a melt up and supply response takes care of it. And supply is coming, but it's still what I call a quadrant 3 or quadrant 4 level supply. The big guys haven't yet come. And in the bigger ones, if I take the top 10 companies, no one is supplied. Having said that, the owners of those companies, whether it's BAT selling down ITC or Singtel selling down Bharti, that's happened. But it's not like the Reliances or the Tatas or someone has come with massive issuances, which I think is around the corner. It should come.
I mean, bankers we speak to tell that over the next 12 to 18 months, about $25 billion worth of IPOs should happen. But that is, I'm not sure how much of the...
So, Prashant, 25 also, I'm saying, is a small number now. It's a $5 trillion market cap. So if you don't do 50 billion is 1%. So issuance is, the government ought to be doing 25 billion. The larger groups easily can take 25 to 50 billion. And this is combination of primary and, of course, QIPs and so on. We've seen promoter selling, we've seen PE selling, we've seen MNC strategic selling, and it's gone from across the world, right? If GE of US has sold, Whirlpool has sold, BAT has sold, Sumitomo from Japan has sold, Singtel has sold, and now Hyundai is approaching the market. So all these chaps are getting it right. But we still haven't come and raised the money.
And that will happen according to you?
I think it's inevitable. I mean, that's what capitalism is, right? That demand for paper will create the supply.
And we're a long way off from that climax or whatever.
I hope I'm not proven wrong next week, but I think this has legs to go.
This has legs to go. PSUs, capital goods, real estate, infrastructure, that's essentially been the leader of the bull market. But people, defense, etc., right? That part, it looks like we're starting to rotate, people are starting to rotate out of that.
Which is inevitable.
Inevitable.
Hello and welcome to News Centre. I'm Parikshit Luthra. The group of ministers that met yesterday to deliberate upon the rationalisation of GST rates discussed a proposal to shift to a three-rate GST structure by merging the 12% and 18% slabs. The states ruled by the opposition, such as Kerala, Karnataka, West Bengal, were not in favour of the move, citing concerns over revenue implications. Among other recommendations, the GOM also deliberated on the proposal to exempt health and life insurance premiums from GST, which could mean a revenue loss of approximately 3,500 crores for the government. The GOM is also seeking a detailed revenue analysis on the proposal to impose 5% GST on commonly used food items. The GOM is keen on revising GST rates on goods and services that are not frequently utilized by the average consumer. The intention is to impose higher rates on luxury items and products that may pose health risks. The GOM wants to ensure that any rate changes will be cautiously evaluated to ensure they do not place an additional burden on everyday consumers. The meeting ended without any definitive decisions. The GOM is expected to reconvene on the 19th of October to discuss the exemption of health and life insurance premiums, and again on the 20th of October to revisit rate rationalisation and slab merging proposals. Now, joining us to take this forward are Prateek Jain of PwC India and MS Money of Deloitte. MS Money, if I can begin with you, when it comes to rationalisation of tax rates, merging of tax slabs, reducing the number of slabs, there has been a discussion on this for the last 6 years. This has been a key industry ask. Do you think now, at a time when we're seeing a tremendous surge in GST revenues, the time has come to take the call on reducing the number of slabs from 4 to 3?
Oh, yes, I completely agree with you. There is no time like the present time because, as you said, the collections are robust. The GST legislation has settled down. Compliances have settled down, and it's been 7 years in the making. And now it's certainly the time to reduce the number of, slabs. Having said that, the number of slabs that we have even today are very high. But possibly what we have to bear in mind is that the reason why there are a number of slabs is because, being an indirect tax, the rate of tax has to be taken together with the consuming class. So products which are consumed by weaker sections of society need to be taxed at a lower rate, because any GST added to the price of the product immediately leads to an inflationary spiral. So keeping that in mind is why we have a 5, 12, 18 and 28, and we also have a compensation cess on top of the 28. Bringing them down is certainly necessary to 3 slabs. In addition, I would also be very happy to see some kind of a clarification to businesses that are impacted by the compensation cess, because this was originally intended to be for a limited period of time. It got extended because of the collection reduction during the pandemic period, and now it's there till 2026. But what happens after that? Businesses will need some time to plan. So together with the rate rationalization and in terms of reducing the slabs, it would also be good to see some kind of directional clarity on how long we are going to have the compensation cess, or whether some of the products which suffer compensation cess today can be brought down to the 18% slab.
All right. Let me also go to Prateek Jain of PwC India. Prateek, now, when it comes to revenue of states, now this is going to be a big concern. How can the GOM and authorities work on merging tax slabs, for example, 12 and 18%, without hurting the revenue of states? Because this is something that the GOM has sought clarity from different officials. Probably by the next date when the GOM will meet, this data would be put before the GOM. But how can a balancing act be made a reality?
It's going to be a difficult exercise, Parikshit. So 2-3 things which are important. One is the government has said that the revenue neutral rate in the GST was supposed to be around 15%. Right now, the effective rate is around 11 or thereabouts, 11.5% or so. That means the rate is much lower than the revenue neutral rate. That's point number one. Point number two, the GST collections, while it has gone up, I think last 2-3 months, it is perhaps a tad lower than what the expectation was. And the tax to GDP ratio in the country needs to be increased. Now, if you look at all of that and also look at the simplification need from 4 slabs to 3 slabs, definitely something needs to be done. I personally think that merging 5 and 12% into a single category, let's say 7-8% rate, perhaps is much more doable than merging 12 and 18 into a single category. The reason I say so is that because a large proportion of the current GST collection is at 18%. And if 18% reduces, then the revenue shortfall that you'll have will be very difficult to meet by increasing some of the products under 12% to that rate. So what I'm saying is that while both the possibilities do exist, that 5 and 12 get merged to, let's say, a single rate of 7 and 8, and or 12 and 18 could merge into a single rate of 15 and 16, I see the possibility on 5 and 12 merging together is perhaps an easier one. That also perhaps not as easy, because a lot of items at 5% are very, very critical, like medicines, like real estate, like restaurants. What will be the impact of that if it increases to 8%? So either which way, I think it'll be a very difficult, carefully balanced exercise, which has to be done. I think it will take some time. It's not going to happen in the next 2 months, 3 months, 4 months. It's going to be deliberated over a period of time. There are a lot of considerations which will go into it, and then let's see where it lands.
Right. Let me also go back to MS Money at this point. MS Money, now, when the GOM looks at the possibility of lowering GST on certain goods, which it considers now essential items, from 12% to 5%, such as bicycles, bottled water, pencils, stationery items, etc. There would also be a concern at the back of the mind that we need to tackle inflation and at the same time maybe increase the revenue share by hiking GST on certain non-essential items which are not used regularly by consumers across the country. So how can this balancing act be done? According to you, there are at least, as per the GOM, there are at least 100 items which were reviewed. Realistically speaking, how many items are there where the GST rate can actually be brought down, according to you?
Okay. So to my mind, there would be possibly 50% of the items in the 12% slab, which can be brought down. But we have to bear in mind that if the 5% rate goes up to even 7%, if there is a 2% increase in all the items of the 5% in order to have a lower slab, the inflationary effect of making any changes to the 5% slab would be very, very high. Because the 5% items are items of mass consumption. In terms of the volume of consumption, they are very, very, big. They may not be contributing very significantly to GST collections. So large part of the GST collections could be coming from the 18% slab and not from the 5% slab. But in terms of the absolute GDP value of the items which are kept in the 5%, even increasing them by 2 percentage points will have a significant impact on inflation. And that's something which we need to be very, very cautious about.
Right. Let me now go across to Prateek Jain once again. Prateek, how important is this from a compliance point of view? The industry has been seeking merging of slabs, a reduction of slabs. They've been saying possibly we need to move over 2-slab structure, but that's very, very difficult. At least move to a 3-slab structure. How does the current system of 4 slabs make compliance difficult for the industry? And how important is this from an ease of doing business point of view?
It is important. However, I would add that, look, multiple slabs is not only the feature which India has, right? I mean, many countries you'll see multiple slabs, and India is very peculiar, right? I mean, look at the sort of social strata, look at the distribution of income in India, and so on. Having said that, again, I think from ease of doing business perspective, it is ideal if 3 slabs come in. I think 2 slabs is very difficult. I think there'll be one luxury slab which will continue, and there'll be one standard and then one lower. And it is, as I said, from ease of doing business perspective, important, because more slabs you have, more classification disputes will have, right? So if you see the last GST Council meeting, there was clarification about namkeen and extruded products and so on. And these kind of things arise because there are always a difference of opinion between the tax authority and the taxpayer. And you either go for litigation or you go for advanced ruling and so on, which is not an ideal solution. So I think from an ease of doing business perspective, it is best if we move to 3 rate structure. But as it has been discussed in this sort of discussion, a lot of things to be looked at.
All right. And one more thing, if I could ask you, MS Money, and this is about reducing or exempting individual health insurance premiums from GST. Now, this is something that was asked earlier as well. It's a key industry ask. Do you expect some movement on this front?
I think this is something whose possibly time has come, keeping 2 parameters in mind. In terms of health insurance penetration, our penetration is among the lowest in the world, even among comparable countries. The second point is that as far as health insurance is concerned, we do not have a social security net the way many other countries have. So once we keep both these parameters in mind, exemption of health insurance premiums from GST is possibly a measure whose time has certainly come now. And this is something which now has to see the light of the day. There are a few other things to do with life policies and term cover, which maybe possibly can follow the health cover. But for health cover, it is necessary to do it. We could possibly have some safeguards over there in terms of the quantum of insurance, in terms of the quantum of premium, etc., with those caps. But this is certainly a change whose time has come. The sooner we get it done, the better it would be.
Okay. All right, Mr. Mani. Let me go across to Mr. Najib Shah, former chairman CBIC. He's also joining us. Mr. Shah, thank you very much for being patient with us here on CNBC-TV18. Let me begin by asking you about your recent articles with CNBC-TV18. You had written in 2021 that perhaps it's a good idea that the issue of rationalization of slabs has been deferred. Recently, you've written about how collapsing slabs is challenging and will not happen soon. Do you think, ahead of next month's meeting, is there any possibility that this merging of slabs can actually take place, or do you think this is going to take more time? Mr. Shah, can you hear me? Mr. Najib Shah, are you with us? All right, I think we've lost that connection there. We'll try and ask our producers to try and connect with him again. But Prateek Jain, of course, a lot of political pressure when it comes to rationalizing of slabs. What realistically are you expecting from the GOM meeting next month? Which are some of the doable areas, some of the clarifications that are needed from the government authorities?
Look, I think if we talk about rates per se, as you asked this question, I think there is a good chance that on insurance products, the rate will be reduced. And I think in addition to what Mani said, there is another logic to it, because healthcare services primarily are exempt from GST, and therefore, when you use insurance and you ultimately buy insurance to get to health services, there is a logic to say that rate should be reduced on that. So I'm expecting that there is a consensus on that. I'm also expecting that reports will be analyzed to say what will be the impact if 12 and 18 is merged together, what will be the impact in 5 and 12. I think there will be a larger consultation which will take place on this, and hopefully industry will get an opportunity to put a point of view across as well as we go along. Of course, as far as clarification is concerned, there are a bunch of clarifications that GST Council is working on, and some of them could come in the next one. Mostly tactical clarifications, but everybody is watching for what happens on the rate rationalization.
Prateek, I'm just going to request you to hold on for a moment. I'll try and go across to Mr. Najib Shah. He's been trying to connect with us for a while now. Mr. Shah, thank you very much. Can you hear me, sir?
Yes, I can.
Okay, Mr. Shah, thank you so much for being with us. Let me begin by asking you about your recent piece on CNBC-TV18.com, where you have written that collapsing slabs is challenging and will not happen soon. Do you think this is something that can actually happen, or this whole idea of reducing the number of slabs is going to take longer?
I think it's going to take longer. It's not going to be an easy task for the GOM because revenue considerations are always in the back of the mind. From the tax administration's point of view, I can assure you they'll be delighted if the number of rates are reduced. It's going to be a call which is entirely political. The tax administration will be delighted, as I mentioned. And the reason why I say it is challenging, take, for instance, your 12 and 18, where are you going to put the rates? At 15? Which means you're going to have a lot of upward movement as much as downward movement. And remember, 18 is your slab, which gives you the bulk of your revenue. So every such downward revision will have to be more than offset with the 12 to 15 upward movement. Revenue has always been a major consideration. Otherwise, we would have had a common slab. We would have had one slab. So I think it's going to take some time. The very fact that the GM is deliberating again very shortly, the very fact that no consensus could be reached on multiple issues would suggest that it is going to take some time. The sooner it happens, the better. I mean, that's the general tenor and tone of everybody from the industry. The sooner it happens, the better.
Right. I'd also like to ask you about certain other items. For example, hybrid vehicles, CNG vehicles. The industry has been divided, but there is an opinion that it is time to rationalize the GST and tax structure for such vehicles, also bring petroleum products in the ambit of GST. What's the road ahead?
You see, collapsing of rates, merging of rates would mean a definite revenue impact. I don't think any of the states or the center would be prepared for the petroleum products coming in within the GST fold. That's not going to happen simultaneously. That will take even more longer time because it's a huge revenue implication we're talking about, and almost the only source of revenue for the states independently. And Centralex's revenue for center is huge. So I don't think it's going to happen at all now. I mean, aviation fuel is an easy, low-hanging fruit. At least that can be brought in natural gas and aviation turbine fuel. It's not going to impact very many states.
Right. You've also spoken about the need to prune exemptions as they defeat the benefit of GST. Could you give us certain examples, sir? And do you expect this to come up in meetings in the next few months?
Oh, no, not at all. Not at all. Even as we're talking of health insurance, we're talking of exemption also simultaneously, where above a certain threshold you don't charge, certain types of health insurance you will not charge. You see, every exemption creates an arbitrage. It creates an issue of interpretation again, which is what we wanted to try and reduce. So an ideal tax policy will have minimum exemptions, but exemptions are a fact of life. We'll have to live with it. So the number of exemptions need to be constantly looked at, and if they do not fulfill the purpose for which they were given in the first place, they should be phased out.
All right, we've run out of time, but thank you very much, Mr. Shah, Mr. Mani, and Prateek for joining us on the program on News Center, giving us your views on the proposal for merging tax slabs, that is the 12% and 18% GST slab. Let's see what happens in the GOM meetings. We're going to take a short break at this point, but don't go anywhere. The news continues on the other side.
Done? Or it's just like a pause and refresh case here?
Again, in terms of market cycles, when you see the leaders of every cycle, then they go to sleep for a decade. So the leadership of 2000 to 2007, which you were earlier alluding to, was indeed commodities and infrastructure, power, real estate.
Right.
And then the excesses which happened in that period made them complete pariahs. So 4 years ago, we were on a show and Ramesh and I remember we would talk about PSUs and everyone was like sniggering, like, what's wrong with these chaps? But because the correction had been so steep that it's eventually an investor's job is about valuation. Like I said, the greatest Infosys may not give you the return, and the what so-called poorest PSU may give you the best return. So it was a mean reversion trade which happened, and of course all the right policy things happened for infrastructure and defense and railways and so on. So you go from being what I call terrible to bad is a rate of change, but you went from terrible to being good. So that rate of change is so dramatic that's what the markets have discounted.
And now maybe to great.
And now you're imagining it to be great. Some of them may make it, but most of them won't. So I would be very, very cautious in those kinds of places. And typically these are not high return areas. By definition, if you make 25% IRR in an infrastructure business, the cost to the consumer, which is the average public, is going to be too high. So your money made is really on leverage, and therefore the return on equity comes in that business. So, and people are shy of doing leverage after again the last cycle. And the flip of it, sorry to just complete, the leadership of the last cycle was all the high quality businesses in the last decade, which were all getting re-rated. Asian Paints, Page Industries, Kotak Bank,
consumers,
HDFC,
retail.
even, and including banks, because banks became 30% of the index. And you're seeing that getting corrected, that Kotak, HDFC haven't performed for the last 5 years. Again, great companies, but it's the excess of that which is now getting reverted back. And now they've become so hated that when will HDFC move? And there are memes on HDFC doing the round the way it was for ITC. And then you saw the way when ITC moved, it just doubled before anyone realized it.
You think...
so things like that tend to happen. I can't forecast what will happen in...
But you're very bullish on the financialization theme.
I am very bullish.
Hello and welcome to News Center. Moving on to India's skilling mission. In fact, the government has said that India's skilling mission must align with industry demands to be a success. That's the word coming in from the Ministry of Skill Development.